always. In essence, the price channel is not just an indicator, it's a framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Wait for confluence, confirm with structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like any financial instrument. The price channel.
Hello. It's risk management. Never risk more than 1 to 2% of your capital per trade. A trader who manages risk can survive a losing streak, and survival is victory in this business. Position sizing, stop-loss placement, and consistent execution matter more than any indicator. Professional traders think in terms of probabilities. Each trade is one event in a large sample size. Win or lose, it's just part of the process. Small blue diamond: macro and economic forces. Let's broaden the lens for a moment. Global markets are deeply interconnected. Gold responds to U.S. Treasury yields, real interest rates, and inflation expectations. Bitcoin responds to liquidity conditions, ETF flows, and regulatory developments. When the Federal Reserve signals rate cuts, liquidity increases, pushing risk assets like Bitcoin higher and weakening the dollar, often boosting gold at the same time. When central banks tighten, risk assets correct, and safe haven demand fluctuates. Watch key data events. CPI, Consumer Price Index, measures inflation. NFP, non-farm payrolls, shows job market strength. FOMC statements guide future monetary policy. Geopolitical tensions instantly move gold due to its safe haven status. Small blue diamond: building a trading plan. Every professional trader operates with a defined plan. Setup identification: example, bullish structure plus RSI divergence plus liquidity grab. Confirmation: candle close, volume spike, or break retest. Entry: limit order, market order, or scaling in. Risk control: stop loss below invalidation level. Exit strategy: partial profits, trailing stop, or fixed targets. Without a plan, you're just gambling with charts. Small blue diamond: motivation for traders. Trading is a journey of mastery, not a sprint. The goal isn't to win every trade, it's to make the right decisions over time. Each day in the market is a lesson. Every loss is tuition you pay to the market university. Remember, even the best traders lose often. What separates them is discipline. They don't chase trades, they let trades come to them. They don't react emotionally, they execute systematically. Stay consistent, keep improving, and understand that success compounds just like profits. Small blue diamond: continuous commentary, for live streams. Now, as we monitor gold's price action, notice how it's respecting the trend line support drawn from the previous week's lows. Each time price tests this level, liquidity builds up below a potential trap for impatient sellers. If buyers defend the zone again, we may see a breakout toward $2,440, possibly retesting previous liquidity highs. Switching to Bitcoin, we see a similar pattern. After multiple failed attempts to break $67,000, BTC is consolidating within a tight range. A breakout with increasing volume could trigger a strong upward impulse, while a rejection may send us back toward $63,000 support. This is the rhythm of the market: expansion, contraction, accumulation, distribution. It's a constant cycle, repeating across all time frames and all assets. Small blue diamond: closing thoughts. Trading is not about predicting, it's about adapting. The more flexible you are, the more successful you become. Gold and Bitcoin will continue to evolve, and so must you. Study every chart, every reaction, every mistake. Turn the market into your lifelong teacher. Remember, consistency beats intensity. Stay patient, stay analytical, and let the charts speak to you. The market rewards the prepared mind. And as always, trade smart, stay focused, and keep evolving. Bitcoin, BTCUSD, Extended Analytical Commentary. Welcome to the Bitcoin analysis. The BTCUSD market is known for its volatility, but the same principles of technical structure apply. Here, the dynamic price channel draws clear boundaries. For price behavior, every movement between the channel's top and bottom represents shifts in short-term sentiment, while the overall slope reveals the true market bias. Currently, Bitcoin is operating within a moderately ascending channel. The channel's lower boundary has provided multiple bounces confirmed by zigzag pivots. Each time a downward leg completes, and a green buy marker appears below the price, aligned with the rising channel, which reflects renewed buying strength. Traders focusing on those moments often capture the early stage of impulsive waves toward the upper boundary. Unlike gold, Bitcoin often expands its range more aggressively. The adaptive nature of this channel is what makes it suitable for such markets. During high volatility, the width increases to absorb new price extremes, ensuring that traders can still identify meaningful support and resistance areas. When analyzing Bitcoin, we must stay mindful of confirmation. A buy signal without alignment of the zigzag and channel slope can be a trap. But when all elements agree, a rising channel, a confirmed zigzag low, and a new signal from the indicator that setup holds a strong probability for continuation. In today's conditions, Bitcoin remains structurally bullish as long as it continues printing higher lows within the channel. The upper boundary acts as a dynamic resistance and reacts there can produce temporary corrections. Still, the bigger picture remains upward as long as the channel maintains its slope. Dow Jones, DJI, Extended Analytical Commentary. Now shifting focus to the Dow Jones Index. The DJI market structure reflects broader economic sentiment, yet technicals remain the foundation. The price channel here illustrates how institutional order flow respects recurring zones of liquidity. The lower band represents accumulation, while the upper band often reflects profit-taking or distribution. At present, the Dow is showing a stable upward channel with consistent zigzag confirmations along its path. Each dip into the lower boundary has triggered a potential buy signal, and each upward reach toward the upper edge has shown signs of gradual resistance. The trader's task is to synchronize entries with the channel's direction and momentum confirmations. The zigzag's role is critical. It reduces false signals by defining swing points more objectively. When the channel direction is upward and the zigzag confirms a higher low, the system gives a green buy marker below the price. This confluence has historically been one of the strongest signals for trend continuation in the Dow Jones. We continue to observe that as volatility increases, the channel expands to accommodate new price ranges. This responsiveness ensures traders never lose perspective of where true support and resistance lie. NASDAQ, Extended Analytical Commentary. Finally, the NASDAQ, a market driven heavily by technology stocks and rapid sentiment changes. The channel indicator performs exceptionally well here because of its adaptive structure. Right now, NASDAQ shows an upward channel, moderately steep, suggesting controlled bullish momentum. Each corrective phase is neatly captured by the zigzag indicator, marking potential support areas. When the price touches the lower channel boundary and a buy signal appears, the likelihood of an upward move increases, especially when accompanied by higher lows in the zigzag sequence. The best trades come when all confirmations align: an upward sloping channel, a zigzag pivot at the lower edge, and a buy marker confirmation. Those setups define precision entries in trending environments. For NASDAQ, patience and timing matter greatly. The indicator not only provides directional bias but also visual clarity. By following the channel boundaries and respecting the with zigzag confirmations, traders can anticipate the next probable movement before it happens. This structured method allows sustained focus and discipline, essential for long-term consistency. This document provides a master script template designed for live trading analysis streams. It is structured into modules that can be mixed, matched, and adapted in real time to create unique and engaging commentary for hours. The core strategy revolves around a dynamic price channel indicator combined with zigzag and buy/sell signals. Part 1, Master Script Template, Gold, ZUSD, the Dynamic Channel Strategy. Module 1, Stream Introduction and Initial Market Scan. Use this part to start your stream. Hello traders, and welcome to our live 24/7 analysis stream for Gold, ZUSD. My name is Max, and for the next few hours, we will be meticulously tracking the price action using our proprietary dynamic channel indicator. Our goal here is not just to find trading opportunities, but to understand the market structure in real time, focusing on high probability setups confirmed by multiple factors. Before we dive deep, let's take an initial look at the chart. The first thing we need to assess is the overall direction and health of the trend. We do this by observing the slope of our price channel. As we can see right now, the channel is angled choose one, clearly upward/clearly downward/relatively flat, which gives us our initial bias for the session. An upward slope suggests buying pressure is dominant, and we should primarily be looking for long opportunities. A downward slope indicates sellers are in control, pointing us towards short opportunities. If the channel is flat, it signals a period of consolidation or a ranging market, where we must be more cautious and trade between the boundaries. For those new to the channel, our strategy is built on the concept of confluence. We don't rely on a single signal. We wait for the channel, the zigzag structure, and our buy/sell markers to align, giving us a powerful confirmation before considering any entry. Stay tuned, engage in the chat with your questions, and let's navigate these markets together. Module 2, Real-Time Play-by-Play Analysis, the core of the stream. Repeat and vary the section continuously to describe live price action. Scenario A, price is moving within the channel. Currently, ZUSD is trading comfortably within the channel boundaries. The price is situated around the midline/upper half/lower half of the channel, indicating balanced pressure/strong momentum/a potential retracement. Notice how the price respects the channel's midline. It's acting as a dynamic support and resistance level. A clean break above the midline would suggest a continuation towards the upper band, while a rejection could send it back down to test the lower band. We are observing a rhythmic movement here. An impulsive wave followed by a corrective phase, all contained within our channel structure. This is healthy price action and confirms the validity of the current trend. Scenario B, price is approaching a channel boundary. Okay, traders, this is a key moment. The price is now approaching the lower boundary of our upward sloping channel. This is the first condition for a potential high probability buy setup. We are now on high alert, waiting for more confirmations. We see gold testing the upper band of the downward sloping channel. This is a critical resistance zone. We are now watching closely for a potential sell signal and a zigzag confirmation to form a lower high. Patience is key here. We do not enter just because the price has touched the boundary. We must wait for our confirmation signals to appear. Rushing into a trade here is purely gambling. We are here to trade with a statistical edge. Scenario C, a signal appears, confluence in action. And there we have it. A green buy signal has just printed right at the lower boundary of the channel. Let's check our other conditions. The channel slope is still firmly upwards. The zigzag indicator is in the process of forming a higher low, confirming that the pullback is likely over. This is a classic, high probability long setup according to our strategy. Confirmation. We have a red sell signal appearing near the upper band. The channel's direction is bearish, and the zigzag has just confirmed a lower high. This confluence of signals provides a strong indication that the price may now be ready to rotate back down towards the channel's midline or even the lower boundary. It's important to note the strength of the signal. It appeared right at the structural edge, in perfect alignment with the primary trend. These are the A-grade setups we patiently wait for. Scenario D, discussing targets and risk. For this potential long trade, the initial logical target would be the channel's midline. If momentum is strong, the secondary target would be the upper boundary of the channel. A stop loss should be placed strategically below the recent swing low and the channel's lower band to give the trade room to breathe while protecting our capital. With this short setup, our primary target is the midline, which often acts as a magnet for price. A more ambitious target would be a full rotation to the lower band. It's crucial to manage the trade actively as it develops. Module 3, Educational Deep Dive, use this during slower market periods. Let's take a moment to break down why this indicator is so powerful. The moving price channel is not just two random lines. It is mathematically calculated based on recent, significant swing highs and lows, effectively mapping out the true zones of dynamic support and resistance where institutional orders are likely placed. The zigzag indicator is our noise filter. In a volatile market like gold, there are countless minor fluctuations. The zigzag ignores this noise and only plots the significant turning points. This helps us to see the underlying market structure clearly. Are we making higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend? This is the foundation of trend analysis. Finally, the buy and sell markers. These are our trigger signals. They are programmed to appear only when specific momentum and price action criteria are met at these key structural points. When a buy signal appears at the bottom of a rising channel after the zigzag confirms a higher low, you have three layers of confirmation telling you the same story. That is the essence of confluence, and that is how we gain our edge. Module 4, Scenarios and Forward Outlook, what to watch for next. Breakout scenario. One thing we must always be prepared for is a channel breakout. If we see the price close with strong momentum outside the upper boundary, it could signal an acceleration of the uptrend. In that case, we would wait for a retest of the broken channel line, now acting as support, before looking for continuation trades. Reversal scenario. How would we spot a potential trend reversal? We would first see the channel begin to flatten out. Then, the price might break the lower boundary of a previously rising channel. The zigzag would fail to make a new higher high and instead form a lower high. These are all clues that the market dynamics are shifting from bullish to bearish. Consolidation scenario. If the price starts moving sideways and the channel becomes very narrow and flat, it means the market is in a state of equilibrium, consolidating and building energy for its next major move. During these periods, it's often best to stay patient and wait for a clear breakout in either direction. Module 5, Closing and Call to Action, use this periodically and at the end. That's a wrap on this segment of our analysis. Remember, trading is a marathon, not a sprint. Discipline, patience, and adherence to a proven strategy are what separate successful traders from the rest. If you are finding value in this live analysis and want to become part of our trading community, be sure to connect with us on our other platforms for more updates, trade ideas, and educational content. Join our Telegram for real-time alerts, t.me/MaxTrading11. Follow us on Instagram for daily insights, Instagram at MaxTrading111. And of course, make sure you are subscribed here on YouTube and have notifications turned on so you don't miss our next live session, YouTube at MaxTrading11. Thank you for tuning in. Trade safely, and I will see you in the next one. Part 2, Script Variation Examples for Other Assets. Variation 1, Bitcoin, BTCUSD, Introduction. Hello crypto traders, and welcome to the live Bitcoin analysis. Today, We're tracking TCUSD on the 15-minute chart using our dynamic channel system. Bitcoin's volatility is what makes it exciting, but it's also what makes a structured approach essential. Right now, the channel is showing a steep upward slope / sharp downward slope / tight consolidation range, indicating that significant momentum is building to the upside / pushing prices lower / coiling up for a breakout. Our strategy will be to wait for this volatility to align with our high probability signals at the key channel boundaries. TCUSD, Bitcoin, Bitcoin Live, Bitcoin Price, Bitcoin Technical Analysis, Bitcoin Trading, Crypto Trading, BTC Price Today, BTC Forecast, Bitcoin Chart Analysis, Bitcoin Price Prediction, BTC Scalping, BTC Strategy, Live Bitcoin Analysis, Bitcoin Day Trading, TCUSD Forecast, BTC Trading Strategy, Bitcoin Support and Resistance, Bitcoin Price Live, Crypto Analysis, Bitcoin Halving, BTC Macro Analysis, Bitcoin Trend, Bitcoin News, Bitcoin USD, Crypto Live Stream, Trading TCUSD, Bitcoin 2025. Outlook. Variation 2, Nasdaq, US 100, play-by-play commentary. Okay, team, let's focus on the Nasdaq 100. The index is currently testing the lower boundary of our rising channel, a key area of confluent support. The tech sector has shown resilience, and this pullback could present a prime buying opportunity. We have the buy signal printed. We have the zigzag confirming a higher low. This aligns perfectly with the overall bullish market structure. Gold, ZUSD, Extended Continuous Live Analysis. Welcome to this extended, continuous live analysis session for gold, ZUSD. In this detailed discussion, we'll explore the full price behavior of gold using a dynamic technical approach built around a moving price channel, zigzag confirmation, and signals of buying and selling pressure derived directly from market structure. As we begin observing the market, we notice that the channel is currently sloping upward, a clear indication that the dominant trend remains bullish. Every swing high and swing low aligns neatly with the channel's upper and lower boundaries. The lower boundary acts as a dynamic support level, while the upper boundary behaves as adaptive resistance. The zigzag indicator, positioned in synchronization with these swings, provides additional clarity by marking significant pivot points and filtering minor price noise. Right now, the price is hovering slightly above the channel's midline, a region that often acts as a magnet for price consolidation. When gold moves through the midline, traders should pay close attention to the slope direction. A rising midline with upward momentum suggests that the path of least resistance remains to the upside. Any temporary retracement toward the lower band could therefore present a new buying opportunity. In this session, we will keep focusing on the sequence of confirmations that appear throughout the indicator. The first level of confirmation comes from the direction of the price channel itself. As long as the channel continues to rise, it's generally favorable to align trades with the bullish bias. The second confirmation comes from the zigzag turning points, specifically when a downward retracement ends at a higher low, followed by a green buy marker appearing at the lower boundary. That combination represents structural alignment between momentum, trend, and reversal probability. Gold tends to move in waves, with periods of expansion followed by phases of contraction. These expansions and contractions create the rhythm of the market. The channel, being adaptive, automatically adjusts to this rhythm. During expansion, the width increases, reflecting higher volatility. During contraction, the channel narrows, showing reduced volatility. Understanding this rhythm helps traders anticipate when to stay patient and when to act decisively. Now, if we look deeper into recent price behavior, we can observe that the previous leg upward pushed gold toward a resistance zone defined by the upper channel edge. The zigzag confirmed that move with a clear peak, and since then, the market has entered a mild correction. This retracement is currently approaching the midline, and we're monitoring whether the buy signal will appear again near the lower edge. If it does, and the channel slope remains upward, that would reinforce the case for continuation toward new highs. At the same time, traders must remain alert for potential slope changes. If the channel starts to flatten, it could suggest exhaustion of the current trend. That doesn't immediately mean a full reversal, it could indicate a sideways phase before the next impulsive leg. Therefore, monitoring the zigzag in real time becomes essential, as it will show whether each retracement is shallow, bullish correction, or deep, potential shift in trend. When analyzing gold, the most effective way to manage risk is through observation of confluence. Confluence happens when multiple signals align: the channel slope direction, the zigzag conformation, and the buy marker all pointing the same way. This confluence doesn't just indicate a potential entry, it also provides insight into how strong or weak the market structure currently is. Bitcoin symbol TCUSD represents one of the most dynamic and unpredictable markets in modern financial history. Trading Bitcoin is not just about buying and selling, it is about understanding an entirely new form of global monetary behavior. Every tick, every candle, and every breakout on the chart tells a story of supply and demand, liquidity and sentiment, fear and euphoria. For traders, Bitcoin is both a challenge and an opportunity. It moves faster than traditional currencies, reacts instantly to global events, and constantly evolves as institutions, governments, and retail traders interact within this digital ecosystem. The TCUSD pair reflects the true battle between digital scarcity and fiat liquidity, between innovation and regulation, between decentralization and control. When we trade TCUSD, we are trading human behavior at scale, a mirror of how the world perceives value, risk, and trust in the digital age. Understanding the TCUSD pair. The TCUSD symbol simply represents Bitcoin quoted against the US dollar. BTC is the base currency, the quantity of Bitcoin you are buying or selling. USD is the quote currency, how much US dollar value each Bitcoin holds. For example, if TCUSD equals 68,000, that means one Bitcoin equals $68,000. As simple as that may sound, the forces driving this number are complex and multidimensional. The price of TCUSD is affected by market liquidity, how easily Bitcoin can be bought and sold. Demand and supply, driven by investor sentiment, halving cycles, and adoption. Global risk sentiment, whether investors prefer risk assets, like crypto, or safe havens, like gold. Monetary policy, interest rates, inflation data, and Federal Reserve announcements. Technological developments, Bitcoin upgrades, ETF approvals, and blockchain innovations. Each factor combines to create constant volatility, a trader's greatest opportunity and greatest danger. The nature of Bitcoin volatility. Volatility is the heartbeat of TCUSD. Where traditional currencies like Euros might move a fraction of a percent in a day, Bitcoin can rise or fall by 5 to 10% in a few hours. This volatility comes from a combination of limited supply, only 21 million coins will ever exist, high speculation, and low market maturity compared to Forex. For traders, volatility means potential profit. But it also means risk must be respected. A single impulsive trade without a stop loss can erase days or even weeks of progress. Professional traders see volatility not as chaos, but as rhythm, a pulse that can be understood and anticipated through structure, data, and patience. Technical analysis of TCUSD. At the heart of Bitcoin trading lies technical analysis, the study of price action and chart behavior. TCUSD respects technical patterns remarkably well because the market is decentralized and heavily influenced by trader psychology. 1. Trend analysis. The simplest way to understand TCUSD is through its trend. Higher highs and higher lows equals uptrend. Lower highs and lower lows equals downtrend. Bitcoin trends can last months or even years, especially during post-halving cycles. Recognizing the major trend direction on the weekly and daily charts is essential before entering trades on smaller time frames. 2. Support and resistance. Support is a price zone where demand outweighs supply. Resistance is where supply overwhelms demand. TCUSD respects key levels such as $30,000, $40,000, $50,000, $60,000, and $70,000, all major psychological areas. Breakouts above resistance often lead to strong continuation if backed by volume. Rejections near resistance create pullbacks or reversals. Traders learn to identify these zones through candle wicks, consolidation patterns, and volume spikes. 3 moving averages, MA, EMA. The 50 EMA and 200 EMA are powerful guides for TCUSD. When the 50 crosses above the 200, the market enters a golden cross, suggesting bullish continuation. When it falls below, a death cross can mark bearish cycles. 4 momentum indicators. RSI, Relative Strength Index, identifies overbought, greater than 70, or oversold, 30, conditions. MACD, Moving Average Convergence Divergence, helps track momentum shifts and divergences. Volume Profile and OBV, On Balance Volume, confirm whether moves are supported by real buying power. 5 chart patterns. Triangles, flags, wedges, and head and shoulders formations appear frequently in TCUSD trading. Each pattern represents consolidation and potential energy before the next move. Fundamental and macro analysis. While technicals explain the how, fundamentals explain the why. 1 Bitcoin halving. Every 4 years, the reward for mining Bitcoin blocks is cut in half. This reduces new supply, historically triggering major bullish cycles. Traders monitor halving dates closely, as they often precede long-term accumulation periods. 2 Institutional adoption. ETF approvals, corporate holdings, and institutional custody solutions have transformed Bitcoin into an accepted asset class. When major institutions buy, the TCUSD chart reflects confidence and legitimacy. 3 Monetary policy and inflation. Bitcoin is often viewed as a hedge against inflation. When central banks print more money or lower interest rates, investors turn to BTC as digital gold. Conversely, when the Federal Reserve raises rates, liquidity tightens, often leading to corrections. 4 Global events and regulation. News about crypto regulation, ETF decisions, or exchange security issues can cause rapid swings in TCUSD. Smart traders balance technical setups with awareness of the news cycle. Liquidity and market structure. Markets are driven by liquidity, the fuel behind every candle. When price approaches old highs, stop-loss orders accumulate above them. Smart money, large institutions, hunts those liquidity pools before moving price in the real direction. This is why false breakouts or liquidity grabs happen so frequently in Bitcoin. Understanding this helps traders avoid traps and align themselves with the real direction. Trading psychology. The single most important skill in TCUSD trading is not technical, it's psychological. Bitcoin's volatility can trigger extreme emotions, greed during rallies, fear during crashes. Maintaining discipline requires emotional balance. Key principles include patience, waiting for confirmation instead of chasing moves. Emotional neutrality, accepting losses calmly. Confidence, trusting your analysis and not overreacting to noise. Consistency, executing the same plan regardless of market conditions. Remember, the chart doesn't care about your feelings. The moment you let emotions decide, you lose control of probability. Risk management. TCUSD offers massive reward potential, but only with proper risk control. A trader should never risk more than 1 to 2% of total capital per trade. Use stop losses, calculate position size, and always define invalidation before entering. The most successful Bitcoin traders survive long enough to compound their edge. Survival is success. Day trading vs swing trading vs investing. Day trading focuses on intraday volatility, scalping 1M to 15M time frames. Swing trading captures multi-day trends using 4H to daily charts. Investing holds BTC for months or years, relying on macro analysis and having cycles. Each approach requires a different mindset. Day traders need speed and precision. Swing traders need patience and wider stops. Investors need conviction and the ability to ignore short-term noise. TCUSD correlations. Bitcoin doesn't move in isolation. It often correlates with Nasdaq and S&P 500. When tech stocks rise, Bitcoin often follows. Gold, ZUSD, both act as hedges, but Bitcoin has higher beta. DXY, US dollar index, a strong dollar usually pressures TCUSD. US 10Y yields. Falling yields often support crypto rallies. Professional traders monitor all these markets together to confirm directional bias. Economic events that move Bitcoin. Major economic data has immediate effects on TCUSD volatility. CPI, Consumer Price Index, reveals inflation. Higher numbers can create risk-off reactions. NFP, non-farm payrolls, strong jobs can strengthen USD, pressuring Bitcoin. FOMC meetings, Fed decisions on rates cause strong intraday swings. PPI, GDP, and unemployment reports all affect liquidity and sentiment. Smart traders mark these dates on their calendars, avoid overexposure during high-impact news, and use volatility spikes to enter or exit at premium levels. Common TCUSD trading strategies. Breakout strategy. Wait for consolidation near a resistance zone. Enter on candle close above with volume confirmation. Reversal strategy. Look for divergence between price and RSI at major levels. Combine with liquidity sweep for accuracy. Trend continuation. Use EMAs for confirmation, buy pullbacks in uptrend, short rallies in downtrend. Range trading. Identify horizontal support and resistance zones. Buy the bottom, sell the top, until breakout occurs. Each strategy must have a clear entry, stop, and target. Long-term perspective. In the long run, Bitcoin represents a shift in how humanity perceives money. Its supply is fixed, transparent, and decentralized, unlike fiat systems prone to inflation. For traders and investors alike, TCUSD will remain one of the most important and watched charts in global markets. Having cycles, institutional adoption, and technological progress will continue to define its trajectory. As global debt rises and monetary systems evolve, Bitcoin may serve as both speculative opportunity and financial revolution. Mindset for continuous growth. Trading TCUSD successfully requires lifelong learning. You must evolve with the market, adapt to new tools, technologies, and conditions. Review your trades weekly, analyze mistakes, and refine your plan. Always remember, the market rewards patience, discipline, and humility, not arrogance or haste. Whether you're scalping the 1-minute chart or analyzing the weekly trend, your job is to read the story that price tells. Educational disclaimer. This content is for educational purposes only. It is not financial advice or investment recommendation. Always perform your own research and manage your risk responsibly. Conclusion. Trading TCUSD is a journey, one that tests your patience, your intellect, and your emotional resilience. The market doesn't guarantee wealth, but it guarantees lessons. Every candle is a teacher, every mistake an opportunity to grow. Stay disciplined, trade smart, and let Bitcoin's rhythm guide you toward mastery. Whether the price is $20,000 or $100,000, the principles remain the same: analyze, manage risk, and evolve continuously. We can also talk about the energy of price momentum that drives each swing. As the price approaches the lower boundary of an ascending channel, we typically see a decrease in selling momentum and the emergence of accumulation signals. Once the buy marker appears, that's the early sign that institutional demand is stepping in again. The move that follows usually extends toward the midline, where short-term traders take partial profits, and long-term traders continue holding toward the upper boundary. Throughout this analysis, we will continue observing the interaction between the price and the key levels within the channel. Each time the price reacts to the lower boundary, we'll analyze how deep the zigzag pivot is compared to previous ones. Shallower pivots confirm strength, deeper ones warn of weakening demand. Similarly, we'll watch for divergences between price and momentum. If the price makes a new high but the zigzag shows a weaker structure, it could indicate potential exhaustion. The reason this method is so powerful is that it brings together structure, direction, and timing in one visual framework. The price channel tells us where we are, the zigzag tells us how the market breathes, and the buy/sell markers tell us when the rhythm aligns with opportunity. As this session progresses, imagine watching the candles unfold one by one, each candle interacting with the bands of the channel. Every pullback toward the lower edge is a test of the buyer's commitment. If the buyers defend that zone repeatedly, the market gains momentum for the next breakout. If not, the channel will start to lose slope, indicating that the balance between buyers and sellers is shifting. At this stage, gold's price action remains healthy. The sequence of higher lows continues, and the buy markers appear consistently at the right places. As long as this structure remains intact, the path toward the next resistance zone around the upper channel edge remains open. Traders can keep observing for confirmation candles on smaller time frames to refine their entries. As hours pass and the session evolves, we may see temporary consolidations, small pullbacks, and renewed impulses. That's the natural breathing of the market. The key is to maintain perspective, never fight the channel direction. When the indicator's slope remains positive, staying aligned with the trend provides the highest probability setups. Every retracement toward support is not a reason for panic, but a chance for strategic positioning. If at any point the channel begins to flatten or turn downward, then our bias must adapt. The advantage of this system is its objectivity. The structure tells us what the market is doing, not what we wish it would do. The transition from bullish to neutral or bearish doesn't happen suddenly, it's visible in the slope and confirmed by the zigzag structure. As we move forward, traders can continue applying this principle to every time frame from the 1-minute chart to the daily. The indicator adapts seamlessly. On higher time frames, the same logic applies. Rising channels show sustained strength, falling ones, sustained weakness. The beauty lies in simplicity, a structure that automatically recalibrates to market dynamics, giving traders clarity and discipline in every condition. And so, we continue watching gold evolve within its living structure, the price channel breathing with every swing, the zigzag confirming every shift, and the buy and sell markers telling the story of market psychology in real time. This is how we follow gold step by step, wave by wave, always guided by structure, patience, and confirmation. Introduction to Gold Trading, ZUSD. Gold has stood at the center of human value for thousands of years. Civilizations have fought for it, nations have measured wealth by it, and investors still turn to it during uncertainty. In modern markets, gold is represented by the trading symbol ZUSD, the price of 1 troy ounce of gold measured in US dollars. For traders, ZUSD is one of the most actively traded instruments on the planet. It combines the strength of a timeless asset with the volatility of global monetary flows. Every candle tells the story of inflation, interest rates, geopolitical tension, and investor emotion. Trading gold is not just a technical exercise, it's an art that requires understanding how human behavior reacts to global economics. The movement of gold reflects how confident or fearful the world feels about the stability of money itself. Understanding ZUSD and its structure. The symbol ZUSD represents XAU rightward arrow gold, measured per ounce. USD rightward arrow US dollar, the currency it's quoted in. If ZUSD equals 2350.00, that means 1 ounce of gold costs $2,350. Unlike currencies issued by governments, gold has intrinsic scarcity. It cannot be printed or created by policy. That's why traders watch its relationship with USD, because the dollar's strength or weakness often determines gold's direction. When the dollar falls, gold usually rises, as investors seek stability in hard assets. When the dollar strengthens, gold often corrects as liquidity moves back into fiat markets. The core drivers of gold prices: inflation and real interest rates. Gold thrives during inflationary periods. When the cost of living rises and the purchasing power of money declines, gold becomes a refuge. Real interest rates, nominal rate minus inflation, are one of the strongest indicators for XAUSD trends. Monetary policy and Federal Reserve decisions. When the U.S. Federal Reserve raises interest rates, gold typically falls because yield-bearing assets become more attractive. When the Fed cuts rates or signals a dovish stance, gold tends to rally. Geopolitical uncertainty. Wars, political tensions, and crises push investors towards safe haven assets like gold. During periods of instability, XAUSD can spike sharply as global capital seeks protection. Currency movements, DXY. The US dollar index, DXY, and gold have an inverse relationship. A falling DXY often precedes gold rallies, while a rising DXY can suppress gold's momentum. Central bank demand. Central banks around the world hold gold as part of their reserves. When they accumulate more, it signals confidence in gold's long-term stability. This institutional demand adds major support to the XAUSD chart. Technical structure and price behavior. Gold has one of the cleanest technical structures among all assets. It respects key support and resistance zones with precision, and its liquidity ensures consistent chart formations. 1. Trend recognition. Understanding the dominant trend is the foundation of gold trading. In an uptrend, gold forms higher highs and higher lows. In a downtrend, it forms lower highs and lower lows. Identifying this on higher time frames, daily and weekly, keeps traders aligned with institutional flow. 2 key levels of interest. Gold reacts strongly around historical zones 1800, 1900, 2000, 2100, 2300, round numbers that carry both psychological and technical weight. These levels often act as magnet zones for liquidity and large volume transactions. 3. Candlestick confirmation. Patterns like engulfing candles, pin bars, and inside bars often signal turning points. A bullish engulfing candle near a demand zone or a pin bar rejection off resistance can mark key reversals. 4. Moving averages and dynamic support. The 50 EMA and 200 EMA are crucial for identifying dynamic support and resistance. When price remains above these moving averages, the bias remains bullish. Crossing below often signals deeper corrections. 5. Fibonacci confluence. Fibonacci retracements, especially 38.2%, 50%, and 61.8%, align beautifully with gold's natural cycles. Many professional traders use them to pinpoint entry and exit zones during retracements. Please note this membership is simply a way to support the channel. There are no guaranteed signals, no exclusive content, and no trading advice promised. It's just for fans who truly love the channel and want to help it grow. This membership is purely for supporting the channel. No signals, no exclusive content promised. Your support really means the world to me. Thank you so much for being part of the MaxTrading family. XAUSD and global economics. Gold's behavior is tightly woven into the global economic cycle. When the economy expands, investors often favor equities. But when risk appetite fades due to inflation, recession fears, or geopolitical shocks, gold becomes the safe choice. 1. Inflation hedge. Historically, Gold holds value when fiat currencies lose purchasing power. When central banks inject liquidity, quantitative easing, investors hedge against devaluation by buying gold. 2. Interest rates and bond yields. Gold has no yield. When yields on government bonds rise, holding gold becomes less attractive. However, when yields fall, gold gains appeal as an alternative store of value. 3. Recession and crisis response. During financial crises like 2008 or 2020, gold surged as investors escaped collapsing markets. BTCUSD becomes a thermometer for global confidence. Market psychology behind gold trading. Trading gold successfully requires mastering human psychology. Because gold is emotionally charged, representing fear and greed, traders must control their reactions. Common psychological pitfalls include chasing breakouts without confirmation, holding losing trades out of hope, over-leveraging during news spikes, ignoring the bigger picture for short-term emotions. Emotional stability is what separates consistent traders from gamblers. Patience and discipline turn volatility into opportunity. Technical and fundamental synergy. While some traders rely purely on charts and others on news, the most successful gold traders merge both. A breakout from consolidation, confirmed by dovish Federal Reserve commentary, is far stronger than a technical setup alone. Always align technicals, the when, with fundamentals, the why. This synergy increases accuracy and reduces random losses. Trading styles in BTCUSD. 1. Scalping gold. Scalpers thrive on gold's intraday volatility. On the 1-minute or 5-minute charts, price often fluctuates by several dollars within minutes. Quick execution, tight stop losses, and high precision are mandatory. 2. Day trading. Day traders use 15M to 1H charts to capture short-term trends. They rely on intraday patterns, news reactions, and momentum indicators like RSI and MACD. Avoiding overexposure during U.S. session volatility is critical. 3. Swing trading. Swing traders hold trades for several days or weeks. They base entries on 4H or daily charts, looking for retracements to major support or resistance. Patience and proper lot sizing are essential for survival. 4. Position trading and investing. Long-term gold investors analyze monthly charts and macro trends. They often accumulate during deep pullbacks, expecting long-term appreciation as global debt rises and inflation persists. Liquidity and smart money concepts. Professional traders follow the smart money concept, understanding how large institutions move markets. Liquidity zones, areas above highs or below lows where stop-loss orders accumulate. Order blocks, institutional footprints before major impulsive moves. Fair value gaps, FVG imbalances that the market tends to fill later. When BTCUSD sweeps liquidity and returns to structure, it often marks a premium trading opportunity. Key indicators and tools. RSI, Relative Strength Index. Reveals momentum exhaustion and potential reversal zones. MACD. Identifies crossovers and momentum shifts. Divergences signal possible reversals. Bollinger Bands. Measure volatility expansion and contraction, signaling breakout potential. Volume Profile. Highlights price levels with heavy participation, ideal for support/resistance. ATR, Average True Range. Measures volatility to determine stop-loss distances realistically. Risk Management. Gold is volatile. One candle can move $10 to $20 within minutes. Without strict risk control, even experienced traders can face large drawdowns. Always define your risk per trade, 1 to 2% of capital. Use stop-loss orders, never rely on emotion. Set realistic risk-to-reward ratios, at least 1:2. Avoid revenge trading after losses. Use trailing stops to protect profit in trending markets. Consistent risk management turns randomness into long-term profitability. XAUSD during key trading sessions. Asian session, Tokyo, lower volatility, consolidation common. London session, volatility begins, liquidity builds. New York session, maximum movement, most major breakouts occur here. Overlap between London and New York is often when gold's largest intraday moves occur. Correlation with other assets. DXY, US dollar index inversely correlated with XAUSD. US 10Y yields, higher yields pressure gold, lower yields support it. Crude oil, inflationary link rising oil often supports gold indirectly. SPX/NASDAQ, during market panic, gold rallies as equities sell off. TCUSD, sometimes both rise as anti-fiat assets, but correlation changes seasonally. Understanding these correlations helps traders confirm bias and filter false signals. Gold's role in modern portfolios. Gold is both a trading instrument and a long-term wealth hedge. Institutional investors use it to balance exposure across inflationary and deflationary cycles. Even in the age of cryptocurrencies, gold maintains unmatched historical credibility. Unlike paper assets, it carries no counterparty risk, making it the ultimate insurance policy in a world of uncertainty. The importance of discipline. In gold trading, discipline is not optional, it's survival. Because XAUSD reacts sharply to news and liquidity imbalances, only disciplined execution prevents emotional trading. Follow your trading plan. Avoid random entries. Accept that losses are part of the process. Focus on probability, not perfection. A trader who loses small but consistently executes their plan will outperform emotional traders in the long run. Common mistakes to avoid. Trading without clear confirmation. Ignoring fundamentals and focusing only on technicals. Overtrading during low liquidity hours. Using oversized lot sizes to make up for losses. Forgetting to journal trades and review performance. Mastery comes from reflection. Studying your past trades is as important as executing new ones. The macro vision of gold. From a macroeconomic perspective, gold remains the ultimate gauge of confidence in fiat systems. When debt grows faster than productivity, when inflation erodes value, or when global uncertainty spikes, gold answers. The XAUSD chart is a visual reflection of the world's collective psychology about stability, trust, and money. In the coming years, central bank accumulation, geopolitical fragmentation, and declining real yields could push gold to new historical levels. Long-term forecast and cycles. Gold tends to move in cycles lasting 8 to 10 years, often influenced by monetary expansion phases, inflationary surges, debt crises, or currency devaluation events. Traders who align their strategies with these cycles enjoy exponential advantage. Educational purpose and responsibility. This video or live stream provides educational insights into trading gold. It's not financial advice or investment recommendation. Every trader should analyze independently and manage risk based on their financial condition. Part 1 Extended Technical Analysis Script, New Edition. Welcome back to this extended masterclass in trading, designed to complement and continue everything you have already learned so far. In this section, we will go deeper into the strategy you use, the indicator you rely on, and the logic behind each decision you make in the market. This chapter is specifically crafted as an addition to the previous material, helping you expand your understanding, sharpen your execution, and gain even more confidence in applying your personal trading framework. No matter how long you've been trading, 6 months or 6 years, every trader reaches a point where the strategy starts making sense at a deeper level. You begin to see patterns more clearly. You start recognizing market conditions without hesitation. You understand why a trade should be taken and why it should be avoided. And most importantly, you learn how to trust your system, without letting fear or greed influence your decisions. In this extended version, we are going to break down the exact strategy you use step by step. We will analyze the indicator you rely on, understand its behavior, its strengths, and how it interacts with different market environments. Whether you trade BTCUSD, Nasdaq, US 30, or Bitcoin, the principles behind this approach remain consistent. The goal is simple: to help you trade like a professional who knows exactly what to look for. Let's begin by reinforcing the foundation of your system. Every strategy that succeeds in the long run must be built on three pillars: clarity, consistency, and confirmation. Without clarity, your setup becomes random. Without consistency, your performance becomes unpredictable. And without confirmation, you expose yourself to unnecessary risk. Your strategy already incorporates these pillars, especially through the indicator you use. This indicator is not just a tool, it is the backbone of your decision-making. It filters noise, enhances precision, and allows you to identify momentum shifts that are invisible to the naked eye. Some traders rely on pure price action, others rely on moving averages, but your indicator gives you something more specific: directional probability. Directional probability is the core idea behind your system. It's not about predicting the exact future price, but rather identifying conditions that give you a logical advantage. When you understand how your indicator behaves, you stop guessing and start reacting intelligently to what the market is showing you. Let's build on that. Your strategy revolves around identifying three main elements: market direction, momentum confirmation, entry timing. These three components work together, and your indicator plays a major role in confirming them. Market direction tells you whether you should even consider buying or selling. Momentum confirmation tells you whether the move has power behind it. Entry timing tells you when exactly to execute without hesitation. The beauty of your strategy is that it simplifies the decision-making process. Many traders clutter their charts with too many tools, too many signals, too many indicators that contradict each other. Your approach removes all the unnecessary complexity. Instead, you focus on one powerful indicator that aligns with market structure and price behavior. Let's go deeper into market direction. Before entering any position, the very first question must always be, what is the trend doing right now? Not the trend from yesterday, not the trend from last week, the trend in the current session. Your indicator helps you determine this by providing real-time directional reading. When it shifts momentum, when it changes color, when it crosses a certain threshold, these signals help you understand whether the market is gaining bullish strength, losing it, or reversing into a bearish phase. Now, momentum confirmation. This is where many traders fail, because they enter too early or too late. Your indicator has a unique advantage here: it shows acceleration and deceleration in a visual and intuitive manner. When momentum grows, the signal becomes stronger. When momentum weakens, the signal becomes less reliable. You have learned that taking a trade without momentum is like driving a car without fuel. It might move a little, but it won't go far. Finally, entry timing. This is where precision matters the most. And this is also where your experience as a trader becomes invaluable. Your indicator gives you the early warning, but the chart gives you the actual trigger point. Candlestick rejections, breakouts, retests, they all become easier to interpret when aligned with the indicator's signal. The combination of these three elements forms the core structure of your strategy. But now let's add more layers, deeper analysis, and new explanations that enhance your understanding even further. Let's talk about market phases. Every chart moves through 4 repeating stages: accumulation, expansion, distribution, correction or reversal. Your indicator excels at detecting transitions between these phases. For example, during accumulation, the market moves slowly, volume is low, and price behavior is choppy. Your indicator will often show mixed signals or weak momentum. During expansion, momentum grows rapidly, signals become cleaner, and trends become stronger. This is where your strategy performs at its best. Distribution occurs when the market is preparing to reverse. Price may still be moving upward, but momentum begins to weaken. Your indicator will often give early warning signs here through divergence or by losing its directional strength. And finally, during correction or reversal, the indicator shifts clearly into the opposite direction. Understanding these phases helps you avoid unnecessary losses and choose higher quality entries. Now let's connect this with your personal trading style, especially your focus on gold, Nasdaq, Bitcoin, and indices. These instruments have unique characteristics. Gold is highly reactive to news and volatility spikes. Nasdaq has strong directional moves during New York session. Bitcoin behaves differently depending on liquidity and market sentiment. Your indicator helps stabilize the noise across all these assets by giving you a consistent framework to analyze momentum. One of the most important skills in trading is recognizing when not to trade. Your strategy protects you from bad conditions. If the indicator shows weak momentum, if price is stuck in a tight range, if volatility is low, you simply wait. The power of your system comes from discipline, not just signals. In this extended version, let's introduce a deeper explanation of entry zones. An entry zone is not an exact candle. It is a region where probability favors you. Your indicator helps outline these zones by showing you when momentum aligns with the overall direction. Within this zone, you wait for the candle confirmation, a break of structure, a rejection wick, a bullish engulfing, a bearish engulfing, or a clean breakout. You already know this, but here we expand the concept. The best entries happen when direction, momentum, and timing align simultaneously. This is the core of your system. Another enhancement in this extended part is risk filtering. Before taking any trade, ask yourself 3 questions. Is the direction clear? Is the momentum strong? Is the entry clean? If any one of these is missing, the trade becomes risky. If all 3 align, the trade becomes high probability. Your indicator helps answer the first 2 questions instantly, while chart reading answers the third. Let's also add a deeper breakdown of market timing. Not all hours are equal. You know from experience. Gold moves best during London and New York overlap. Nasdaq moves aggressively at New York Open. Bitcoin moves irregularly, but has strong impulse waves during volatility clusters. Your indicator reacts differently depending on the liquidity environment. The strongest signals appear during high volume periods. This is why timing matters. Another important addition is signal strength classification. Not all indicator signals are equal. There are strong signals, clear direction, strong momentum buildup. Medium signals acceptable but require caution. Weak signals avoid trading. Understanding this helps you adjust your lot size, entry confidence, and stop loss placement. Finally, let's expand on psychological resilience. A strategy is only as strong as the trader using it. Your indicator is powerful, but only when you trust it. Fear often causes traders to exit too early. Greed causes traders to enter too late. Discipline is built from repetition and confidence in your system. In this chapter, you are not just learning the strategy, you are mastering the mindset behind it. The more you trust your indicator, the more you eliminate emotional mistakes. This section serves as the first part of the extended material. In the next part, we will dive deeper into advanced concepts such as multi-timeframe alignment, divergence detection, volatility zones, session-specific behavior, dynamic stop-loss adaptation, and enhanced entry filtering techniques. Part 2, Advanced Trading Mastery, New Extended Script. In this extended chapter, we'll continue building upon your strategy and take it into more advanced territory. The goal of this section is not only to deepen your understanding but also to refine your execution so that every decision you make becomes more accurate, more confident, and more aligned with the market's true behavior. Let's begin by discussing multi-timeframe alignment, one of the most powerful elements you can add to any strategy. While your indicator provides strong directional and momentum signals on the primary time frame you trade, combining this with higher time frame structure creates a significant edge. The concept is simple. If the higher time frame agrees with your direction, your trades become safer and more reliable. If it disagrees, the market becomes unstable and the probability of all signals increases. For example, if you trade the 5-minute chart on Nasdaq or gold, you should always glance at the 15-minute or 1-hour chart to understand the bigger picture. Your indicator may show a short-term buy signal, but the higher time frame may be in a clear downtrend. This doesn't mean your buy signal is invalid, it simply means you need to be more careful, reduce your lot size, or wait for stronger confirmation. This brings us to another advanced concept, trend strength levels. Not all trends have equal power. Some trends are steady and clean, while others are weak and unstable. Your indicator can help identify the difference. When the indicator shows strong acceleration along with clean price action, the trend is powerful. but when the indicator becomes choppy or fluctuates between signals, the trend is weak. Understanding trend strength allows you to adjust your behavior dynamically. Strong trend rightward arrow, more confidence, normal lot size. Weak trend rightward arrow, caution, smaller lot size, or no trade. No trend rightward arrow, stay out completely. Next, let's explore divergence detection, a highly advanced technique that adds depth to your indicator-based system. Divergence occurs when price makes a new high or low, but your indicator does not confirm that movement. This suggests that the trend is losing power and may soon reverse. There are two main types. Bullish divergence, price makes a lower low, indicator makes a higher low. Bearish divergence, price makes a higher high, indicator makes a lower high. Divergence is not always a direct entry signal, but it is an early warning sign. It tells you that momentum behind the move is fading. If the indicator you use begins showing divergence, you should become more cautious, especially if market is at a major support or resistance zone. This leads us to volatility zones, another important layer of this extended strategy. Markets do not move with equal intensity all the time. Certain areas on the chart are naturally more explosive. These include session openings, news release windows, liquidity pools, supply and demand zones, key psychological levels. Your indicator reacts differently in each of these zones. For example, at session open, momentum may spike suddenly, creating powerful signals. During low volatility periods, signals may be slow or weak. Understand these zones help to avoid false entries and focus on high probability setups. One of the most valuable skills in professional trading is knowing where liquidity is likely to be taken. Markets often move toward areas where stop losses are clustered. Your indicator can help detect these moments through sudden momentum shifts. When liquidity sweeps occur, the indicator may give a brief, sharp spike, followed by a clean signal in the true direction. Learning to recognize these patterns significantly increases the accuracy of your entries. Let's go deeper into entry refinement. This is where your personal experience and intuition start to merge with the technical system. A refined entry is not only about entering at the right time, it is about avoiding entries that look tempting but lack true probability. To refine your entry even further, follow these steps. Look for indicator confirmation. Wait for a clean candle pattern, no long wicks against your direction. Check if the entry is happening at a logical price zone. Ensure that the trade has room to move, avoid entering directly into resistance or support. Make sure the market is not in a slowdown phase. Every time you apply these 5 layers together, your accuracy increases dramatically. Now let's expand into dynamic stop loss adaptation. Many traders lose not because their strategy is wrong but because their stop loss placement is inconsistent. Your system becomes even stronger when paired with intelligent stop loss management. Here are 3 adaptive methods you can use. 1. Structure-based stop loss. Place your stop below, 4 buys, or above, 4 sells, the most recent structural level. This prevents you from being stopped out prematurely by normal market noise. 2. Indicator-based stop loss. When your indicator shows strong momentum, the stop can be tighter because the move is expected to continue. When momentum is moderate, the stop should be more flexible. 3. Volatility-based stop loss. During high volatility, use wider stops to avoid random spikes. During calm markets, use tighter stops. Understanding how to adapt your stop loss based on the environment transforms your risk management completely. Next, let's explore market session behavior. You already know that gold becomes extremely active during London and New York overlap, while Nasdaq explodes in movement during New York session. But in this extended section, we go deeper into the psychology behind these movements. Markets move aggressively during these sessions because institutional volume enters, major orders are executed, liquidity becomes available, stop hunts occur, directional trends become clearer. Your indicator tends to perform at its best during these periods because momentum becomes more predictable. Trading outside these sessions may result in slower signals, more noise, and weaker trends. Another advanced topic, market manipulation patterns. Every trader eventually notices that the market sometimes moves in unexpected ways before returning to the planned direction. These fake moves are often liquidity grabs designed to trap impatient traders. Your indicator may show a temporary spike or color change during these moments, followed by sharp reversal into the retrend. Learning how to recognize these manipulation signatures is critical skill. Let's also add time-based probability to this extended material. Certain times within the hour are more likely to produce signal reversals or continuation patterns. For example, the first 5 minutes of each hour often produce impulsive movements. The last 5 minutes often produce traps or profit-taking. Mid-hour tends to stabilize and create cleaner setups. Your indicator reacts differently in these time windows, and knowing when to trust signals and when to ignore them is a major advantage that few traders understand. Now let's expand on scaling techniques. There are 2 types of scaling. Scaling in, entering multiple positions as confirmation grows. Scaling out, taking partial profits while keeping the trade open. Scaling should only be used when your indicator shows consistent momentum and the structure aligns with it. Scaling during choppy markets increases risk. Another critical topic, emotional detachment. The more you rely on your strategy, the less emotional your trading becomes. In this extended version, we reinforce the idea that the market does not reward emotion, it rewards discipline. Traders who rely on guesses or fear act inconsistently. Traders who rely on a proven step act with confidence. Your strategy, paired with your indicator, is designed to remove emotional decision-making. Once you recognize the signal, apply your confirmation steps, and execute with discipline, your mindset becomes more aligned with professional standards. Let's now dive into advanced trend continuation models. Not every trend moves in a straight line. Many trends pause, pull back, or retest key levels before continuing. Your indicator helps identify whether a pullback is healthy or whether the trend is breaking. When momentum weakens but remains positive, the pullback is likely temporary. When momentum drops sharply, a reversal may be coming. Next, let's expand on support and resistance evolution. Support and resistance levels are not fixed, they evolve with every new candle. Your indicator helps show when these levels are becoming stronger or weaker. When momentum builds near a key zone, the probability of breakout increases. When momentum fades, the probability of rejection increases. Finally, let's conclude this section with long-term system mastery. Your strategy is not designed to win every trade, no strategy can do that. It is designed to win consistently over time through disciplined execution, momentum confirmation, clear direction, refined entry timing, smart risk management, emotionally neutral decision making. The more you practice this system, the more natural it becomes. Over time, you will not only understand the indicator, you will internalize its behavior to the point where you can read momentum almost instinctively. Part 3: Professional Execution and Market Psychology, Extended Script. In this chapter, we will elevate your trading mindset and execution to a professional level. While many traders focus only on signals and entries, true mastery comes from understanding how the market behaves, why it behaves that way, and how to adapt your strategy to every scenario. This part is dedicated to developing that mastery. Let's begin with one of the most important concepts in trading. The market does not care about your opinion, only your reaction. Most traders lose because they approach the market emotionally. They enter because they feel the price will go up or down. But professional traders do not rely on feelings, they rely on data, structure, momentum, and consistency. Your strategy and indicator are designed to eliminate guesswork entirely. Push in market behavior and structural psychology. Price does not move randomly, it moves based on 3 fundamental forces: liquidity, momentum, institutional order flow. When you combine these 3 forces with your indicator and multi-time frame structure, you gain significant advantage over typical retail traders. Let's break each one down in detail. 1. Liquidity, the market's fuel. Liquidity is where money is waiting, stop losses, pending orders, and trap positions. Institutions need liquidity to enter and exit large positions. That's why the market often spots up to take stop losses, swoops a major high or low, creates a false breakout, then reverses into the real direction. Your indicator often shows sudden momentum changes during these moments. These spikes are not random, they are intentional liquidity grabs. Recognizing these moments allows you to avoid getting trapped and instead position yourself with the institutional move, not against it. 2. Momentum, the market's engine. Your indicator excels at measuring momentum. Momentum tells you when a move is strong, when a trend is weakening, when a reversal is forming, when a pullback is safe to enter. Momentum is the heartbeat of your system. During high momentum, entries become easier. Stops can be tighter. Moves develop quickly. During low momentum, entries become risky. Signals may be false. The market becomes choppy. Knowing when to trust the indicator and when to stay patient is what separates the professional trader from the frustrated trader. 3. Institutional order flow, the real trend. Many retail traders believe the market is controlled by supply and demand zones alone. While these zones matter, the more powerful concept is order flow, how volume, intention, liquidity, and momentum combine to create direction. Your strategy naturally aligns with institutional order flow because it follows momentum, not predictions. It waits for confirmation. It avoids reversals until structure truly shifts. This means you trade with the market, not against it. Pushpin: the power of patience in execution. One of the greatest lessons in trading is understanding that patience is a skill, not a personality trait. Patience means waiting for your zone, waiting for your indicator signal, waiting for structure confirmation, waiting for clean momentum, waiting for the right candle formation. Most traders lose not because their strategy is bad, but because they enter too early or too late. Your extended system eliminates this problem by giving you multiple layers of confirmation. Let's explore those layers deeper. High voltage entry mastery, the 7-layer confirmation model. This is a professional version of the entry system that top traders use. It perfectly matches and enhances your current strategy. Before entering any trade, confirm these 7 layers. Layer 1: higher time frame direction. Is the higher time frame supporting your direction? If yes, rightward arrow, strong entry. If no, rightward arrow, much higher risk. Layer 2: structure check. Is the market trending, consolidating, or reversing? Avoid entering inside messy consolidations. Layer 3: key zone validation. Are you near a support, resistance, order block, liquidity pool, S&D zone? Entering in the middle of nowhere is extremely risky. Layer 4: indicator confirmation. Your indicator signal must be clear, not lagging, not conflicting, supported by momentum. Layer 5: candle behavior. Look for clean bodies, small wicks, directional flow. Avoid signals formed by large opposite wick that indicate indecision. Layer 6: momentum continuity. Is momentum increasing or decreasing? Strong moves equals high probability. Weak moves equals danger. Layer 7: time-based factor. Some moments are ideal, others dangerous. Session opens rightward arrow explosive but clean. Mid-session rightward arrow stable. End of hour rightward arrow unpredictable. Pre-news rightward arrow extremely volatile. Follow the 7-layer model and your accuracy rises instantly. Fire advanced stop-loss engineering. Stop-loss placement is an art form. Smart traders do not place stops randomly, they place them where the market is least likely to hit them. Here are 3 advanced stop-loss concepts tailored to your system. 1. Logic stop-loss zones. Place your stop below structural lows for buys, above structural highs for sells. Never place it in the middle of noise. 2. Momentum-based stops. If momentum is strong, stops can be tight. If momentum is weak, stops must be wider. 3. Volatility-adjusted stops. During London/New York rightward arrow wider stops. Asian session rightward arrow tighter stops. News releases rightward arrow avoid trading. Implementing these rules drastically reduces unnecessary losses. Pushpin: professional risk control and scaling. No trader survives long-term without proper risk management. But professional traders use risk in a smart way, flexible but controlled. Here are advanced techniques designed to expand your profits safely. Scaling in. Only add positions when the trend is strong. Indicator confirms continuation. Momentum builds further. Scaling out. Take partial profits when price hits liquidity. Momentum weakens. Indicator shows divergence. Dynamic break-even. Move stop-loss to break-even only when structure supports it. Not earlier or you'll be stopped out unnecessarily. Rocket trend continuation vs trend exhaustion. Trends reveal themselves in 2 stages. 1. Continuation phase. This is where clean moves happen. Indicator signals are strongest. Pullbacks are small. Breakouts work well. 2. Exhaustion phase. Warning signs include divergence, fading momentum, wicks increasing, choppy price action, hesitation at SNR. Once you learn to distinguish these phases, your win rate increases dramatically. Crescent moon market rhythm and natural cycles. The market moves in a natural rhythm. Just like human breathing, inhale, exhale, pause. Price also moves in cycles. Expansion, strong movement. Pullback, temporary correction. Consolidation, compression. Breakout, new direction starts. Your indicator helps visualize these phases in real time. Mastering the rhythm of the market is one of the highest skills in trading. Brain psychology of elite traders. Professional trading is 80% psychology, 20% method. Your strategy and indicator give you the technical advantage, but your psychology ensures you use it properly. Here are psychological principles used by elite traders worldwide. Heavy check mark: they trade less but win more. Quality over quantity. Heavy check mark: they trust their system. They don't change strategy daily. Heavy check mark: they accept losses. Losses are part of the process, not a failure. Heavy check mark: they avoid revenge trading. Revenge trading destroys accounts faster than any technical mistake. Heavy check mark: they separate identity from results. A losing trade does not mean they are a bad trader, it means the market behaved differently. Heavy check mark: they stay calm under pressure. Calm traders last longer. Heavy check mark: they focus on long-term growth, not on daily wins. Glowing star: mastering your unique system, the MaxTrading method. Your system uniquely combines multi-time frame confirmation, indicator momentum reading, price action structure, session timing, liquidity awareness, disciplined risk. This combination creates a powerful, adaptive, and intelligent trading strategy. The more time you spend with this system, the more intuitive it becomes. Eventually, you won't just use the indicator. You'll understand the market through it. Advanced section: institutional trading, market structure, and strategy optimization. In this extended section, we will go deeper into the institutional logic behind price movements, allowing you to fully refine the strategy you are building. Every indicator, every confirmation, and every entry in your system must be supported by market structure, liquidity behavior, and volatility cycles. Without this foundation, you may have entries, but not accuracy. With it, your strategy becomes a complete framework. One of the most overlooked aspects in trading is understanding who actually moves the market. Large institutions, banks, funds, and algorithmic systems are the dominant force behind major moves. Their behavior creates predictable patterns, and learning to read these patterns will dramatically increase your confidence in the signals generated by your indicator. The indicator you use is not simply giving buy or sell signals. It is reflecting shifts in momentum, liquidity grabs, exhaustion points, and transition zones. When the indicator aligns with market structure, the probability of high-quality entry increases significantly. Let's break this down more clearly. 1. Market structure integration. Before taking any entry, the trader must identify the major components of structure. The current trend direction. The most recent break of structure, boss. Whether the market is accumulating, distributing, or trending. And where liquidity pools are located. Your indicator becomes exponentially more powerful when it is used only at key structural levels. For example, when the trend is bullish and price returns to a discount region, your indicator can help pinpoint the exact candle level or micro shift where momentum is returning to the upside. 2. Liquidity and manipulation awareness. Institutions often engineer liquidity sweeps before major moves. This is why beginners enter too early or too late to react to the manipulation, not the real move. Your strategy should always incorporate where liquidity is sitting, equal highs, equal lows. Where stop losses of retail traders are likely placed. Whether the indicator confirms momentum after a liquidity grab, not before it. This makes entries more accurate and reduces unnecessary losses. 3. Volatility cycles and timing. Your indicator reflects strength and momentum. Volatility determines how far price can move. A strong signal during low volatility often results in a weak push, while a moderate signal during high volatility can produce a clean and extended move. Recognizing these cycles allows you to use smaller stop losses during slow sessions, use wider targets during high volume sessions, and avoid unnecessary trades during choppy periods. This extended understanding makes your strategy dynamic and adaptable. 4. Confirmation system upgrade. Your confirmation checklist can follow a simple and repeatable structure. Market structure direction. Liquidity interaction. Indicator signal. Candle behavior. Volume or volatility alignment. Valid stop loss placement. Logical take profit targets. When all 7 conditions align, your entry is no longer based on emotion, but on a fully optimized strategy with it and logic. 5. Mental and emotional discipline. A 10-hour trading course is incomplete without addressing the psychological side. Most traders fail not because their strategy is weak, but because their discipline collapses under pressure. Using your indicator with consistency requires avoiding overtrading, respecting stop-loss placement, sticking to the session that suits your strategy, and controlling the urge to revenge trade. Your strategy becomes powerful when your mindset becomes calm, consistent, and rule-based. 6. Strategy evolution and optimization. As you continue using your custom indicator, you will notice patterns. Certain times of day produce stronger signals. Certain market conditions give clearer follow-through. Certain setups repeat with high accuracy. These patterns should be documented and integrated into your rulebook. A strategy is a living system. It improves as you observe, record, and refine. Confirmation 1. Price channel direction. I only trade in the direction of the channel. If the price channel is moving up, I focus on buys. If it's pointing down, I only look for sells. Confirmation 2, swing highs and swing lows. The indicator Hello everyone, and welcome back to MaxTrading's live stream. Today, we're going to dive deep into the market focusing on the 15-minute chart. This stream is all about learning and improving your trading skills. Everything you see here is live Bitcoin trading session. Gold, silver, and Bitcoin 15 is to filter out small, meaningless fluctuations and highlight the true swing highs and lows that define the market rhythm. How it works. Zigzag connects significant price points, peaks and troughs, ignoring minor moves that don't exceed a certain percentage threshold. The result is a clear visual representation of market structure. Zigzag highs, rightward arrow swing highs, potential resistance or trend exhaustion points. Zigzag lows, rightward arrow swing lows, potential support or accumulation points. By observing where these swing points align within the price channel, traders can pinpoint zones of high confluence, areas where multiple forms of confirmation align. 5. Combining price channel and zigzag. This combination is where true clarity begins. The price channel defines the environment, trend, boundaries, flow, and the zigzag defines the structure, swings, turns, impulses, directions. Step-by-step trading logic. Small blue diamond plus setup. Identify upward sloping channel. Wait for price to touch or approach the lower band. Check for a zigzag low forming near the band. If a buy signal appears from your system or indicate confirmation, that's your entry zone. Stop loss, below the zigzag low or below the lower channel band. Take profit. First target, the midline of the channel. Second target, the upper band. Small blue diamond bearish setup. Identify a downward sloping channel. Wait for price to rise to or near the upper band. Look for a zigzag high forming there. Confirm a sell signal. Stop loss, above the swing high or the upper band. Targets. First, midline. Second, lower band. 6. Multi-time frame confirmation, MTF analysis. Every market moves in layers: micro, macro, structural. If you only analyze one time frame, you're looking at one layer of a much larger story. The rule: trade in the direction of the higher time frame trend, enter on the lower time frame confirmation. Example: daily chart, upward channel, rightward arrow, long-term trend is bullish. 15-minute chart, price touches lower band plus zigzag low plus buy signal, rightward arrow, ideal short-term entry. This principle dramatically increases accuracy, because your trades align with the larger energy of the market. 7. Applying the strategy to Bitcoin, BTCUSD. Bitcoin, being highly volatile, responds beautifully to this method. The screenshot provided, BTCUSD, 15M, shows a text base. Observation: the price channel is upward sloping bullish structure. A zigzag low formed at the lower band, followed by a sharp rally to the upper band. As the rally peaked, a zigzag high appeared near the upper edge, producing a sell signal. Price retraced back toward midline, natural rebalancing. Interpretation: buyers dominated from the lower to the upper boundary, trend continuation. Sellers reacted from the upper zone, short-term correction. As long as price holds within the channel, structure remains valid. Only a confirmed break below the lower band would signal weakness. Practical setup. Entry: buy when zigzag low appears near lower band. SL, below the swing low. TP1, midline. TP2, upper channel. Risk management: maximum 2 to 3% per trade. Bitcoin tends to overshoot channels due to volatility, so allows a buffer, channel plus ATR-based padding. 8. Applying the strategy to gold, BTCUSD. Gold behaves differently. It's less volatile in crypto but very technical. The price channel plus zigzag method works exceptionally well because gold respects structure and reacts precisely to confluence zones. Example scenario: daily chart, channel slightly upward, rightward arrow, bullish environment. H1 chart, price approaches a lower channel with a zigzag low forming. RSI divergence appears, rightward arrow S confirmation. Buy signal triggers. Execution: entry, near lower band with confirmation. Stop loss, below previous zigzag low. Targets: midline, rightward arrow, upper band. Gold's movements are clean and rhythmic, respecting the channel boundaries yields highly consistent trades. 9. Interpreting false breakouts. Not every channel touch leads to reversal. Sometimes price peaks out with strong momentum. How to read it? If the breakout happens with volume and white candles, it's likely a trend continuation. If it breaks slightly outside the channel and then snaps back inside, that's a fake out, often followed by a strong move in the opposite direction. Zigzag confirmation. Zigzag helps you differentiate. If a new zigzag leg forms outside the channel, the trend may be changing. If not, it's probably a fake move. 10. Risk management and psychology. A powerful system means nothing without disciplined risk control. The key to consistency isn't accuracy, it's risk consistency. Core principles: 1 to 3% risk per trade, never more. Stop loss always active. Partial profits at first target, trail stop for extended moves. Don't chase entries, let the setup come to your zone. Avoid overtrading. More trades don't mean more profit. Psychologically, this strategy rewards patience and pattern recognition. Waiting for perfect confluence, channel plus zigzag plus signal, builds confidence and avoids emotional trading. Universal application, all pairs, all time frames. The beauty of this method lies in its universality. Works for forex, crypto, commodities, indices. Effective on 1-minute scalps, 15-minute intraday, 4H swing, or daily positions. It adapts naturally to volatility because it's structure-based, not indicator-based. Whenever you open a new chart, draw or activate your price channel. Observe zigzag highs/lows. Identify when price is near the upper or lower edge. Wait for confirmation, buy/sell signal. Plan your trade rightward arrow, execute rightward arrow, manage rightward arrow document. 12 example trading workflow. Let's summarize the step-by-step workflow used by professional traders. Open chart of desired pair, example TCUSD 15M. Or silver or gold. Identify trend direction by channel slope. Locate last zigzag swing point. Mark confluence zones, lower/upper band plus swing point. Wait for signal, buy/sell. Confirm with market structure, break of last high/low. Plan risk reward, minimum call to. Place order and manage trade systematically. Log trade and evaluate later. 13 advanced techniques. A channel recalibration. As new highs/lows form, periodically adjust the channel battery to align with the latest zigzag points. This keeps the model dynamic and relevant. B multi-channel layering. Use 2 channels, one from a higher time frame, macro structure, and one from the current time frame, micro structure. When both align, the setup strength multiplies. C. Integrating with other tools. Volume profile rightward arrow confirms strength of reactions near bands. Fibonacci retracements rightward arrow add further precision to entries. RSI or MACD divergences rightward arrow secondary filters for reversals. 14 common mistakes to avoid. Entering before zigzag confirmation forms. Ignoring higher time frame trend direction. Trading inside the middle of the channel without confluence. Moving stop loss emotionally instead of strategically. Forgetting that no system wins 100% probabilities, not guarantees. 15. The mindset of a channel trader. Success in trading this system requires a methodical mindset. You are not predicting, you are reacting. You respect the geometry of price. You understand that losses are part of the data, not personal failures. Over time, as you practice this system, you will begin to see the market flow naturally. The channel becomes your map, zigzag your compass, and your emotions your only real enemy. 16. Summary of core rules. Condition confirmation action stop loss target. Price near lower band plus zigzag low plus buy signal upward channel buy below zigzag low midline rightward arrow upper band. Price near upper band plus zigzag high plus L signal downward channel sell above zigzag high midline rightward arrow lower band. Channel flat sideways range trading only opposite band. Price break channel plus new zigzag leg trend shift wait for retest. 17 Final thoughts. Trading is about pattern recognition and discipline. The combination of the price channel, zigzag, and buy/sell signals gives you a high probability framework to identify clean entries, manage risk, and follow structure with confidence. Applied correctly, this approach works seamlessly across all markets and all time frames, from fast-moving crypto like TCUSD to steady instruments like gold, ZOSD. When mastered, this system turns chaos into clarity, transforming the market's randomness into readable rhythm, a true edge for any disciplined trader. TCUSD trading analysis, price channel strategy. Welcome everyone to this comprehensive and detailed analysis session on Bitcoin and also on gold versus the US dollar, TCUSD. Today, we'll be focusing on how to read, understand, and utilize the power of the price channel indicator in combination with other market confirmation tools such as zigzag structure, swing highs and swing lows, and buy/sell signals that appear across multiple time frames. The purpose of this analysis is not only to interpret what is happening on the chart right now, but also to deeply understand how the indicator behaves, how it filters market noise, and how traders can make better and more consistent decisions using visual cues that this tool provides. Let's begin with the foundation, the price channel. The price channel is constructed based on support and resistance levels, dynamically plotted as price evolves over time. When we see a bullish channel, meaning that the upper band and lower band are sloping upwards, it tells us that the overall market structure is trending positively. This is where buy positions become more favorable, especially when confirmed by a zigzag low and a buy signal generated below the midline of the channel. The zigzag indicator, in this case, acts as a filter. It helps us identify the key turning points, the swing highs and the swing lows that structure the rhythm of the market. When a zigzag low forms near the low channel band, and the price begins to climb, this becomes a zone of high confluence. If, at the same moment, a green buy label appears, that is the market telling us that the confluence between trend direction, support, and pattern reversal is aligning. When analyzing TCUSD and also ZOSD gold on the 15-minute time frame, we notice how the market oscillates within the price channel. The upward and downward movements between the red and blue zones visualize market cycles of accumulation and distribution. These patterns repeat themselves consistently, giving us multiple opportunities throughout the day to identify trades that align with the dominant trend. One critical aspect of this strategy is not to react emotionally to every signal but to wait for confirmation. For instance, when the channel is bullish but price temporarily dips into the lower half, Inexperienced traders often panic. However, when using this indicator correctly, those dips represent potential buying opportunities, especially when the zigzag identifies a new higher low and the channel direction remains intact. BTCUSD Trading Analysis, Price Channel Strategy. Welcome everyone to this in-depth and extended analysis on gold. Also can be used for others such as Bitcoin versus the US dollar, BTCUSD. In today's session, we are going to explore how to interpret the behavior of gold through the lens of a price channel indicator, combined with zigzag confirmation, swing high and swing low structures, and the recurring buy and sell signals that help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both a guide and a confirmation tool. Its ability to represent support and resistance in a flowing manner allows traders to align themselves with the dominant direction of the market while managing the natural fluctuations of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action in this environment tends to respect the lower boundary of the channel as dynamic support. Every touch and rejection near this zone represents a potential buy opportunity, particularly when the zigzag indicator plots a swing low at or near that same boundary. The moment a green buy signal appears, the confluence between the upward sloping channel, the swing low structure, and the signal confirmation reinforces a strong long bias. In bearish conditions, the logic reverses. The upper channel line acts as dynamic resistance, and each rejection near it, especially when accompanied by a red sell signal and a zigzag swing high, becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive moves that can appear chaotic to the untrained eye. However, the price channel indicator absorbs this chaos and redefines it as structured movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on the 15-minute time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times within a session. When the price is trending upward and remains within the top half of the channel, momentum is healthy. When it dips below the midpoint but remains above lower band, we interpret it as a correction within an ongoing bullish trend. Patience during these corrections is key. Traders who wish to sell often find themselves caught against the trend once the next zigzag low and green signal appear. The midline of the channel represents the equilibrium of price for buying and selling forces are balanced. When gold trades above it, the bullish energy dominates. Below it, bearish energy prevails. Watching how price behaves around this midline can often reveal the upcoming direction before any signal even appears. For example, a strong bounce from the midline followed by a bullish engulfing candle is a brief confirmation of trend resumption. The zigzag indicator acts as the structural backbone of his strategy. Each plotted swerve reflects a meaningful shift in market direction. A series of higher highs and higher lows signals continuation, while lower highs and lower lows indicate reversal. When we overlay these zigzag points onto the price channel, we gain context where the swings are developing inside the boundaries, breaking them, or rejecting them. One of the most consistent high probability scenarios occurs when gold prints a zigzag swing low exactly at the lower boundary of a rising channel. This is not random, it's a point of intersection between structure, support, and momentum. When green buy signal appears here, it's a visual alert that smart money may be stepping back in. Similarly, when a swing high forms at the top of ascending channel and the system prints a red sell signal, that alignment suggests exhaustion of upward momentum. Trading gold effectively with the method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary. Rather than chasing such moves, professional traders wait for a pullback into the channel. This is called the re-entry zone. Once price retests the upper band as new support and confirms with a zigzag low or bullish candle, the next wave usually follows, often stronger than the last. Across higher time frames such as the H1, H4, and daily, the same logic applies but with broader implications. The slope of the price channel becomes a macro guide. When the daily channel slopes upward, even intraday, pullbacks on the 15M or 1H charts become buying opportunities within the larger uptrend. This is called multi-time frame alignment, and it's one of the most effective techniques for consistent results. Gold liquidity and volatility mean that multiple swing setups occur daily. By following rhythm of the price channel, traders can filter out noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents a meaningful change, rather than a random candle fluctuation. This balance between flexibility and precision is what makes a combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it's essential to see multiple confirmations lining. 1 channel direction matches the trade bias. 2 zigzag pin to confirm a swing point in a direction. 3 the signal indicator displays a matching buy or sell label. 4 the candle pattern supports the entry, engulfing, pin bar, or rejection. 5 price interacts with a no structural level, support / resistance or midline. When 3 or more of these align, probability significantly increases. Risk management is the backbone of all trading. Even with perfect confirmations, market anomalies occur. A disciplined trade sets a stop loss below the last swing low in an uptrend or above the last swing high in a downtrend. This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built not by winning every trade but by protecting every decision. The channel system also highlights momentum shifts early. When slope begins to flatten, and price starts hovering around the midline without commitment, it's often a prelude to consolidation. During such periods, trade frequency should decrease, and focus should shift toward identifying breakout potential. Once the channel resumes the direction slope, the next trend wave begins. Understanding gold's behavior during news events is crucial. For instance, non-farm payrolls or CPI releases often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. A quick wick outside the boundary followed by a return inside the channel indicates a false breakout. An excellent opportunity for reversal entries when confirmed by zigzag and signal alignment. On larger scales, gold respects macro-technical zones derived from previous swing highs and lows. The zigzag indicator automatically plots these turning points, helping traders visualize the story of price evolution. When these levels coincide with channel boundaries, they act as magnets. Areas where liquidity pools exist and reversals frequently form. In bullish conditions, one can observe gold creating stair-step patterns within a channel each. Pullback going high low, each rally forming higher high. Traders can scale in at each retracement confirmed by the zigzag and bicycle combination. Conversely, in a bearish channel, each rally that fails to break above the midline become an opportunity to sell the lower high. This system also adds beautifully to scalping or swing trading. On longer timeframes, 1M, 5M, provide rapid signals for short-term moves, while on H4 or daily, it defines long-term trend direction. The principle remains constant, market reads waves, and the channel maps those waves visually. Beyond technical analysis, the psychological element remains key. Gold often tempts traders with sharp, sudden spikes. The indicator structured view prevents emotional overreaction. By waiting for confirmation instead of impulse entries, traders maintain composure and clarity essential to long-term success. When traders master the interpretation of this indicator, they gain not only snaps but also time awareness. Rhythm of the channel embodied with the measured timing zigzag swings. D is patience. It reminds the trader that price needs time to develop stronger and early disrupt synchronization with the market's natural flow. To summarize the golden principles of this method: trade in the direction of the channel low. Confirm entries with zigzag swings and signal colors. Use midline to judge momentum strength. Align multiple timeframes for precision. Apply disciplined risk management always. In essence, the price channel is not just an indicator, it's framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Wait for confluence, confirm with structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like any financial instrument. This channel visualizes that rhythm, turning uncertainty into a riddle app. By mastering this approach, you don't just follow price, you understand it. And that's what separates observation from mastery. Welcome everyone to this extended analysis on gold versus the US dollar, ZAWs. In today's session, we are going to explore how to interpret the behavior of gold through the lens of the price channel indicator, combined with zigzag confirmation, swing high and swing low structures, and the recurring buy and sell signals that help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolved as the market developed new data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both guide and confirmation tool. Its ability to represent support and resistance in a flowing manner allows traders to align themselves with the demand direction of the market while managing the natural fluctuations of volatility. When the channel looks upward, we categorize the trend as bullish. Price action in this environment tends to respect the lower boundary of the channel as dynamic support. Every touch and rejection near this zone represents a potential buy opportunity, particularly when the zigzag indicator blocks a swing low at or near that same boundary. The moment green buy signal appears, the confluence between the upward sloping channel, the swing low structure, and the signal confirmation reinforces a strong long bias. In bearish conditions, the logic reverses. The upper channel line acts as dynamic resistance, and each rejection near it, especially when accompanied by a red sell signal and a zigzag swing high, becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive moves that can appear chaotic to the untrained eye. However, the price channel indicator absorbs this chaos and redefines it as structured movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on the 15-minute time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times within a session. When the price is trading upward and remains within the top half of the channel, momentum is healthy. When it dips below the midpoint but remains above the lower band, we interpret it as aggression within an ongoing bullish trend. Patience during these corrections is key. Traders who rush to sell often find themselves caught against the trend once next zigzag and green signal appear. The midline of the channel represents the equilibrium of price where buying and selling forces are balanced. When gold trades above it, the bullish energy dominates, below it, bearish energy prevails. Watching how price behaves around this midline can often reveal the upcoming direction before any signal even appears. For example, strong bounce from the line followed by bullish engulfing kindles a pre-confirmation of trend resumption. The zigzag indicator acts as a structural backbone of the strategy. Each plotted swing reflects meaningful shift in market direction. A series of higher highs and higher lows signals continuation, while lower high and lower lows indicate reversal. When we overlay these zigzag points onto the price channel, we gain context whether the swing are developing inside boundaries, breaking them, or rejecting them. One of the most consistent high probability scenarios occurs when gold prints the zigzag swing low exactly at the lower boundary of a rising channel. This is not random, it's a point of intersection between structure, support, and momentum. When a green signal appears here, it's a visual alert that smart money may be stepping back in. Similarly, when a swing high forms at the top of a descending channel and the system prints a red sell signal, that alignment suggests exhaustion of upward momentum. Trading gold effectively with this method requires understanding how to react to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary. rather than chasing such moves. Professional traders wait for a pullback into the L. This is called the re-entry zone. Once price retest the upper band as news report and confirmed with a zigzag low or bullish handle, next wave usually follows often stronger than the last. Across higher time frames such as the H1, H4, and daily, the symbology applies but with broader implications. The slope of the price channel becomes the macro guide. When the daily channel slows upward, even intraday, pull back on the 50 or 1H charts become buying opportunities within the large uptrend. This is called multi-time frame alignment, and it's one of the most effective techniques for consistent results. Gold liquidity and volatility mean that multiple swing setups occur quickly. By following the rhythm of the price channel, traders can filter out noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents a meaningful change, rather than a random candle fluctuation. This balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it's essential to see multiple confirmations aligning. One channel direction matches trade bias. Two zigzag prints a confirming swing point in that direction. Through the signal indicator displays a matching buy or sell label. For the candle pair supports the entry, engulfing, pin bar, or rejection. Buy price directs with a known structural level, support/resistance or midline. When three or more of these align, probability significantly increases. Risk management is the backbone of all trading. Even with perfect confirmations, market anomalies occur. A swing trader sets a stop loss below the last swing low in uptrend or the last swing high in a downtrend. This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built not by winning every trade but by predicting every decision. The channel system also highlights momentum shifts early. When the slope begins to flatten, and price starts hovering around the midline without commitment, it's often a prelude to consolidation. During set periods, trade frequency should decrease, and focus should shift toward identifying break cap potential. Once the channel resumes its original slope, the next trend wave begins. Understanding bullish behavior during news events is crucial. For instance, non-farm payrolls or CPI releases often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. A quick wick outside battle followed by return inside the channel indicates a false breakout, an excellent opportunity for reversal entry when confirmed by zigzag and signal alignment. On larger scales, gold respect macro-technical zones derived from previous swing highs and lows. The zigzag indicator automatically plots these trend points, helping traders visualize the story of price evolution. When these levels coincide with the channel boundaries, they act as magnets, areas where liquidity pools and reversal frequently form. In bullish conditions, one can observe gold creating stair-step pattern with a each pullback forming a higher low, each rally forming a higher high. Traders can scale in at each reversement in from both the zigzag and signal combination. Conversely, in a bearish channel, each rally that helps break the midline becomes an opportunity to sell the lower high. This system also adapts beautifully to scalping or swing trading. On lower time frames, 1M, IM, it provides rapid signals for short-term moves, while on H4 or daily, it defines long-term trend direction. The principle remains constant. The market breaks in waves, and the NS is ways to beyond technical analysis. The zone frequency could all stress sucks. The indicator structure of zone of rank, i.e., high and net velocities, trade main for current trades long success, and trades sustain and seeker. They not lectures, but all the time with the ripple channel component with the med time of zigzag wins. These additions, it reminds trader that they need time to best structure. Two, early disruption with the market natural low. This is golden principles of the method. In the rate of the slope. Confirm trees with zigzag twists and signals. Use the midline to and strength. Align with top frames for resistance. Hold slim risk management always. Instance, price channel is not just an indicator to framework or market structure. Discipline and time. Every credit political bridge, logic and same. Paper confluence, converge, and execute patience. Gold behavior is cyclical and risk, just like any financial instrument. Price channel visualizes that rhythm, turning uncertainty into real map. By entering the brush, you don't just follow price, you understand it. And it's what separates observation from mastery. Welcome everyone to this in-depth extended analysis on gold versus the US dollar. In today's session, we are going to explore how to interpret the behavior of gold through the lens of the price channel indicator. Combined with zigzag confirmation, swing high and swing low structures, and the recurring buy and sell signals that help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as market development data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both a guide and a confirmation tool. Its ability to represent support and resistance in flowing manner allows traders to align themselves with the dominant direction of the market while managing the natural fluctuating of volatility. When channel slopes upward, we categorize the trend as bullish. Price action in this environment tends to reset the lower boundary of the channel as dynamic support. Every touch and reaction near system represents a potential buy opportunity, particularly when the zigzag indicator plots a swing low or near that same boundary. The long green signal appears, confluence between the upward sloping channel, the swing low structure, and the signal confirmation reinforces a strong long bias. In bearish conditions, the logic reverses. The upper channel line acts as dynamic resistance, and each reaction near it, especially when accompanied by red sell signal and a zigzag swing high, become a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive boosts that can appear chaotic to the untrained eye. However, the price channel indicator absorbs this chaos and redefines it as structured movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on a 15-minute time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times within a session. When price is trending upward and remain within the top half of the channel, momentum is healthy. When it dips below the midpoint but remains above the lower band, we interpret it as a correction with an ongoing bullish trend. Patience during these correction is key. Traders who rush to sell often find themselves caught against the trend once the next zigzag low and green signal appear. The midline of the channel represents equilibrium. Price or buying and selling forces are balanced. When gold trades above it, the blood energy dominates, below it, bearish energy rails. Watching how price behaves around the midline can often reveal the upcoming direction before any signal even appears. For example, a straw bounce from the midline followed by bullish engulfing candle is a confirmation of trend reduction. The zigzag indicator acts as the structural backbone of this strategy. Each putted swing reflects a meaningful shift in market direction. A series of higher highs and higher lows signals continuation, while lower highs and lower low indicate reversal. When we overlay the zigzag point onto the price channel, we gain context further. The swings are developing inside the boundaries, breaking them, or checking them. One of the most consistent probability scenarios occurs when gold prints a zigzag swing low exactly at the lower boundary of a rising channel. This is not random as a point of intersection between structure, support, and momentum. When a clean price signal appears here, it's a visual alert that smart money may be stepping back in. Similarly, when a swing high forms at the top of the static channel and sits up in the sell signal, that alone suggests exhaustion of upward momentum. Trading gold effectively with SPAD requires understanding how price reacts to challenges. During strong impulsive rallies, price may temporarily break above the upper boundary. Rather than chasing such moves, professional traders wait for a pullback into the channel. This is called the re-entry zone. Once price retests the upper band as news and confirms with zigzag lower bullish candle, that wave usually follows often stronger than the last. Across higher time frames such as H1, H4, and A, the same logic applies with broader implications. The slope of price channel becomes macro guide. When the daily channel slopes upward, even intraday, pullbacks on the 15 or 1H charts become buying opportunities within a larger uptrend. This is called multi-time frame alignment, and it's one of the most effective techniques for consistent results. Gold's liquidity and volatility mean that multiple swings set up bigger daily. By following the rim of the price channel, traders can filter out noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents a meaningful gain, rather than random candle fluctuation. This balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it's essential to see multiple confirmations lining. One channel direction matches the trade bias. 2 zigzag prints a confirming swing point in that direction. 3 the symbol indicator displays a match buy or sell label. 4 the candle pattern supports the entry, engulfing, pin bar, or rejection. 5 price interact with own structural level, support/resistance or midline. When 3 or more of these align, probability significantly increases. Risk management is the backbone of all trading. Even for confirmations, market anomalies occur. Each disciplined trader sets a stop loss below the last swing low in an uptrend or above the last swing high in a downtrend. This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built not by winning every trade but by protecting every decision. The channel system also highlights momentum shifts early. When the slope begins to flatten and price starts hovering around the midline without commitment, it's often a prelude to consolidation. During such periods, trade frequency should decrease and focus should shift to identifying breakout potential. Once the channel resumes a directional slope, the next trend wave begins. Understanding gold's behavior during news events is crucial. For instance, non-farm payrolls or CPI releases often trigger temporary spikes. The price channel visualizes how far the spikes deviate from equilibrium. Quick outside bouncer followed by return inside the channel indicates a false breakout, an excellent opportunity for reversal entries when confirmed by zigzag and signal alignment. On larger scales, gold respects macro-technical zones derived from previous swing highs and lows. The zigzag indicator automatically plots these turn points, helping traders visualize the story of price evolution. When these levels coincide with channel boundaries, they act as magnets. Areas where liquidity pools exist and results frequently form. In bullish conditions, one can observe gold creating stair-step patterns within a channel each. Pullback forming a higher low, rally forming a higher high. Traders can scale in at each retracement confirmed by the zigzag and buy signal combination. Conversely, in burst channel, each rally that fails to break above the midline becomes an opportunity to sell the lower high. This style also adapts beautifully to scalping or swing trading. On lower time frames, 1M, 5M, it provides rapid signals for short-term moves, while on each 4 or daily, defines long-term trend direction. The principle remains constant, the market breathes in waves, and the channel maps those waves visually. Without technical analysis, the psychological element remains key. Gold often taps traders with sharp, sudden spikes. The indicator's structure view prevent emotional overreaction. By waiting for confirmation instead of impulse entries, traders maintain composure and clarity essential traits in long-term success. When traders master the interpretation of this indicator, they gain not only signal accuracy but also time awareness. The rhythm of the channel combined with measured timing of zigzag swings teaches patience. It reminds the trader that price needs time to develop structure. Acting 2. Early disrupt synchronization with market's natural flow. To summarize the golden principles of this method, trade in the direction of channel slope. Confirm entries, zigzag swings, and signal colors. Use midline to judge momentum strength. Align multiple time frames for precision. About disciplined risk management always. In essence, the price channel is not just an indicator, it's a framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, logic remains the same. Wait for confluence, confirm with structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like a financial instrument. Price channel visualizes that rhythm, turning uncertainty into a readable map. By mastering this approach, you don't just follow price, you understand it. And that's what separates observation from mastery. Welcome everyone to the in-depth and extended analysis on gold versus the US dollar, ZOS. In today's session, we are going to explore how to interpret the behavior of gold through the lens of the price channel indicator, combined with zigzag confirmation, swing high and swing low structures, and the recurring buy and sell signal that help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both a guide and confirmation tool. Its ability to represent support and resistance in flowing manner allows traders to align themselves with the dominant direction of the market while managing natural fluctuations of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action in this environment tends to respect lower boundary of the channel as dynamic support. Every touch and injection near this zone represents a potential buy opportunity, particularly when the zigzag indicator crosses swing low at or near that same boundary. The moment a green buy signal appears, the confluence between the upward sloping channel, the swing low structure, and the signal confirmation reinforces a strong long bias. In bearish condition, the logic reverses. The upper channel line acts as dynamic resistance, and each injection near it especially accompanied by a sell signal and a zigzag swing high becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive moves that can be chaotic to the untrained eye. However, the price channel indicator absorbs this chaos and redefines a structured movement. Upper and lower bands effectively translate uncertainty into middle boundaries. Let's have this place on a 15-minute time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times within a session. When the price is trading upper end, within top of the channel, momentum is heavy. When it's below but remains above the lower band, we interpret as a correction within ongoing bullish trend. Patience during these corrections is key. Case values on the Slovakian triple sets, Zao and Silver. The Vindicate represents the equilibrium of price where buying and selling forces are balanced. When gold trades above it, the bullish energy dominates. Below it, bearish energy prevails. Watching how price behaves rather than cannot reveal upcoming direction before any signal even appears. For example, strong bounce from midline followed by bullish engulf candle is a pre-confirmation of trend resumption. The zigzag indicator acts as the structural backbone of this strategy. Each bloody swing flex a meaningful shift in market direction. A series of higher highs and higher lows signal continuation, while lower highs and lower lows indicate reversal. When we overlay these zigzag point onto the price channel, we gain context whether the swing are developing inside the boundaries, breaking them, or rejecting them. One of the most consistent high probability scenarios occurs when gold presses zigzag swing low exactly at the lower boundary of rising channel. This is not rendered at the point of intersection between structure, support, and momentum. When green high signal appears here, signal alert more time stepping back in. Similarly, when swing high forms at the top of a descending channel and the principal red signal, it alarms suggests exhaustion of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the outer boundary. Rather than chasing such moves, professional traders wait for a pullback into the channel. This is called a re-entry zone. Once price retests the upper end as new support and confirms with a zigzag low or bullish handle, the next wave usually follow off stronger than last. Across higher time frames such as H1, H4, and Delhi, same logic applies but with broader implications. The slope of price channel becomes macro high. When the channel low support, intraday, pullbacks on the fin or 1 inch stream buying opportunities when larger uptrend. This is all. The temporal element is one of the most effective techniques for consistent results. Gold liquidity and volatility mean that multiple swings up to daily. By following the rhythm of the price channel, trader can filter out noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents meaningful change rather than random and fluctuation. This balance between plus sell averages is to powerful. Now it's beyond approach layers. 15 legit, still more confirmation signing. One chance to command is 3 days. 2 that prints current swing point in that direction. 3 signal indicator display of matching bar or delb. 4 the kill hairs or the injury, engulfing, and bar, or rejection. 5 price interacts with own structural level, support/resistance or midline. When 3 or more of these align, probability significantly increases. Risk management is a backbone of all trading. Even with perfect combinations, market anomalies occur. A disciplined trader tests stop loss below the last swing low in an uptrend or above the last swing high in a downtrend. This approach not only preserves capital but also assures emotional control during unexpected market spots. Remember, consistency is built up by winning every trade but predicting every decision. Schultz also highlights momentum shifts early. The is flattened and right arts. Hurry around the midline document is often a prelude to consolidation. During such periods, trade frequency should decrease, and focus should shift toward identifying breakout potential. Once the channel resumes a directional slope, the next trend may begin. Understanding gold's behavior during news events is crucial. For instance, non-farm payrolls or CPI releases often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. A quick wick outside the boundary followed by return inside channel indicates a false workout, an excellent opportunity for reversal entries when confirmed by zigzag and signal alignment. On larger scales, gold respects technical zones derived from previous highs and lows. The zigzag indicator automatically applies these turning points, helping traders visualize the story of price evolution. When these levels coincide with the channel boundaries, they act as magnets. Area where liquidity will exist in reversals frequently form. In bullish condition, one can circle creating stair-step pattern within the channel each. Pullback forming higher low, each rally forming a higher high. Trader can scale in each retracement confirmed by the zigzag and bicycle combination. Conversely, in bearish channel, rally that fails to break above the midline comes an opportunity to sell the lower high. This system also adapts to scalping or swing trading. On lower time frames, 1M, 5M, it plots rapid signals for short-term moves, while on H4 daily, it defines long-term trend direction. The principle remains constant, the market reads in waves, and the channel mass, those waves visually. Beyond technical analysis, the psychological element remains key. Gold often tempts traders with sharp, sudden spikes. The indicator structure view prevents emotional overreaction. By waiting for confirmation instead of impulse entries, traders maintain composure and clarity essential traits in long-term success. When traders mess with the interpretation of this indicator, they gain not only signal accuracy but also time awareness. The rhythm of the channel combined with measured timing of zigzag swings teaches patience. It reminds the trader that price needs time to develop structure. Act 2. Early disrupt synchronization with the market's natural flow. To summarize the golden principles of this method, trade in the direction of channel slope. Confirm entries of zigzag swings and signal colors. Use the midline to judge momentum strength. Align multiple time frames for precision. Apply disciplined risk management always. In essence, the price channel is not just an indicator, it's a framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Wait for confluence, confirm with structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like any financial instrument. The price channel visualizes that rhythm, turning uncertainty into a regional map. By mastering this approach, you don't just follow price, you understand it. And that's what separates observation from mastery. Welcome everyone to this in-depth and extended analysis on gold versus the US dollar, ZOSD. In today's session, we are going to explore how to interpret the behavior of gold through the lens of price channel indicator, combined with zigzag confirmation, swing high and swing low triggers, and the recurring buy and sell signals that help identify momentum reversal and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both a guide and a confirmation tool. Its ability to represent support and resistance in a flowing manner allows traders to align themselves with the dominant direction of the market while managing the natural fluctuations of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action in the environment tends to respect lower boundary of channel as dynamic support. Every switch and rejection near the zone present potential for opportunity, particularly when the 6 indicator plots below it or near that same boundary. The moment green bar signal appears, the congruence between the upward sloping channel, swing low structure, and the signal confirmation reinforces a strong long bias. In bearish conditions, the logic reverses. The upper channel line acts as diameter resistant, and each rejection near it, especially when coveted by red sell signal and a 6-6 swing high, becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates a large impulsive move that can appear chaotic to the untrained eye. However, price channel indicator asserts chaos and refines structured movement. The upper and lower bands effectively translate us into readable boundaries. Let's examine how this plays out on the 15-minute time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times within a session. When the price is trading upward and remains within the top half of the channel, momentum is helping. When it is below the midpoint but remains above the lower band, we interpret it as a correction within an ongoing bullish trend. Patience during these corrections is key. Traders who rush to sell often find themselves caught against the trend once the next zigzag low and green signal appear. The midline of the channel represents the equilibrium of price where buying and selling forces are balanced. When gold trades above it, the bullish energy dominates. Below it, bearish energy prevails. What can help us? The haze around this midline can often reveal the upcoming direction before any signal even appears. For example, a strong bounce from the midline followed by a bullish engulfing candle is a pre-confirmation of trend resumption. The zigzag indicator acts as a structural backbone of strategy. Each plotted swing reflects a meaningful shift in market direction. A series of higher highs and higher low signals continuation, while lower highs and lower lows indicate reversal. When we overlay these zigzag points onto the price channel, we gain context where the swings are developing inside the boundaries, breaking them, or rejecting. One of the most consistent probability scenarios occurs when gold presses zigzag swing low exactly at the lower boundary of a rising channel. This is not random, it's a point of intersection between structure, support, and momentum. When a green buy signal appears here, it's a visual alert that smart money may be stepping back in. Similarly, when a swing high force at the top of the descending channel and assist from the red sell signal, that element suggests exhaustion of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary. Rather than chasing such moves, professional traders wait for a to channel. It's called re-entry zone. What buys? It is the upper band and sword and burst with the zigzag lower book and the mule. Flow off on the last. Price has then like bombkin. So the price channel becomes broken. Until it chance so upward, the entry. Full out of PM or money sharp buying opportunities can larger upper end. This is called multi-run and it's one of those techniques consistent results. Gold's quitting will mean at multiple successes per daily. But though, the price channel, greater kick through hours and hooks and signals. The zigzag indicator shorts. That every swing defy referendum equal rather than candle fluctuation. This ends between flexibility and is what makes dominance hurl. Now sit for concept containers. Before taking a position, it's essential to see multiple confirmation delaying. One channel direction matches the tree eyes. Two zigzag and confirming swing in that direction. Even cases of level. For the hands for the entry, engulfing, bar, or position. But cross interaction with no structural level, sword lash resistance or midline. And through or more Islam, probabilities completely axis. There's minimum backbone altering. Even with break confirmations, more commonly occur. It is a traders sit soft less low and bread or of last swing high. In tail trend. Support not only heaven but also for emotional control or unexpected. Market flux. Remember, instancy is by a break of every decision. Passive model holds momentum early. In the slope into Latin, and price starts hovering around midline without commitment. It's often a prelude to consolidation. During such periods, trade frequency should decrease, and focus shift toward identifying breakout potential. Once the channel reduces directional slope, the next trend wave begins. Understanding gold's behavior during movements is crucial. For instance, non-form payrolls or CPI releases often trigger temporary spikes. Price channel visualizes how all these spikes deviate from equilibrium. The quick gap side of the boundary followed by return inside the channel indicates a false peak out. Excellent opportunity for real entries from zigzag signal lines. On rigor calls, gold zigzag technical zones are right highs lows. The zigzag indicator automatically plots the turning points, helping traders visualize the story of price evolution. When these levels coincide with the channel boundaries, they act as magnets. Areas where liquidity pools exist and reversals frequently form. In bullish conditions, one can observe both base set patterns within the channel. Pull back from a higher low, each forming higher high. Trader can sail at each. Retreats and confirm by zigzag and bicycle combination. Conversely, in a bear channel, each rally at the break of midline comes opportunity to set lower high. This system also adapts beauty to selling more trading. In lower high phase, 1M, 5M. Buy graph signals for short-term moves, while on each forward it defines softer trend. Direction. The principle remains constant. The market bursts in waves, and the channel acts. Those waves visually. Beyond technical analysis, psychological element reigns key. Gold often takes traded with sharp, sudden swings. The interior structure of emotional reaction. By eating. For countershins of incentives, traders maintain composure and clarity. Towards long-term success, when traders massive interpretation of the indicator, they gain not only synapses but also time awareness. The rhythm of the channel combined with the measured timing of zigzag swings teaches patience. It reminds the trader that price needs time to develop structure. Acting to early disrupt synchronization with market's natural flow. To summarize the golden principle of this method, trade in the direction of the channel slope. Confirm entries of the zigzag swings as signal colors. Use the midline to judge momentum strength. Align multiple time frame for precision. Apply disciplined risk management always. In essence, the price channel is not just an indicator, it's a framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Wait for congruence, confirm with structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like any financial instrument. The price channel visualizes that rhythm, turning uncertainty into a readable map. By MaxTrading approach, you don't just follow price, you understand it. And that's what separates observation from mastery. Welcome everyone to this in-depth and extended analysis on gold versus the US dollar, DAUD. In today's session, we are going to explore how to interpret the behavior of gold through lens of the price channel indicator, combined with zigzag confirmation, swing high and swing low structures, and the recurring buy sell signals that help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolved as the market developed in data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both guide and confirmation tool. Its ability to represent support and resistance in a flow manner allows traders to align themselves with the dominant direction of the market while managing the natural fluctuations of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action in this environment tests are set. The lower boundary of the channel is on support. Every such intersection near the zone represents a potential opportunity, particularly when the zigzag indicator plots a swing low at or near that same boundary. The moment a green signal appears, the confluence between the upward sloping channel, the swing low structure, and the signal confirmation reinforces a strong long bias. In various conditions, the logic reverses. The upper channel acts as dynamic resistance, and each rejection near, especially when accompanied by a sell signal and a zigzag high, becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader vividly aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive moves that can appear chaotic to the untrained eye. However, the price channel indicator absorbs chaos and redefines structure movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on a 15-minute time frame. In a setup, gold often oscillates between the upper and lower zones of the channel multiple times within session. When the price is trading upward and remains within the top half of the channel, momentum is healthy. When it dips below midpoint but remains above the lower band, we interpret it as a correction with an ongoing bullish trend. Patience during these crashes is key. Traders rushes will often find themselves caught against the trend once and next. Zigzag and green signal appear. The midline of the channel represents the equilibrium of price where buying and selling forces are balanced. When gold trades above it, the bullish energy dominates. Below it, bearish energy prevails. Watching how price behaves around this midline often reveals the upcoming direction before any signal even appears. For example, a strong bounce from the midline followed by a bullish engulfing candle is a pre-confirmation of trend resumption. The zigzag indicator acts as a structural backbone of the strategy. Each bullish swing reflects a meaningful shift in market direction. A series of higher highs and higher lows signal continuation, while lower highs and lower lows indicate reversal. When overlay these zigzag ones onto the price channel, we gain context whether the swings are developing inside the boundaries, taking them, or rejecting them. One of the most insistent high probability scenarios occurs when gold and zigzag swing low exactly at the lower boundary of a rising channel. This is not random, it's point of intersection between structure, support, and momentum. When a green buy signal appears here, it's visual alert that smart money may be stepping back in. Similarly, when a swing high forms at the top of a descending channel and the system prints a red sell signal, that alignment suggests exhaustion of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary, rather than chasing up moves. Professional traders aim for a pullback into the L. This is called re-entry zone. Once price tests the upper band as new support and emerge from the zigzag low or bullish candle, that could follows off stronger than list. The graph time ring touch H1, H4, and Tilly, the zane should were inflators. The slope of price and customary by. When the channel slopes upward, you made pullbacks on the 15 and 1H charts combining opportunities within the leader upper end. This is called multi-time frame alignment as one of the most effective techniques for consistent results. Gold's liquidity and volatility mean that multiple swing steps occur daily. By following the rhythm of the price channel, traders able to focus on quality signals. This is indicator shorts that forcing identify persistent meaningful change rather than a random candle fluctuation. This balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it's essential to see multiple confirmations aligning. One channel direction matches the trade bias. Two zigzag trends to confirm swing point in that direction. Read the signal indicator display a matching buy or sell label. For the candle pattern support the entry, engulfing, pin bar, or chicken. 5 by interaction with uncontrollable, strict line resistance or line. 3 or more of these line probability significantly increases. Risk management is found on all trading. When with perfect conveyance, market anomaly occur. A disciplined trader sets plots below the last swing low in uptrend or above the last swing high in a downtrend. This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built by winning every trade but by protecting every decision. The channel system also highlights momentum shift early. When slope begins to flatten and price starts hovering around midline without commitment, it often a prelude to consolidation. During such periods, trade frequency should increase and focus should shift to identify how to tail. Once the channel resumes direction slope, the next trend begins. Understand bull's behavior or news vest is crucial. For instance, non-bar payroll or DPI risks often are temporary spikes. The Ross channel visualizes how these spikes deviate from equilibrium. A quick way outside the boundary followed by a return inside the channel indicates a false breakout and excellent opportunity for reversal entries when confirmed by zigzag and signal alignment. On larger scales, gold spec macro technical associates rod from previous highs and lows. The zigzag indicator automatically plots this triangles, helping traders visualize story across evolution. When this level coincides with channel varies, they as minus areas where liquidity exists and frequently form. In bullish conditions, one can observe gold creating stair-step pattern when the channel edge pull back forming a higher low, each rally forming a higher high. Traders can scan in at each retrace and confirm by zigzag and signal combination. Conversely, in burst channel, each rally that fails to break above the line becomes an opportunity to sell the lower high. This system also adapts beautifully to scalping or swing trading. On lower high frames, 1M, 5M, it provides rapid signals for short-term moves, while on H4 or daily, it defines long-term trend direction. The principle remains constant, the market breaks in waves, and channel mass goes makes visually. Beyond technical analysis, the psychological element remains key. Gold often tempts traders with sharp, sudden spikes. The indicator structure deepens emotional overreaction by winning. For confirmation instead of impulse interest, traders maintain composure and clarity essential. Traits in long-term success. When traders master the interpretation of this indicator, they gain not only signal accuracy but also time awareness. The rhythm of the channel combined with the measured timing of zigzag swings teaches patience. Reminds the trader that price needs time to develop structure. Hacking 2. Early synchronization with market's natural flow. To summarize golden principles of this method, trade in direction of channel slope. Convert entries with zigzag swings as signal colors. Use the midline to judge momentum strength. Align multiple time frames for precision. Apply disciplined risk management always. In essence, price channel is not just an indicator, it's a framework for architecture, discipline, and timing. Whether trend is bullish or bearish, the logic remains the same. Wait for congruous, convert with structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like any financial instrument. The price channel visualizes that rhythm, turning uncertainty into a readable map. By mastering this approach, you don't just follow price, you understand it. And that was Ari's observation mastery. Welcome everyone to this in-depth and extended analysis on gold versus the US dollar, ZUSD. In today's session, we are going to explore how to interpret behavior of gold through the lens of price channel indicator, combined with zigzag confirmation, swing high and swing low structures, and the recurring buy and sell signals to help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold tends to be one of the most typically reactive assets, the indicator serves as both a guide and confirmation tool. Its ability to represent support and resistance in a flowing manner allows traders to align themselves with the dominant direction of the market while managing the natural fluctuation of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action in this environment tends to respect the lower value of the channel as dynamic support. Every touch and rejection near this zone represents potential buy opportunity, particularly when the zigzag indicator passes swing low at or near that same boundary. The moment a green buy signal appears, the confluence between the upward sloping channel, the swing low structure, and the signal confirmation reinforces strong bias. In bearish condition, the logic reverses. The upper channel line acts as dynamic resistance and rejection mirror. It is especially when accompanied by a sell signal and a zigzag swing high becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment. This creates large impulse moves that can appear chaotic to the untrained eye. However, the price channel indicator absorbs this chaos and refines as structure movement. Deeper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on a 15-minute time frame. In this setup, gold often oscillates between the upper and lower nodes of the channel multiple times within a session. When the price is trending upward and remains within the top half of the channel, momentum is healthy. When it dips below the midpoint but remains above the lower band, we interpret it as correction with an ongoing bullish trend. Patience for these corrections is key. Traders who rush to sell often find themselves caught against the trend once the next zigzag low and green signal appear. The middle line of the channel represents the equilibrium of price where buying and selling forces are balanced. When gold trades above it, the bullish energy dominates. Below it, bearish energy prevails. Watching how price behaves around this midline can often reveal the incoming direction before any signal even appears. For example, a strong bound from the midline followed by bullish engulfing candle is a pre-confirmation of trend resumption. The zigzag indicator acts as a structural backbone of strategy. Each dotted swing reflects a meaningful shift in market direction. A series of higher highs and higher lows signals continuation, the lower highs and lower lows indicate reversal. When we overlay the zigzag onto the price channel, we gain context whether swings are developing inside the boundaries, breaking them, or rejecting them. One of those consistent high probability scenarios occurs when gold prints a zigzag swing low exactly at the lower boundary of a rising channel. This is not random, it's a point of intersection between structure, support, and momentum. When a queen signal appears here, it will alert that smart money may be stepping back in. Similarly, when a swing high forms at the top of a descending channel and the system prints a red L signal, the alignment suggests exhaustion of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary, rather than chasing such moves. Professional traders wait for a pullback into the channel. This is called a re-entry zone. One price retests the upper band new support and confirms its zigzag low or bullish candle, the next wave usually followed often stronger than the last. Across higher time frames such as H1, H4, and daily, the same logic applies but with other implications. The slope of the price channel becomes the arrow guide. When the daily channel slopes upward, even trading pullbacks on 50 or 1H charts become buying opportunities within the larger uptrend. This is called multi-time frame line and is one of the most effective techniques for consistent results. Gold liquidity and volatility mean multiple swing setups occur daily. By following the rim of the price channel, traders can filter out noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents meaningful change, rather than a random candle fluctuation. This balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation mirrors. Before taking position, it's simple to see multiple confirmation aligning. While channel direction matches the trade bias, 2 zigzag prints can bring swing point in the direction. 3 the signal indicator displays a matching buy or sell label. 4 the candle pattern supports the entry, engulfing, pin bar, or rejection. 5 price interacts with no structural level, support / resistance or blunt. When 3 or more of these align, probability significantly increases. Risk management is backbone of all trading. Even with confirmations, market anomalies occur. A disciplined trader sets a stop loss below the last swing low and an uptrend or above last swing high. In a downtrend, this approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is good not by winning every trade but by protecting every decision. The channel system also highlights momentum shifts early. When the slope begins to flatten and price starts hovering around the midline without commitment, it's often a prelude to consolidation. During set periods, trade frequency should decrease and focus should shift toward identifying breakout potential. Once the channel resumes a directional slope, the next trend wave begins. Understanding gold's behavior during news events is crucial. For instance, non-par payrolls or CPI releases often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. A quick wick outside the boundary followed by return inside the channel indicates a false breakout. Excellent opportunity for reversal entry when confirmed by zigzag signal alignment. On larger scales, gold respects macro technical zone to rev from previous swing highs and lows. The zigzag indicator automatically plots the turning points, helping traders visualize the story of price evolution. When these lulls coincide with the channel boundaries, they act as magnets. Areas where liquidity pools exist and reversals frequently form. In bullish conditions, one can observe gold creating stair-step pattern within a channel each pullback forming a higher low, each rally forming a higher high. Traders can scale in each retracement confirmed by the zigzag and signal combination. Conversely, in bearish channel, each rally that fails to break above the midline becomes an opportunity to sell the lower high. This system also adapts beautifully to scalping or swing trading. On lower time frame, 1M, 5M, it provides rapid signals for short-term moves, while on H4 or daily, it defines long-term trend direction. The principle remains constant, the market breaks in waves, and the channel maps those waves visually. Beyond technical analysis, psychological element remains key. Gold often has traders with sharp, sudden spikes. The indicator's record prevents emotional overreaction. By waiting for confirmation instead of impulse entries, traders maintain composure and clarity essential. Great in long-term success. When traders master the interpretation of this indicator, they gain not only signal accuracy but also time awareness. The remote channel combined with measured timing of zigzag swings teaches Asius. It reminds the trade that price needs time to develop structure. Acting 2. Early disrupts synchronization with the market's natural flow. To summarize the golden principles of his method. Trade in the direction of the channel slope. Confirm entries with exact swings and signal colors. Use the midline to judge momentum strength. Allow multiple time for position. Us to imagine always. Hence, the cross channel not just indicators of framework market structure. Discipline, and them. Whether it bullish or bearish, the logic remains the same. Wait for confluence, confirm with structure, and execute with patience. Gold behavior is cyclical and rhythmic, just like any financial instrument. The cross channel. Visualize that rhythm, turning uncertainty into a readable map. By mastering this approach, you don't just follow price, you understand it. And that's what separates observation from mastery. Welcome everyone to this in-depth and extended analysis on gold versus the US dollar, ZUSD. In today's session, we are going to explore how to interpret the behavior of gold through the lens of price channel indicator. Combined with exact confirmation, swing high and swing low structures, and the recurring buy and sell signals that identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops new data. Cut gold tends to be one of the most technically reactive assets. The indicators serve as both guide and confirmation. 2. Its ability to represent support and resistance in a flowing manner allows traders to align themselves with the dominant direction of the market while managing the natural fluctuations of volatility. When the channel slopes upward, we categorize trend as bullish. Price action is environment tends to respect the lower boundary of the channel as dynamic support. Every touch and reaction needs its own represents a potential by opportunity for tailoring the zigzag indicator plots to swing low at or near that same boundary. The moment a green buy signal appears, confluence between the upward sloping channel, the swing structure, and the signal confirmation reinforces a strong long bias. In bearish conditions, the logic reverses. The upper channel acts as dynamic resistance, and each reaction near it, especially when accompanied by red sell signal and a zigzag swing high, becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as efficient data, central bank policy decisions, and risk sentiment shifts. This creates holds a boot and guide to trend. However, price channel indicators source the sales and defaults true and upper and low ends. However, translate uncertainty into real values. Examine how this plays out on 15-minute time frame. In this setup, gold often oscillates between the upper and lower ends of the channel multiple times within a session. When the price is trending upward and remains within the top of the channel, momentum is healthy. When it's below the range, but the lower band, we interpret it a group in an ongoing bullish trend. Pages being these, traders who rush self and find themselves caught as trend what's next. This is low and brisk low here. The line of the channel represents the equilibrium price where buying and selling forces are balanced. When gold trades above it, the bullish energy dominates. Below it, bearish energy prevails. Watching how price behaves around this midline can often reveal the coming trend before any signal appears. For example, a drawdown from the midline followed by oil engulfing candle is a confirmation of trend resumption. The zigzag indicator acts as the structural backbone of this strategy. Each plotted reflects a meaningful shift in market direction. A series of higher highs and higher lows signals continuation, while lower highs and lower lows indicate reversal. When we overlay these zigzag points onto the price channel, we aim contest where the swings are developing inside boundaries, breaking them, or shifting them. One of the most consistent high probability scenarios is when gold pins zigzag swing low exactly at the lower boundary of a rising channel. This is a Ram's point of intersection between structure, support, and momentum. When green signal appears here, it visualizes that smart money may be stepping back in. Similarly, when a swing high forms at the top of a descending channel and the system prints a red sell signal, the alignment suggests exhaustion of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulse rallies, price may temporarily break above the up boundary. Rather than shading such moves, professional traders need for a bull and channel. This is called the entry zone. On price, test the upper band to support and difference with the zigzag low or bull channel. The next move usually follows on wrong of the last. Cross domains to H1, H4, and delta. H with buy implications. The little channel becomes a micro buy. When the daily channel looks upward, the intraday bull acts on the PM or 1H start combining opportunities within the larger uptrend. This is called multi-time frame alignment and is one of the most effective techniques for consistent gold. Both liquidity and volatility mean that multi-swing setup occur daily. By following the rhythm of the price channel, traders can build up noise and focus on quality signals. The zigzag indicator ensures every swing identified represents a meaningful change, rather than a random candle fluctuation. This balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation mirrors. Before taking position, it's essential to see multiple confirmations aligning. One channel root matches the trade bias. Two zigzag points confirm swing point in that direction. Three the signal indicator displays matching buy or sell label. For the candle patterns of burst entry, engulfing, pin bar, or rejection. 5 price interacts at no structural level, support/resistance or midline. When 3 or more of the align, probability significantly increases. Risk management is the backbone of all trading. Even with first confirmations, market anomalies occur. A disciplined trader sets a stop loss below the last swing low in an uptrend or above the last swing high. In a downtrend, this approach not only preserves capital but also ensures emotional control during unexpected market spots. Remember, consistency is built not by winning every trade but by protecting every decision. The channel system also highlights momentum shifts early. When the slope begins to flatten and price starts hovering around the middle without commitment, it's often prelude to consolidation. During such periods, trade frequency should decrease and focus should shift toward identifying break potential. Once the channel resumes the directional slope, the next trend begins. Understanding bull's behavior during news events is crucial. For instance, non-farm rolls or CPI releases often trigger temporary spots. The price channel visualizes how far these deviate from equilibrium. A quick outside the boundary followed by return inside the channel indicates a vol state an excellent opportunity for reversal entries when confirmed by zigzag and signal aligned. On larger scales, gold respects macro tactical zones derived from previous swing highs and lows. The zigzag indicator automatically plots these turning points, helping traders visualize the story of price evolution. When these levels coincide with the channel boundaries, they act as magnets. Areas where liquidity pool exists and reversals frequently form. In bullish conditions, one can observe creating stair patterns within the channel each. Pull back forming higher low, each rally forming higher high. Traders can sell in at each retracement confirmed by the zigzag and buy signal combination. Conversely, in bearish channel, each rally that fails break up the midline come in opportunity to sell lower high. This system also adapts beautifully to selling or swing trading. On lower time frames, 1M, 5M, provide rapid signals for short-term moves, while H4 or daily, a defined long-term trend. Direction. The principle remains constant, market beats and waves, and the channel maps those waves visually. Beyond technical analysis, the psychological element remains deep. Gold often tempts traders with sharp, sudden spikes. The indicator's structured V-trends emotional overreaction. By waiting for confirmation instead of impulse entries, traders maintain composure and clarity essential traits in longer success. When traders master the interpretation of this indicator, the key not only signal accuracy but also time awareness. The rhythm of chant combined with the measured timing of zigzag swings teaches patience. It reminds the trader that price needs time to develop structure. Acting so early synchronization with the market's natural flow. To summarize the golden principles of this method, trade in the direction of the channel's look. Confirm entry with zigzag swing and signal colors. Use the midline to judge momentum strength. Align multiple time frames for precision. Apply disciplined risk management always. In essence, the price channel is not just an indicator, it's a framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Wait for confluence, confirm structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like a financial instrument. The price channel visualizes that rhythm, turning uncertainty into a readable map. By mastering this approach, you don't just follow price, you understand it, and that's what separates observation from mastery. Welcome everyone to this extended analysis on gold versus the US dollar. In this session, we are going to explore how to interpret the behavior of gold through the lens of price channel indicator, combined with zigzag confirmation, swing high and swing low structures, and the recurring buy and sell signals that help identify momentum reversals and trend continuation patterns across all time frames. Price channel indicator of gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold has to be one of both technically reactive assets, the indicator serves with the guide confirmation. Stability represents resistance in a flow manner allows traders to align themselves with the dominant direction of the market while matching the natural fluctuation of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action in this environment tends to respect the lower boundary of the channel as dynamic support. Every channel restriction near this zone represents a potential buy opportunity, particularly when the zigzag indicator plots swing low or near that same boundary. The moment green buy signal appears, the confluence between the sloping channel, swing low structure, and signal confirmation behaviors is long buys. Convergence, the up channel on X axis, and each checking near. Is fairly when it could be resistance and zigzag because of one potential entry for short business. The beauty of this is that it adapts to volatility and keeps the trader aware of market flow with emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive moves that can appear chaotic to the untrained eye. However, the price channel indicator absorbs this chaos and defines it as structured movement. The upper and lower bands of will translate uncertain and readable boundaries. Let's examine how this plays out of T and time frame. In the setup, gold often oscillates between the upper and lower zone of channel multiple times within a session. When the price is trending upward and remains within the top half of channel, momentum heavy. When tipped below the midpoint range above the lower band, we interpret it as a correction within an ongoing bullish trend. Patience during these corrections is key. Traders who rush to sell often find themselves caught against trend once the next zigzag low and green signal appear. The midline of channel represents the equilibrium of price where buying and selling forces are balanced. When gold trades above it, the bullish energy dominates, below it, bearish energy prevails. Buying how price behaves around this midline can often reveal the upcoming direction before any signal even appears. For example, a strong bounce from the midline followed by bullish engulfing candle is a pre-confirmation of trend resumption. The zigzag indicator acts as the structural backbone of strategy. Which reflects a meaningful shift in market direction. Series higher highs and higher low signal continuation, while lower highs and lower low indicate reversal. When we overlay zigzag onto the price channel, we gain context better. The swings are developing inside the boundaries, break them, or rejecting them. One of the most consistent high probability scenarios occurs when gold prints a zigzag swing low exactly at the lower boundary of a rising channel. This is not random, it's a point of intersection between structure, support, and momentum. When the green buy signal appears here, it's a visual alert that smart money may be standing back in. Similarly, when swing high from the top of the same channel and the sister prints a red sell signal, that alignment suggests a caution of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary. Rather than chasing such moves, professional traders wait for a pullback into the channel. This is called the re-entry zone. Once price retests the event as new support and confirms with the zigzag low bullish candle, the next move usually flows often stronger than the last. Across high time frames such as the H1, H4, and daily, the same logic applies but with broader implications. The slope of the price channel becomes macro guide. When daily channels slow upward, even intraday, pullbacks on 15 and 1 each chart become buying opportunities with a larger uptrend. This is called multi-time frame alignment, and one of the most effective techniques for consistent results. Gold's liquidity and volatility mean that multiple setups occurred day. By following rhythm, the price channel, traders handle out notes and focus on quality signals. The zigzag indicator ensures that every swing identified represents a meaningful change, rather than a random fluctuation. This balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it's essential to see multiple confirmation aligning. One channel direction matches thread bias. Two zigzag prints confirm swing that direction. Rhythmic indicator plays matching X level. Fourth candle bear entry, gifting, and bar, or resistance. High price with no structural support resistance or midline. And brief or design, probability of indices. Risk management is all trading. Even with perfect confirmations, market anomalies occur. A facilitator sets a stop loss below last swing low in an uptrend or below last swing high in a downtrend. This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built not by winning every trade but by protecting every decision. The chance system also highlights momentum shifts early. When slope begins to flatten and price starts hovering around midline with a bid, it often overlooked the cancellation. First occurs, trade frequency should decrease, focus should defer to not break half a tail. Under channels in the directional loop, the next trend wave begins. On-demand goals behavior to news events is crucial. For instance, non-farm payrolls or CDI releases often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. The quick side of the boundary followed by a return side the channel indicates a fall peak out. Excellent opportunity for a vertical entry from zigzag X alignment. On large scales, older macro mechanisms are often previous swing highs and lows. This indicator automatically box between walls, helping traders visualize the story. Price evolution. When these walls cannot the channel endures, they act as magnets. Areas where liquid pools extend frequently form. In bullish conditions, one can observe both creating stair-step patterns within the channel each. Pullback forming a higher low, each rally forming a higher high. Traders can scale in each retracement informed by zigzag and bi-signal combination. Conversely, a burst channel, each rally that fast break above the midline becomes opportunity to sell the lower high. This system also adapts beautifully to scalping or swing trading. On lower time frames, 1M, 5M, It provides rapid signals for short-term moves, while on A4 it defines long-term trend. Direction. The principle remains constant, the market reads in waves, and channel maps. Those waves visually. Beyond technical analysis, the psychological element remains key. Gold often helps traders with sharp, sudden bucks. The indicator structure due prevents emotional overreaction. By waiting for confirmation instead of impulse entry, traders maintain composure and clarity essential. Trade in long-term success. When traders master the interpretation of this indicator, they gain not only signal accuracy but also time awareness. Rim of the channel combined with the measured timing of zigzag swings teaches patience. It reminds the trader that price needs time to develop structure. 2. Early disrupt synchronization with the market natural flow. To summarize the golden principles of this method, trade the direction of the channel slope. Confirm entries with zigzag swings as signal colors. Use them to judge momentum strength. Align multiple timeframes for precision. Apply disciplined risk management always. In essence, price channel is not just an indicator, it's a framework for market structure, discipline, and timing. Whether the trend bullish or bearish, logic remains the same. Wait for confluence, confirm with structure, and execute with patience. Gold's behavior is slow and just like any final instrument. The price channel visualizes that room, turning uncertainty into a readable map. By asking that approach, you don't just follow price, you understand it. And that's what separates observation from mattering. Welcome everyone to this in-depth and extended analysis on gold versus the US dollar, SOSD. In today's session, we are going to explore how to interpret the behavior of gold through the lens of price channel indicator, combined with zigzag confirmation, swing high, and swing low structures, and recurring YSL signal that help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both a guide and a confirmation tool. Stability represents support and resistance in a flowing manner, allows trades to align themselves with the dominant direction of the market by adding the natural fluctuation of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action in the environment introspect. The lower boundary of the channel as dynamic support. Every touch and reject in the system represents a potential by opportunity, particularly when the zigzag indicator plots is low at or near that same boundary. The moment green by signal appears, the confluence between the upper sloping channel, the swing low structure, and the signal confirmation reinforces a strong law bias. In bearish conditions, the logic reverses. The upper channel line acts as dynamic resistance, and each rejection near it, especially when accompanied by resistance signal and a zigzag swing high, become point potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps traders visually aware of market flow without emotional bias. Gold is regularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive moves that can appear chaotic to the untrained eye. However, the price channel indicator absorbs this chaos and redefines its structured movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on a 15-minute time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times within a session. When the price is trading upward and remains within the top half of the channel, momentum is healthy. When it dips below the midpoint but remains above the lower band, we interpret it as aggression in an ongoing bullish trend. Patience during these progressions is key. Traders who rush to sell often sell caught against trend once the next zigzag and green signal appear. The midline of channel represents the equilibrium of price where buying and supported are balanced. When gold trades above it, bullish energy dominates, below it, bear energy prevails. Watching the price behaves around this midline can often reveal the upcoming direction before any signal even appears. For example, a strong bound from the midline followed by bullish engulfing candle is the confirmation of trend resumption. The zigzag indicator acts as a structural backbone of strategy. Each modest swing reflects a meaningful shift market direction. Series of higher highs, higher lows signals continuation, while lower highs and lower low indicate reversal. When we overlay zigzag ones onto the price channel, we can context whether swings are developing inside the period, breaking them, or rejecting them. One of the most consistent probability scenarios occurs when gold into zigzag swing low exactly at the lower boundary of a rising channel. This is not random, it's a point of intersection between structure, support, and momentum. When a green bar signal appears here, it's a visual alert that smart money may be stepping back in. Similarly, when swing high forms at the top of a descending channel and the system prints a red sell signal, that alignment suggests a suggestion of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary, rather than chasing such moves. Professional traders look for a pullback into the channel. This is called the re-entry zone. Once price retests the upper band as new support and confirms with a zigzag low or bullish candle, the next wave usually flows often stronger than the last. Across higher time frames such as the H1, H4, and daily, the same logic applies with broader implications. The slope of the price channel becomes a macro guide. When daily channel slopes upward, even intraday, pullbacks on the 15 or 1-8 charts become buying opportunity within the larger trend. This is called multi-time frame alignment, and it's one of the most effective techniques for consistent results. Gold liquidity and volatility mean that multiple swings occur daily. By following the rhythm of the price channel, traders hit photos and bows and cells. The zigzag indicator issues. The every swing to the odd represent meaningful gain rather than rem candle fluctuating. This adds between flexibility and precision it contains oral. Now let's explore concept of confirmation layers. For dating within, essential C. Multiple confirmation line. Channel your match bias. 2 zigzag branches confirming swing in that direction. 3 the signal indicator displays a matching bear sell label. 4 the candle pattern supports the entry, engulfing, pin or rejection. 5 pricing rec no structural L, support left reason more midline. When 3 or more of these align, probabilities infinitely increases. Risk management is the backbone of all trading. Even with perfect confirmations, market anomalies occur. A disciplined trader sets a stop loss below the last swing low and uptrend or the last swing high. In a downtrend, this pro not only reserves capable of enduring control from unexpected market sparks. Remember, steady is not doing every trade but predicting every decision. The channel system also highlights momentum shifts early. When the slope begins to flatten and price starts hovering around the midline without commitment, it's often a prelude to consolidation. During such periods, trade frequency should decrease and focus should shift toward identifying breakout potential. Once the channel resumes a direction slope, the next red wave begins. Understanding gold's behavior during news events is crucial. For instance, non-farm payrolls or CPI releases often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. A quick wick outside the boundary followed by return inside the channel indicates false breakout. An excellent opportunity for reverse entries when confirmed by zigzag and signal alignment. On larger scale, gold respects agro-technical zones derived from previous swing highs and lows. The zigzag indicator automatically plots these turning points, helping traders visualize the story of price evolution. When these levels coincide with the channel boundaries, they act as magnets. Errors where liquidity pools exist and reversals frequently form. In bullish conditions, one can observe gold creating stair set patterns within the channel each. Pull back from a higher low, each forming a higher high. Trader can scale in at each. Reverse confirmed by the zigzag and by symbol domination. Conversely, in bearish channel, each rally that fails to break above the midline comes an opportunity to set lower high. This system also adaptively to scalping or swing trading. On lower time frames, 1M, 5M, it provides rapid signals for short-term moves, while on E4 or daily, it defines long-term trend. Direction. The principle remains constant, the market breathes in waves, and the channel maps those waves visually. Beyond technical analysis, psychological element remains key. Gold often tempts traders with sharp, sudden spikes. The indicator structure view prevents emotional overreaction. By waiting for confirmation instead of impulse entries, traders maintain composure and clarity essential. Trade in longer success. When traders master the interpretation of this indicator, they gain not only accuracy but also time awareness. The measure of his actions teaches patience. Reminds the trader needs to develop structure. 2. Early to synchronization with the market's natural flow. To summarize the golden principles of this method, trade in the direction of channel slope. Confirm entries with exact swings and signal colors. Use the midline to judge momentum strength. Allow multi-time frames for precision. About discipline risk midholds. In essence, base challenge indicators for market structure. Discipline and timing. Whether trend is bullish or bearish, the logic remains the same. Deeper confidence, confirm with structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like any financial instrument. The price channel. Visualize that rhythm, turning uncertainty into a readable map. By mastering this approach, you don't just follow price, you understand it. And that's what separates observation from mastering. Welcome everyone to the CNF and extended analysis on gold BTCUSD. In today's session, we are going to explore how to interpret behavior of gold through the lens of price channel indicator. Combined with zigzag confirmation, swing high and swing loose record, and recurring buying signals to help identify momentum reversals and continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework evolved as the market developed in data. Because gold tends to be one of the most quickly reactive assets, the indicator serves as both a guide and a confirmation tool. Its ability to represent support and resistance in flowing mineral oscillators along the middle with the dominant direction of market while managing the natural fluctuations of volatility. When the channel slopes upward, we categorize trend as bullish. Price action in this environment tends to respect lower boundary of the channel as dynamic support. Every tuck and rejection near the zone represents a potential opportunity, particularly when the zigzag indicator process swing low at or near the same boundary. The moment a green base signal appears, the confluence between the upward sloping channel, swing low structure, and a signal confirmation reinforces a strong long bias. In bearish conditions, the logic reverses. The upper channel line acts as diagonal resistance, and each rejection here, especially when accompanied by red signal and zigzag swing high, becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trade visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive boosts that can predict to the untrained eye. However, the price channel indicator absorbs the scale and redefines its structured movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on a 15-minute time frame. In this setup, gold often oscillates between the upper and lower zone of the channel multiple times within a session. When the price is trending upward and remains within the top out channel, momentum is healthy. When it dips below the point but remains above the lower band, we interpret it as a correction within an ongoing bullish trend. Patience during these corrections is key. Traders who rush to sell often find themselves against the trend on the next zigzag low and green signal appear. The midline of the channel presents the equilibrium of price where buying and selling forces are balanced. When gold trades above, the bullish energy dominates. Below it, bearish energy prevails. Watching how price behaves around this midline can offer a reveal outcome direction before any signal even appears. For example, a strong bounce from the midline followed by a bullish engulfing candle is pre-confirmation of trend resumption. Zigzag indicator acts as the structural backbone of this strategy. Each spot swing reflects meaningful shift in market direction. A series of higher highs and higher lows signals continuation, while lower highs and lower lows indicate reversal. When you overlay these zigzag points onto price channel, gain context whether swings are developing inside boundaries, breaking them, or rejecting them. One of the most consistent high probability scenarios occurs when gold prints zigzags from low exactly at the lower boundary of a rising channel. This is not random, it's a point of intersection between structure, support, and momentum. When a green buy signal appears here, it's a visual alert that smart money may be stepping back in. Similarly, when a swing high forms at top of a descending channel as this prints red signal, that alignment suggests exhaustion of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary, rather than chasing such moves. Professional traders wait for a pullback into the channel. This is called the re-entry run. One price retests the upper band as you support and confirm with zigzag lower bullish candle. The next wave usually follows often stronger than the last. Across higher time frames such as the H1, H4, and daily, the same logic applies but with broader implications. The slope of the price channel becomes the macro guide. When the daily channel slopes upward, even intraday, pullbacks in the 15M or 1H charts become opportunities within the larger trend. This is called multi-time frame line and is one of the most effective technique for consistent results. Gold's liquidity and volatility mean that multiple swings set up occur daily. By following the rhythm of the price channel, traders can filter out noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents meaningful change, rather than random fluctuation. This balance between flexibility and precision is what makes combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it is essential to see multiple confirmations line. One channel direction matches trade base. 2 suspends a confirming swing point in that direction. 3 the signal indicator displays matching upward level. 4 the hand supports the entry, bully, pin bar, or rejection. 5 rising racks the neutral level, support / resistance or midline. When 3 or more of these align, probability significantly increases. Risk management is the backbone of all trading. Even perfect confirmations, market anomalies occur. A disciplined trader sets the stop loss below the last swing low and uptrend or above the last swing high. In a downtrend, this approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is good not by winning every trade but by predicting every decision. The channel system also highlights momentum shifts early. When the slope begins to flatten and price starts hovering around the line without commitment, it often a prelude to installation. During such periods, trade frequency should decrease and focus should shift toward identifying breakout potential. Once the channel resumes a diagonal slope, and this trend begins, understanding gold's behavior during news event is crucial. For instance, non-firm payrolls or DTI releases often trigger temporary spikes. The price channel visualizes how far these exceed from equilibrium. A quick outside boundary followed by returning support in case falls break out. Some percent for bull reading from zigzag and small on large scale, older technical zones rough pre-swing high lows. The zigzag indicator amount these string points. Have to lost story. Cross out. When cycle coins up with gel battery, act as animals. Errors or liquidity pools exist and reversals frequently form. In bullish conditions, one can observe gold creating step patterns within the channel H. Pullback forming a higher low, each rally forming a higher high. Traders can scale in at each. Retracement different by zigzag and bicycle combination. Conversely, in bearish channel, shiny that fails to work at the moon gives an opportunity to sell lower high. This system also adapts beautifully to scalping or swing trading. On low time phase, 1M, 5M, it provides signals of return move, while on 8 for daily, it finds long-term trend direction. The principle remains constant, the market swift, and channel mass. Goes way visually. Beyond technical analysis, the psychological element remains key. Gold often tempts traders with sharp, sudden spikes. The indicator's record view prevents emotional overreaction. By waiting for confirmation instead of impulse entries, traders maintain composure and clarity essential traits in long-term success. When traders master the interpretation of this indicator, they gain not only signal accuracy but also time awareness. The rhythm of the channel combined with a measured timing of zag swings. T-positions. It reminds the trade that price needs time to build structure. Act 2. Early disrupt synchronization from market's natural flow. To summarize the golden principle of this method, trade in the direction of channel flow. Confirm entries with zigzag swings and signal blurs. Use the midline to judge mental strength. Align multiple time frames for precision. Apply discipline risk management always. In essence, the price channel is not just an indicator, it's a framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Wait for confluence, confirm with structure, and execute patience. Gold's behavior is cyclical and rhythmic, just like any financial instrument. Price channel. Visualize that rhythm, turning uncertainty into a readable map. By mastering this approach, you don't just follow price to understand it. And that's what separates observation from mastery. Welcome everyone to this in-depth and extended analysis on gold versus the US dollar, ZOSD. In today's session, we're going to explore how to interpret the behavior of gold through the lens of the price channel indicator, combined with exact confirmation, swing high and swing low structures, and the recurring bias and signal that help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both a guide and confirmation tool. Its ability represents a and in a flowing manner allows traders to align themselves with the minute direction of the market while managing the natural fluctuations of volatility. When a channel slopes upward, we categorize the trend as bullish. Price action in this environment tends to respect the lower boundary of the channel's dynamic support. Every touch and injection needs its own present potential. By opportunity tailored with zigzag K blocks will only less ability. The day, body gold peers, couplings between others, the channel, the low structure, and signal. Unroot reinforces for long. In arid conditions, like curves, the channel acts as resistance, each rejection near. It is built by a sell signal and a zigzag swing high because of point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold's particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive moves that can appear odd to the uptrend eye. However, the price channel indicator absorbs this chaos and resolves it as suckered movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on a 15-minute time frame. This setup, gold often oscillate between the upper and lower zones of the channel multiple times within a session. When the price is trending upward and remains to the top half of channel, momentum is healthy. Dips below the midpoint but remains above the lower band. We interpret it as a correction with an ongoing bullish trend. Patience during these corrections is key. Traders rush to sell often on themselves against the trend. What's next? Zigzag and green signal appear. The midline of the channel presents the equilibrium of price where buying and selling forces are balanced. When gold trades above it, the bullish energy dominates. Below it, bearish energy prevails. Watching how price behaves around this line can often reveal the upcoming direction before any signal even appears. For example, disruptions from the midline follow up bullish long candle is a brief confirmation of trend position. The zigzag indicator acts as a structural backbone of the strategy. Plotted swing reflects a meaningful shift in market direction. A series of higher highs and higher lows signal continuation, while lower highs and lower lows indicate reversal. When we overlay these zigzag points onto the price channel, we gain context whether the swings are developing inside the boundaries, breaking them, or rejecting them. One of the most consistent high probability scenarios occurs when gold prints a zigzag swing low exactly the lower boundary of a rising channel. This is not random at a point of intersection between structure, support, and momentum. When a green buy signal appears here, it's a visual alert that smart money may be stepping back in. Similarly, in a swing high form at the top of a descending channel and the system print a rest sell signal, that line suggests exhaustion of upward momentum. Hitting gold effectively with this method requires understanding how price acts to the challenges. During strong impulsive rallies, price may temporarily break up the upper boundary, rather than chasing sudden moves. Professional traders need for pullback into channel. This is called re-entry zone. Once price retest the upper band as new support and confirmed with a zigzag lower bullet candle, the web usually follows often stronger than the last. Across higher time frames such as the H1, H4, and daily, the same logic applies but with broader implications. The low price channel becomes the macro guide. When the daily channel low upward, even intraday, pullbacks on the PM or 1H charts seek buying opportunities within larger uptrend. This is called multi-time frame alignment and it's one of those effective techniques for consistent results. Gold's liquidity and volatility mean that multiple swing setups occur daily. By following the route of price channel, traders can filter out noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents meaningful change, rather than random candle fluctuation. This balance between flexibility and precision is what makes the combinations powerful. Now let's explore the concept of confirmation layers. Before taking a position, it's essential to see multiple half agents aligning. One channel direction matches three bias. Two zigzag print a confirming single in that direction. Through the signal indicators place a matching bar or label. 4 the candle pattern towards the entry, engulfing, pin bar, or rejection. 5 price interacts with the structural level, support/resistance or midline. And 3 or more of these align, probability significantly increases. Risk management is the backbone of all trading. Even with perfect confirmations, market anomalies occur. A disciplined trader sets a stop loss below the last swing low in an uptrend or above the last swing high in a downtrend. This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built by winning every trade but by protecting every decision. The channel also highlights momentum shifts early. When the low begins to flatten and price starts hovering around the midline without commitment, it's often prelude consolidation. During such periods, trade frequency needed to decrease and focus should shift toward identified breakout potential. Channel resumes irrational slope, the next trend wave begins. Understanding goals behavior during news events is crucial. For instance, non-par payrolls or CPI releases often trigger temporary spikes. Price channel visualizes how far these spikes deviate from equilibrium. Quick outside the boundary followed by return inside the channel indicates a false breakout. An excellent opportunity for reverse entries when confirmed by zigzag and signal alignment. On larger scales, gold respects macro technical zones derived from previous swing highs and lows. The zigzag indicator automatically plots these turn points, helping traders visualize the story. Price evolution. When these levels coincide with the channel boundaries, they act as magnets. Areas where liquidity pools exist and reversals frequently form. In bullish conditions, one can observe gold creating stair-step pattern within a channel each. Pullback forming a higher low, each rally forming a higher high. Traders can get in at each. Retracement confirmed by the zigzag and bicycle combination. Conversely, in a bearish channel, each rally that fails to break above the midline becomes an opportunity to sell the lower high. This system also adapts beautifully to help swing trading. On lower timeframe, 1M, 5M, it provides direct signals for short-term moves, while on H4 or daily, it plots long-term trend. Direction. The principle remains constant, the market reads in waves, and channel maps. Those wave visually. Beyond technical analysis, the psychological element remains deep. Gold often tempts traders with sharp, sudden spikes. The indicators are to prevent emotional reaction. By meeting or confirmation instead of impulse entry, traders maintain composure and clarity essential. Trade in long-term success. When traders master the interpretation of this indicator, they gain not only signal accuracy but also time awareness. The rhythm of the tail combined with a measured time of zigzag swings. He is patience. It reminds the trader that price needs time to develop structure. Acting 2. Early disrupt synchronization with the market's natural law. To summarize the golden principle of this method. Trade at the direction of the channel slope. Confirm entries with zigzag swings and signal colors. Use the midline to judge momentum trend. Align multiple timeframes for precision. Apply disciplined risk management always. In essence, the price channel is not just an indicator, it's framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Aid for confluence, confirm with structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like any financial instrument. The price channel visualizes that rhythm, turning uncertainty into a regional map. By mastering this approach, you don't just follow price, you understand it. And that's what separates observation from mystery. Welcome everyone to this extended analysis on gold versus the US dollar. Solid. In today's session, we're going to explore how to interpret the behavior of gold through the lens of the price channel indicator. Combined with zigzag confirmation, swing high and swing low structures, and the recurring ISL signals that help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both a information. Its ability to represent support and resistance in a flowing manner allows traders to align themselves with the dominant direction of the market while managing the natural fluctuations of volatility. When the channel is so upward, we categorize the trend as bullish. Price action in this environment tends to respect the lower boundary of the channel as dynamic support. Every touch and rejection near this zone represents potential buy opportunity, particularly when the zigzag indicator plots a swing low or need that same boundary. Moment A. Green buy signal views, confluence between the equal swing channel, the swing low structure, as signal. Confirmation reinforces a strong long bias. In bearish conditions, the logic reverses. The upper channel line acts as dynamic resistance, and each rejection near, especially when accompanied by red sell signal and zigzag swing high, becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps trader vividly aware of market flow that emotional bias. Gold is particularly sensitive to global fundamentals and inflation data, central bank policy decisions, and risk sentiment shifts. It creates large impulsive moves that can peak out to the uptrend eye. However, the price channel indicator absorbs the chaos and realigns it as secure moves. The upper and lower bands effectively translate uncertainty into regional boundaries. Let's examine how this plays out in the 15-minute time frame. In this setup, gold often hustles between the upper and lower zones of the channel multiple times within a session. When the price is trending upward and remains within the top half of the channel, momentum is healthy. When it dips below midpoint, remains above the lower band. We interpret it as a correction within an ongoing bullish trend. Patience during these correction is key. Traders who rush this often find themselves caught and the trend once the next zigzag low and green signal here. The midline of the channel represents the equilibrium of price where buying and selling forces are balanced. When gold trades above it, the blood energy dominates. Below it, bearish energy prevails. Watching how price behaves around this midline can often reveal the upcoming direction before any signal appears. For example, a drawdown from the midline followed by bullish engulfing candle is a confirmation of trend resumption. The zigzag indicator acts as the structural backbone of the strategy. Each plotted swing reluctant mingle. Shift in direction. Series higher highs and higher lows signal continuation, while lower highs and lower low indicate reversal. When we overlay these zigzag points onto the price channel, we gain context better. Swings are developing inside boundaries, taking them or rejecting them. One of the most consistent high probability scenarios occurred when gold prints zigzag swing low exactly at the lower boundary of a rising channel. This is not random, it's a point intersection between structure, support, and momentum. When a green buy signal appears here, it's a visual alert as market may be stepping back in. Similarly, when a swing high forms the tip of a descending channel and the system prints red sell signal, that alignment against exhaustion of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price stays temporarily above the upper boundary, rather than chasing such moves. Professional traders wait for a pullback into the channel. This is called the re-entry zone. When price retests the upper band as new support and confirm with zigzag low or bullish channel, the next wave usually follows often stronger than the last. Across higher timeframes such as E1, H4, and daily, the same logic applies but with broader implications. The slope of the price channel becomes the macro guide. When the daily channel slow upward, even intraday, pullbacks on the 15 and more H3 combining opportunities within a large uptrend. This is called multi-time brain alignment and is one of the most effective techniques for consistent results. Gold liquidity and volatility mean that multiple setups occur daily. By following the rhythm of the price channel, traders can filter out noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents a meaningful change rather than random candle fluctuation. This balance with flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking a bid, it's essential to see multiple confirmations lining. 1 channel direction matches the trade bias. 2 zigzag prints confirm swing point in that direction. 3 the signal indicator display a matching buy or sell label. 4 the candle path supports the entry, engulfing, pin bar, or rejection. 5 price interacts with known structural level, support plus resistance or midline. When 3 or more of these align, probability significantly increases. Risk management is the backbone of all trading. Even perfect confirmations, market anomalies occur. A disciplined trader sets stop loss below the last swing low in an uptrend or above the last swing high. In a dim trend, This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built up by winning every trade but by protecting every decision. The channel system also highlights momentum shifts early. When the slope begins to flatten and price starts hovering around the midline without commitment, it's often a prelude to consolidation. During set periods, frequency should decrease and focus should shift toward identifying for potential. Once the channel resumes a directional slope, the vector trade begins. Understanding gold's behavior during news events is crucial. For instance, non-farm payrolls or CPI releases often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. A quick by the boundary followed by a return inside the channel indicates fall breakout and excellent opportunity for reversal entry when confirmed by a zigzag signal line. On larger candles, full respects macro technical zones derived from previous swing highs and lows. The zigzag indicator automatically plot these turning points, helping traders visualize the story of price evolution. When these levels coincide with channel boundaries, they act as magnets. Areas where liquidity will exist and reversals frequently form. In bullish conditions, unobserved both create stair-step patterns within the channel edge. Pull back from a higher low, eat around forming a higher high. Traders can see it in each. Retrace and confirmed by the zigzag impossible combination. Conversely, in a bearish channel, each rally that fails to break above midline becomes an opportunity to set lower high. The system also adapts beautifully to standing or swing trading. On lower time frames, 1M, 5M, it provides rapid signals for short-term moves, while on H4 daily, it defines long-term trend. Direction. The principle remains constant. The market breeds in waves, and channel mass moves waves visually. Beyond technical analysis, psychological element reigns. Gold often tempts traders with sharp, sudden spikes. The indicator structured view prevents emotional overreaction. By waiting for confirmation instead of instant entries, traders maintain composure and clarity essential traits in long-term success. When traders master the interpretation of the indicator, they gain not only signal accuracy but also time awareness. The rim of the channel combined with measured timing of zigzag swings teaches patience. It reminds the trader that price need not tell active, early swing precision from natural summer golden rips of the method. Trade in the direction of the channel's low. Confirm entries with zigzag swings and signal colors. Use the midline to judge momentum strength. Along with time frames or precision. Apply discipline to risk management always. In essence, the price channel is not just an indicator of its framework, market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Wait for confluence, confirm with structure, and execute with patience. Gold's behavior is cyclical and rigid like any financial instrument. The price channel visualizes that rhythm, turning uncertainty into a readable map. By mastering this approach, you don't just follow price, you understand it. And that's what separates observation from mastery. Welcome everyone to this in-depth and extended analysis of gold versus US dollar, DAWSD. In today's session, we are going to explore how to interpret behavior through the lens of the price channel indicator. Combined with zigzag confirmation, swing high and swing low structures, and recurring buy and sell signal to help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops data. Because gold has to be one of the most technically reactive assets, the indicator serves as both guide and confirmation tool. Its ability to represent support and resistance in a flowing manner allows traders to lend themselves to dominant direction of the market while managing a natural fluctuating volatility. When the channel slopes upward, we categorize the trend as bullish. Price action is environment tends to reject. The lower boundary of the channel has dynamic support. Every touch and rejection near the zone represents a potential by opportunity, particularly when the zigzag indicator passes swing low or near that same boundary. The moment green by signal appears, confluence between the upward sloping channel, the swing low structure, and signal confirmation reinforces a strong long bias. In bearish conditions, the logic reverses. The upper channel line acts as dynamic resistance, and each rejection near it, especially when accompanied by root sell signal and zigzag swing high, becomes a point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiments. This creates urgent polar moves that can be chaotic to the untrained eye. However, the price channel indicator absorbs the scales and redefines as structured boom. The upper and lower ends effectively translate uncertainty into readable boundaries. Let's examine how this plays out on the P-min time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times with this session. When prices trend upward and remains within the top half of the channel, momentum is healthy. When it dips below midpoint but remains above lower band, we interpret it as a correction within an ongoing bullish trend. Patience during these corrections is key. Traders who rush to sell often find themselves caught against the trend line. The next zigzag low and green signal appear. The midline of the channel represents the equilibrium of price where buying and selling forces are balanced. When gold trades above, the bullish energy dominates, though bearish energy prevails. Watching the price behaves around this midline can often reveal the upcoming rush before any signal event appears. For example, a strong bounce from midline followed by bullish engulfing candles confirmation of trend resistance. The zigzag indicator acts as a structural backbone of this strategy. Each blood swing reflects a meaningful shift in market direction. A series of higher highs and higher lows signals intimated, while lower highs and lower lows indicate reversal. When we overlay these zigzag points onto the price channel, we can context whether swings are developing inside boundaries, breaking them, or breaking them. One of the most consistent high probability scenarios occurs when gold presses zigzag swing low display at a lower boundary of a rising channel. This is not random, it's a point of intersection between structure, support, and momentum. When a run by signal appears here, it visual alert that smart money may be dipping back in. Similarly, when swing high forms at the top of a setting channel and the system prints a red sell that aligns suggests exhaustion of upward momentum. Trading gold effectively with the method requires understanding how price reacts to the channel edges. During strong pulsive rallies, price may temporarily break above the upper boundary, rather than chasing such moves. Professional trades look for a pullback into the channel. This is called re-entry zone. Once price tests the upper band as news report confirms with a zigzag low or low candle, the next wave usually follows often stronger than the last. Across higher time frames as the H1, H4, and daily, the same logic applies with other allocations. Slope of price channel becomes the macro guide. When the daily channels slope upward, even intraday, pull back on 15M or 1H charts become a buying opportunity when the larger upper end. This is called multi-time frame alignment. It's one of the most effective techniques for consistent results. Gold liquidity and volatility mean that multiple swing setups are daily. By following the rhythm of the price channel, traders can filter out most focus on quality signals. The zigzag indicator assures that everything identified represents a meaningful change rather than random candle oscillation. This balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking position, it is essential to see multiple confirmations lying. One channel version matches the trade bias. Two zigzag prints to confirm a swing point in that direction. Through the signal indicator displays a matching buy or sell label. For the candle pattern support the entry, engulfing, bar, or rejection. 5 price index to no structural level, support / resistance or line. When 3 or more of these on, probability significantly increases. Risk management is the backbone of all trading. Even with perfect confirmations, market anomalies occur. A disciplined trader sets stop below the last swing low in an uptrend or above the last swing high in a downtrend. This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built not by in every trade but protecting every decision. The chance list also highlights momentum shift early. When slow begins to flatten, and price starts hovering around the midline without movement, it's often a prelude to consolidation. During such periods, trade frequency should decrease, and focus should shift toward identifying breakout potential. 1. The channel resumes a directional slope. Next trend wave begins. Understanding old behavior during news events is crucial. For instance, non-farm payrolls, CDI releases, often trigger temporary spikes. Price channel visualizes how these spikes create for equilibrium. A quick outside the boundary followed by return inside channel indicates a wild breakout. An excellent opportunity for reversal entries when confirmed by zigzag and signal alignment. On larger scales, gold segment rectangle zone are often previous swing highs and lows. The zigzag indicator automatically plots these turning points, helping traders visualize the story of price evolution. These levels coincide with the general boundary. They act as bias areas where liquidity pools exist and reversals quickly form. In bullish conditions, one can observe both creating their set patterns within the channel each. Pullback forming high low, transforming high high. Traders can scale in each. Retracement confirmed by the zigzag and the signal combination. Conversely, in bearish channel, each rally that fails to break above midline becomes an opportunity to sell the lower high. This auto adapts beautifully to scalping or swing trading. On lower time frames, NM, IM, it provides signals for short-term moves, while on H4 daily, define long-term trend. Direction. The risk remains constant, the market breathes in waves, and channel mass. Those waves visually. Being technical analysis, the psychological element remains key. Gold often comes triggered with sharp, sudden spikes. The indicator structure B prevents emotional reaction. By waiting for confirmation instead of impulse entries, traders maintain composure and clarity essential for long-term success. When traders master the interpretation of this indicator, it can not only signal accuracy but also time awareness. The rhythm of channel command with the measured time of zigzag swings teaches patience. It reminds the trader that process needs time to develop trigger. Acting to early disrupts synchronization with the market natural flow. To summarize the golden principles of the method, trade in the rush of the channel slope. Confirm entries, zigzag swings, and signal dollars. Use the midline to determine strength. Along multiple time frames for precision. Apply disciplined risk management always. Essence, the price channel is not just an indicator, it's a framework for market structure. Discipline, and timing. Whether the trend is bullish or bearish, the logic should remain the same. Wait for confluence, confirm with structure, and execute with patience. Bullish behavior is cyclical and mythic, just like any financial instrument. The price channel visualizes that rhythm, turning uncertainty into a readable map. In mastering this approach, you don't just follow price, you understand it, and that's what separates observation from mastery. Welcome everyone to the and extended analysis on gold versus US dollar. Exhaust. In today's session, we're going to explore how to trade behavior of gold into the price channel indicator, combined with zigzag confirmation, swing high and swing low structures, and the recurrent buy and sell signals that help identify momentum reversals and continuation pattern across all time frames. The price channel indicator of gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both a guide and a confirmation tool. Its ability to represent certain resistant and flowing matter allows traders to align themselves with the dominant direction of the market while managing the natural fluctuations of volatility. When the channel slopes upward, we categorize the trend as bullish. This action in this environment tends to reset the lower boundary of channel dynamic support. Every touch and rejection near this zone represents a potential opportunity for killer when zigzag indicator processing low near that same boundary. The moment a green signal appears, the conduits between the upper sloping channel, the swing low structure, and the signal confirmation reinforces a strong long bias. In bearish conditions, the leg reverses. The upper channel line acts as dynamic resistance, and ejection near, especially when accompanied by a sell signal and zigzag wing high becomes point of potential entry for short positions. The beauty of systems that adapts to volatility keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk damage shifts. This creates large impulsive moves that can appear chaotic to the untrained eye. However, price channel indicator source the chaos and rhythm as record movement. Upper and lower bands effectively translate uncertainty in readable boundaries. Let's examine how this plays out of 15-minute time frame. In this setup, gold often oscillates between the upper and lower zones of channel all times with a session. When the price is trending upward and remains within the top half of the channel, momentum is healthy. When it dips below the point but remains above the lower band, interpreted as a correction within an ongoing bullish trend. Patience during these corrections is key. Traders rush to sell and find themselves caught again the shredded ones next. Zigzag low and run signal appear. Midline of the channel represents the equilibrium of price buy and selling forces are balanced. When gold trades upward, the bullish energy dominates, low it, bearish energy prevails. Watching how price behaves around midline can often reveal the upcoming direction for any signal even appears. For example, a strong bounce from the midline followed by a bullish engulfing candle is confirmation of trend resumption. The zigzag indicator acts as the structural backbone of the strategy. Each plotted swing reflects a meaningful shift in market direction. A series of higher high and higher low signals continuation, lower highs and lower lows indicate reversal. We overlay the zigzag points onto the price channel, we gain context whether the swings are developing inside the boundaries, breaking them, or rejecting them. One of the most consistent high probability scenario occurs when gold prints a zigzag swing low exactly at the lower boundary crossing channel. This is not random, it's a point of intersection between structure, support, and momentum. When a queen eye signal appears here, it's a visual alert marked on AB's staying back in. Similarly, when a swing high force at the top of a descending channel insists prints a red sell signal, that alignment is best exhaustion of upward momentum. Trading gold with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary, rather than chasing dead moves. Professional traders wait for a pullback into channel. This is called re-entry zone. Once price test the upper band and new support and confirm with zigzag low or bullish candle, the next wave visually follows often stronger than the left. Across higher time frames such as H1, H4, and daily, the same logic applies with broader implications. Slope of the price channel becomes the macro guide. When the tail channel slope upward, the intraday pullbacks on 3M or 1H charts become opportunities within a larger trend. This is called multi-time frame alignment and one of the most effective techniques for consistent results. Gold liquidity and volatility mean that multiple wings set up daily. By following a rhythm of this channel, traders can filter out note and focus on quality signals. The zigzag indicator ensures that every swing identified represents a meaningful change, rather than random manual fluctuation. This balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking position, it's essential to see multiple confirmations long. One channel direction matches the trade bias. Two zigzag prints confirming with point in that direction. 3 signal indicator displays matching buy or sell. 4 candle patterns support the entry, engulfing, bar, or rejection. 5 price interact with known struggle level, /resistance or midline. 3 or more of these alarm, probability significantly increases. Risk management is a backbone of all trading. Even for big confirmations, market anomalies occur. A disciplined trader sets a stop loss with the last swing low in trend or above the high. In downtrend, this would not only reverse but also assure him shoulder break unexpected. Remember, consistency is still not a win for trade but packing precision. The analysis also highlight mentioned early. And look piece of and press starts. However, the that is on probably consolidation. Brings up this. Trade frequently decrease and focus to devoid the time worth of tail. Channel in the direction also, the extreme begins. Angle behavior use is crucial. For instance, non-farm payrolls or CPI releases often trigger temporary spikes. The price channel visualizes how far these stocks deviate from equilibrium. A quick outside the boundary followed by returns to the channel indicates fault habit. Excellent opportunity for reversal entries and carrot buys zigzag and signal alignment. On larger scales, gold respects macro-technical source derived from previous swing highs and lows. The zigzag indicate automatically plus these turn points, helping traders visualize history. A rise evolution. And these will also inside of the channel battery, AI magnets. Birds or liquidity pools exist to reversals frequently form. In bullish condition, one can observe creating stair-step patterns within a channel each. Pull back from higher low, each round from higher high. Trader can stay in each. Reach is confirmed by the zigzag and signal combination. Conversely, in bearish channel, Charlie that fails to make above the midline comes opportunity to sell the lower high. This is also adapts beautifully to scalping or swing trading. On lower time frames, 1M, 5M, provide rapid signals or short-term moves, while on H4 or daily, defines long-term trend. Direction. The principle remains constant. Bar hit read and waves, at channel mass. Those waves visually. Beyond technical analysis, the sell-dual element remains key. Gold often test traders with sharp, sun spikes. The indicator structure prevents emotional overreaction. Booming. Or confirmation typical entries, traders maintain composure and clarity symbol. Great long-term success. When traders mess with interpretation of this indicator, they not only signal accuracy but also time awareness. The rhythm of the channel combined with measured time notice actions teaches agents. Reminds the trader that person needs time to develop structure. Acting to early disrupt synchronization with the market's natural flow. To survive golden principles of standard. Breaking the rich of the channel slope. Convert entries with zigzag moves and signal poles. Use the language M path. Align multiple time frames for precision. A lot discipline risk management always. In essence, by channel not just an indicator of framework market structure. Dividend and timing. Wouldn't bullish fish. The lock remains the same. Weak congruent. Confirm moisture. Ignatius. Gold's behavior is cyclical and effect. Just like a financial instrument. The cross channel. Visualize that rhythm. Turning uncertainty into a readable map. By mastering this approach, you just saw why you understand it. And that's for a subdivision or mastering. Well, everyone's in-depth analysis on gold versus US dollar. In this session, we are going to sort and put the behavior gold lens of the price here. Combine with acceleration, swing hot, swing structures, and recurring buy and sell signal identify. Momentum reversals and trend continuation pattern across all time frames. The price channel indicator of gold is a highly dynamic visual framework that evolves as market develops new data. Because capacity on both technical and assets, the indicator serves as the guide to conversion tool. Its ability to represent support and resistance in a flow manner allows traders to align themselves with the dominant direction of the market while matching natural fluctuations of volatility. In the channel slope upward, we categorize the trend as bullish. Price in this environment tends to reset. The lower boundary of the channel is dynamic support. Every channel which can near this zone represents a potential buy opportunity regularly when the zag indicator applies swing low or near the same boundary. The moment green buy signal appears, confluence between the local channel, the single structure, and signal. Confirmation reinforces strong long buys. In bearish conditions, the logic versus the upper channel acts as dynamic resistance, a rejection near. Especially when a red cell signal at exact high comes potential entry for short positions. The beauty of the system is that it adapts to volatility keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk system shifts. This creates large impulse moves that can be payout detraining. However, price channel indicator absorbs the sales and rebounds as structured movement. Deeper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on 15-minute time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times within a second. When the price is trend upward and remain within the top half of the channel, momentum is helping. When it dips below the midpoint remains above the lower band, we interpret it as a corrective within ongoing bullish trend. Patience trades. Correcting is E. Traders who rush to sell often find themselves sought against the trend will sit next. Zap low and green signal here. The midline of the channel represents the equilibrium of price where buying and selling forces are balanced. Gold trades above it. The bullish energy dominates. Below it, bearish energy prevails. Watching highs. Behaves around this midline and often reveal the upcoming break before any signal even appears. For example, as drawbacks from midline followed by a pushing going hand the pre-confirmation of trend resumption. The zigzag indicator acts as a structural backbone of the strategy. Each lot swing reflects a meaningful shift market direction. A series of higher highs and higher signals continuation, while lower highs and lower low indicate reversal. When you play these zigzag points on the price channel, we gain contest whether swings are developing inside the boundaries, breaking them, or rejecting them. One of the most consistent high probability scenarios occurs when gold trends zigzags from low exactly at the lower boundary of a rising channel. This is not random to the intersection between structure, support, and momentum. When a green buy signal appears here, it's a visual alert that smart money may be setting back in. Similarly, when a swing forms at top of this channel as the system prints the rest sell signal, that alignment suggests exhaustion of upward momentum. Trading gold with this method requires understanding how price reacts to the channel edges. During strong impulse rallies, price may temporarily break the upward boundary, rather than chasing moves. Professional traders need for pulled into the channel. This is called the re-entry zone. Unspikes. You test the upper band as new support and convert with big low or lush handle. The next wave usually follows often stronger and last. Across high time frames such as the H1, H4, and daily, the signal should lie but with broader implications. Slope of the price channel becomes a macro guide. When the daily channel slopes upward, even intraday, pull back on the 15M or 1H become buying opportunity within a large uptrend. This is called multi-time frame limit and is one of the most effective techniques for consistent results. Gold's liquidity and volatility mean multiple swings that occur daily. I follow the rhythm of the price channel. Traders skip for boys and focus on quality signals. This is the indicator ensures that every swing identified represents a meaningful change rather than a random candle fluctuation. The balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it is essential to see multiple confirmation layers. One channel direction matches the trade base. 2 zigzag grants confirming swing point in that direction. 3 the signal indicator displays matching buy or sell. 4 the candle pattern reports the entry, engulfing, pivot, or rejection. 5 price contrasts with the most structural level, the support resistance or line. When more be line, probability significantly increases. Risk management is the backbone of all trading. Even perfect confirmations, market anomalies occur. A disciplined trade sets the possible of the last swing low net trend or above last swing high. In a down trend, this approach not only preserves capital but also ensures emotional control during unexpected market spots. Remember, consistency is sold out by winning for trade but by protecting area decision. The channel system also highlights momentum shifts early. When slope begins to flatten and price starts hovering around the midline without movement, it's often prelude to consolidation. During such periods, trade frequency decreases and focus should shift to identifying breakout potential. Once the channel reduces directional slope, the next trend may begins. Understanding most behavior during news events is crucial. For instance, non-farm payrolls or CDI releases often trigger temporary spikes. The price channel visualizes how first spikes deviate from equilibrium. A quick outside the boundary followed by a turn inside the channel indicates a false breakout. Excellent opportunity for result true swing by and signal alignment. On larger scales, gold respects macro-technical zones from previous highs and lows. This exact indicator automatically plots these turn points, helping traders visualize the story. Price evolution. When these double twins on channel boundaries, they act as magnets. Areas where liquidity pools exist and reversals frequently form. In bullish conditions, one can observe creating scarce patterns within the channel each. Pull back for a high low, each round forming a higher high. Traders can kill in at each. Retreats can convert by a zigzag and bicycle combination. Conversely, in a bearish channel, each rally that fails to peak above midnight becomes an opportunity to sell a lower high. This is also beautiful to scalping or swing trading. On lower timeframes, 1M, 5M, it provides rapid signals for short-term moves, while H forward daily defaults long-term trend direction. The principle remains constant, the market feed in waves, and the channel map. The space visually. Beyond technical analysis, the psychological remain key. Gold often tempts traders with sharp, suspects. The indicator structure you prevents low reaction. By wing. For confirmation instead of impulse entry, traders maintain a push and flurry attention. Trade long-term success. What traders add interpretation of the indicator that not only accuracy but also temperance. The rhythm of the hand combined with the measurement of big asks. Teaches this. Runs through the price inside Del Star. Adding. Earned working position with marks below. Use Ross gold principles of this bed. Trade the direction of the channel loop. Confirm entries with zigzag swings and signal colors. Use them and judge momentum strength. Allow multiple time frames for precision. Apply to risk action always. Essence, the price channel is not just an indicator, it's a framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Weaker conquest, confirm with structure, and execute with cadence. Gold's behavior is cyclical and rhythmic, just like any fundamental instrument. The price channel. Visualize that rhythm, turn uncertainty into a readable map. By mastering this approach, you don't just follow price understand it, and that's what separates observation from mystery. Welcome everyone to the EF and Standard Analysis on Gold versus the US dollar, ZOS. In today's session, we are going to explore how to interpret the behavior of gold through the lens of the price channel indicator, combined with exact confirmation to high S low structures, and recurring SS cells to help identify momentum reversal and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework developed by the market developed new data. Because gold tends to univoke technically react as the indicator serves as both a guide and a confirmation tool. Its ability to represent and visit in a flowing manner allows traders to align themselves with the direction of the market while managing the natural fluctuation of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action is environment hits respect. The lower boundary of the channel is dynamic forward. Every height and restriction near the zone presents potential. While if we throw the zigzag indicated flat swing low or near the matter. The moment a green box signal appears, comes between the other slowing channel, between low trigger and the signal. Confirmation reinforces strong long days. In bearish conditions, the logic reverses. The other channel long acts as dynamic resistance and each rejection near. Especially when accompanied by result signal and a zigzag swing high because of potential every 4 short positions. Beauty of the system that adapts to volatility and keep the trader sheet aware of. Market low emotional costs. Gold is particularly sensitive to low fundamentals and illustrative data, central bank position, and this shifts. This rates largely help move the KPI to trend. However, the Russell data sources calcium and Russian, for Northern, effectively translate uncertainty into readable batteries. Let's examine how this plays out on 15-minute time frame. In this setup, gold oscillates between the upper and lower zones of the channel multiple times within a second. When price is trending other end, remains within the top of channel, momentum is solid. When dips below the middle remains above the lower band, the interpret is a correction with an ongoing bullish trend. Patience during these. Correction is key. Traders work sell on bottom sell cut against the trend of the next. Zigzag and green signal appear. The middle of the channel represents the equilibrium of where buy and sell forces are balanced. In gold trade mode, bullish energy dominate, below it, bearish energy prevails. Watching the price. Behaves rather line of the real upcoming direction before any signal even appears. For example, a strong bounce from the line followed by pulling golden candle is a big information of trend reduction. The zigzag indicator as a structural backbone of this strategy. Each swing reflects a meaningful shift in market direction. A source of fair highs and higher lows signals continuation, while lower highs and lower low indicate reversal. When the overlay these zigzag points onto the price channel, we can contest whether the swing are dealing inside the boundaries, breaking them, or rejecting them. One of these high probability scenarios occurs when gold branches zigzag between low exit the lower boundary of rising channel. This is not random, it's of intent between structure, forward, and momentum. When the room box appears here, such a less start on mixing back in. Steadily, was with force at top of the some rest signal. That alignment suggests exhaustion of upward momentum. Trading could effectively with smooth it requires understanding how high racks of channel edges. During strong impulse values, price may temporarily go deeper boundary. Rather than chasing moves, professional traders may hold back into the channel. This is called read and read. One price. Root to see for bend is new from with a zigzag lower bullish hand. The next wave follows often stronger than last. Across higher time frames set SH1, H4, and daily, the same logic applies but with broader implications. The slope of the price channel becomes that robot. When the daily channel slopes upward, even intraday, pull back on the PM or niche charts become buying activity with a larger uptrend. This is called multi-time alignment and is one of the most effective techniques for consistent results. Gold's liquidity and volatility mean that multiples will set up a curtailing. By following the move, the price channel, trader can filter out noise and focus on quality signals. This is the indicator assures that every swing identified represents a meaningful change, rather than a random hand fluctuation. This balance between flexibility and precision makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it's essential to see multiple confirmations aligning. One channel direction matches the trade bias. Two zigzag branches confirming sync point in that direction. Three signal indicators based matching back or sell label. Four candle patterns support the entry, including in bar or rejection. 5 cross interact with the known structural level, supports that resistance or line. And 3 or more of these line, probability significantly increases. This method is the backbone of all trading. Even with perfect confirmations, market anomalies occur. A split trader sets stop loss below the last low in an uptrend or above the last high. In a downtrend, this approach not only preserves support but also ensures motion control during unexpected market buys. Remember, consistency but not about winning every trade but protecting every decision. The chance system also highlights momentum shifts early. When slow begins to flatten and rush start, hovering around the midline without commitment, it often prelude to consolidation. During such periods, trade frequency should increase and focus should shift toward identifying breakout potential. Also, channel resumes their low, the next trend wave begins. Understanding gold behavior during these events is crucial. For instance, non-farm payrolls or CPI releases often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. Quick wick outside boundary flow return side channel indicates false peak added. Excellent opportunity or vertical entry when confirmed by zigzag and sin alignment. On larger scale, bold respects macro zones derived from previous highs and lows. The zigzag indicator automatically plots these turning points, helping traders visualize the source of price action. When these levels coincide with the channel boundaries, they act as magnets. Areas where liquidity pools exist and results freely from. In bullish conditions, wickbands are bold creating surge patterns within the channel edge. Pullback forming a higher low, each rally forming higher high. Traders in Gale and each tree from both zigzag and signal combination. Conversely, in a bearish channel, each rally the fastest break of the midline because opportunity to that lower high. This is also active like scalping or trading. On lower time frames, 1M, 5M. Provides work signals for short-term moves, while on each foreplay, define long-term trend, direction. The principle remains constant, market beats waves, and the channel maps. Those waves visually. Beyond technical analysis, the psychological element remains bold often tests trader with sharp, sudden slice. The indicators pressure due to emotional overreaction. By winning, for trade instead of impulse entries, traders maintain composure and clarity is angle. Trade long-term success. When traders master the interpretation of this indicator, they gain not only self-trust but also time awareness. Rhythm of the channel combined with better timing of exact swings. T is patience. It means the trade that needs time to develop structure. Act 2. Early synchronization with market natural flow. To analyze the golden principles of the method. Trade in the direction of channel slope. Confirm entry with exact swiss and simple colors. Use the judgment of strength. On multiple time frame for tin. Apply this in risk management always. Instant. The price channel is not just an indicator of framework market structure. Discipline and timing. Whether the predictable ish, dog commit stim. Deeper on loose, current structure, and execute with patience. Goals to be here equal and rhythmic, just like any financial instrument. The price channel. Visualize that rhythm, turning uncertainty into a readable map. By mastering this approach, you can just follow price you understand. And twice source observation from master it. What able to and extend analysis on gold versus US dollar. In today's session, we are going to explore how to invert the behavior of gold through the lens of the price channel indicator. Combined with zigzag formation, top swing structures, and the curve on both the head divide. Members of trend to which pattern of time frames. Personality turn both side dynamic visual reward develop advocate of new data. Coupled into one of both player as the services by an harsh tool. Its ability to represent important systems in a flowing manner allows traders to align themselves with dominance. The reckon of the arc while managing the network fluctuations volatility. The end slows upward, Harrison dislush. Price action is an iron for that. The order of it is I am squared. Version of needs some process when after the early unset here bosses from low air as it better. Moment. Ring by signal appears, confluent between the upward sloping channel, the wing loose structure, and the signal. Confirmation reinforces draw long box. Inversion condition, log reverses. The up channel acts as dynamic resistance, and each reaction here. It eventually wake up by red signal and zigzags with high point of potential entry for short positions. The beauty of the system is that it adapts to volatility and keeps trader visually aware of market flow and emotional base. Both regularly sensitive to fundamentals such as inflation data, central bank policy decisions, and risk damage shift. This creates large opposite move that can appear out of the untrained eye. However, price channel indicators serve this scale and revolve as structured movements. The upper and lower best. Field translate uncertainty into regional boundaries. Let's examine how this plays out on the 15-minute time frame. In this setup, gold also split up and lower of the channel time with attention. And the sustained lower end, ring with not put on to a healthy. When this low moving range of the lower end, inverted as correction with an ongoing bullish trend. Patience during these. Correction is key. Trader who wishes to sell off the fondest is cutting and the trend on the next. Zigzag looking up here. The line up channel represents the equilibrium price where buying and selling forces are balanced. What gold trades out, village energy dominates, low it, burn energy prevails. Watching the pass. Behaves rather midline can often reveal the bum direction if any signal it appears. For example, saw pass from midline bob blowing golden candle is a ratio of trend motion. The zigzag can access structural backbone of the strategy. Each swing is so meaningful. If the market open, a area of higher odds and higher low signals indicated, lower odds. Low lows in vertical. When low letting of the right channel, we gain context better. The switch ability inside the numbers, break them, or reject them. Under those incident high probability scenario occur with gold versus zigzag swing was at the lower battery of a rising tail. This is not road something dragon whisper, sword, and mem. Where possible here, so alert starting maybe back in. Slowly, with swing high form to potential and some set dust. Elements suggest also over them. Trading collectively the mid-rise understand how price reacts to the channel edges. During strong impulse rallies, this may temporarily rip out boundary. Other than chasing dust. Professional trades wait for pullback into the channel. This is called the re-entry zone. Walls price. Retest the up bands new support and confirms with zigzag or bullish candle. The next phase follow on strong to the last. Across higher time frames such as the A1, H4, and delay, the same logic applies with clear indication. The slope of price channel becomes the macro line. With daily channel slow support, even intraday. Pull back on the 15 and more H charts becoming opportunists with large trend. This is solved. Multi-time brain line adds one to effective for consistent results. All lady volatility means success every day. By following the remote, vital, trade hit out of couple cells. This is issues. Every line follower mean chain, the rem lush. This asks to be instance make combination of. Now let's explore the concept of confirmation layers. Before taking position, it is able to do. Multiple confirmation line. One hand dragon matches trade box. Two zigzag frantic thing swing in that direction. These signal indicator display met buy or sell label. For the handle pattern support entry, engulf it, bar, or position. 5 right interact with no structural level, split resistance or blunt. With 3 or more of these alarm, probability significant increases. This manipulated back of altering, even with perfect combinations, market anomaly occur. A distant barrier test also with the last swing low in uptrend or the last swing high. The downtrend. This approach not only preserves capital, it also ensures emotional control during unexpected market sucks. Remember, consistency is built not by winning every trade but by predicting their reason. The channel system also highlights momentum shifts early. When the low begins to flatten and prospers, hovering rambling without commitment, it often a early consolidation. During set periods, it brings these trees, focus dive on potential. But the channels in the look, the next trade begins. Certain bulls here turns into crucial, forms it not from rolls or roses, often true to burst spice. The rush channel realizes halfway this foxy proclium. A quick with the dundee followed by a return side channel indicate false breakout. Excellent opportunity for reversal entries when confirmed by zigzag and single alignment. On large scales, bold zigzag technical loans derived from previous swing highs and lows. The zigzag indicator automatically blocks these training points, helping trader to loss 3. This evolution. When these levels coincide with panel boundaries, they act as magnets. Areas where liquidity pools exist and reversals frequently form. In bullish conditions, walking another bull create a stair step pattern with a channel edge. Pull back from a higher low, each rally from a higher high. Raise and scale and retracement confirmed by zigzag oscillator combination. Conversely, the bearish channel. Each rally that advances to break up the midline becomes opportunity to sell lower high. This also adapts beautifully to scalping or swing trading. On lower time frames, 1M, 5M. It provides rapid and short-term moves, while on H4 delay, define long-term trend. Direction. The principle remains constant, the market being waves, and channel maps. Overview visually. Beyond technical analysis, the psychological element remains. Gold often discourages with sharp, sudden buys. The indicator structure view prevents emotional reaction. Noting. For confirmation instead of pulse entries, trader maintain composure and clarity essential. Traits in longer success. When traders master the interpretation of this indicator, they gain not only signal accuracy but also time awareness. Rim of anal combined with the timing of zigzag swings. Teaches it rots trade that price needs time to develop structure. Acting to early disrupt synchronating with the market's natural flow. To summarize gold principles, this method. Trade the direction of the channel slope. Convert entries with zigzag swing as signal colors. Use the midline to judge momentum strength. Align multiple time frame or precision. Apply discipline risk management always. In essence, the rise is not just an indicator, it's a framework for market structure, discipline, and timing. Whether trends bullish or bearish, the lock remains the same. Faith, confluence, firm with structure, and execute with patience. Bold behavior is a little and rhythmic, just like any financial instrument. The price channel. Visualize the rhythm, turn certainty into a real app. By mastering this approach, you follow rise to understand it. And this is observation to mastery. Welcome everyone to the Infinite Analysis on Gold versus US Dollar. In today's session, we're going to explore how to interpret behavior of both runs of price channel indicator, combined with exact confirmation, swing high, swing low structures, and the recurve buy sell signal to help you divide momentum versus and track continuation patterns across all time frames. The price channel indicator on both highly dynamic visual framework develops as the market develops new data. Because gold tends to be one of the most quickly reactive assets, the indicator serves as both a guide and a confident tool. Its ability represents support and resistance if matter allows traders to line themselves with the dominant direction of while managing the natural fluctuation of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action in this environment tends to respect the lower boundary of the channel as dynamic support. Every touch and rigidity of the system represents a potential. They operate particularly when zigzag indicator will swing low or near the same boundary. The moment that ring by signal abuse, the confluence between our slope channel, swing structure, the signal confirmation reinforces strong long bias. In bearish conditions, the logic versus the upper channel line acts as dynamic resistance and suggestion here. It is especially when accompanied by red signal and zigzag high become a potential entry for short positions. The beauty of the system is that it adapts to volatility and be very aware of market flow without emotional bias. Gold particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentences. This creates large impulsive moves that can create to the untrained eye. However, price channel indicator sort of costs and recognizes it as structured movement. Upper and lower bands effectively translate uncertainty into real boundaries. Let's examine how this plays out in the 15-minute time frame. In the gold often oscillates between the upper and lower zones of channel all the time with a session. When the price is trending upward and remains within the tab channel, momentum is healthy. When it dips below the midpoint but remains above the lower end, we interpret as a correction within ongoing bullish trend. Patience during these corrections is key. Traders rushes often find themselves caught against the trend when the next zigzag green signal peak. The midpoint of channel represents the equilibrium of price where buying and selling forces are balanced. When gold rate above it, bullish energy dominates, below it, bearish energy prevails. Watch how price behavior around the midline often reveal upcoming correction before anything even appears. For example, a strong bounce from midline followed by bullish cuffing candle is confirmation trend resumption. The zigzag indicator acts as the control backbone of this trading. Each line is swing less meaningful. Shift in market direction. A series of higher highs and higher lows signals continuation, while lower highs end. Lower low indicate reversal. When the overlay zigzag pulls onto the price channel, we gain context whether the swing are below inside the boundaries, breaking them, or rejecting them. One of the most consistent type probability scenarios is because gold statistics will low exactly at the lower boundary of a rising channel. This is not random with a 1 second between structure, support, momentum. When queen high signal appears here, its visual look start money to back in. Similarly, when swing high force at the top of the channel and the system press red sell signal, that element suggests such up momentum. Trading gold effectively with this method requires understanding how price reacts to challenges. During strong holder ballast, price may have barreled break above it during, other than chasing sudden moves. Professional traders may roll back into the channel. This is called re-entry zone. Watch price tests the upper band new support and confirms with zigzag bullish and the trade usually follows on stronger than the last. Across higher time frames such as the H1, H4, and daily, the same logic has but broader implications. The slope of the price channel becomes the backward cut. When daily candle slopes upward, evading pullbacks on 15 or 1 HRC combine opportunities in the larger trend. This is called multi-time brand alignment and it's no motive to case for consistent results. Gold liquidity and volatility mean multiple swings set to daily. By following a rhythm of price channel, traders can look around noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents a meaningful change rather than a random candle fluctuation. The balance between flexibility and rigidity is what makes the combination so powerful. Analytic floor concept of operation layers. Before taking a position, it is essential to see multiple confirmations aligning. While channel direction match the trade-offs, two zigzag trends confirming swing point in direction. Through the signal indicator slide of buy or level, or entrance with the entry, engulfing, pin bar, or restriction. Types interact with no structural level, support/resistance or midline. And root or more of line, probability significantly decreases. This management is the backbone of all trading. Even with conclusions, market anomalies occur. A disciplined trader tests to stop below the last swing low in an uptrend or the last swing high. In a downtrend, this approach not only preserves capital but also ensures much control during unexpected market spikes. Remember, consistency is built by weighing every trade by predicting every decision. The channel system also allows momentum shifts early. The slow begins to flatten, and price starts hovering on the midline without commit. It often eludes consolidation. For such periods, trade frequency should increase, and focus should shift toward a breakout angle. One and resumes at the diagonal slope. The next trend wave begins. Understanding gold behavior during new event is crucial. For instance, non-market rolls or CPI releases often trigger temporary highs. The price channel visualizes how far these spikes deviate from equilibrium. A wicket side boundary followed by return side the channel indicates a false workout. Excellent opportunity for reversal entry when confirmed by signal end. On larger scales, gold risks macro typical lows derived from previous swing highs and lows. The zigzag indicator automatically plots these turning points, helping traders visualize the tree of price evolution. When these coincide with the channel boundaries, they act as zagas, areas where liquidity pools and reversals frequently form. In bullish conditions, ungathered gold creating dip patterns to the daily. Pullback forming higher low, rally form high high. Trace and scale netty. Retracement confirmed by the zigzag and by signal combination. Conversely, in the bearish channel, drag fails to work at the midline comes an opportunity to sell the lower high. This is also adaptive to feed step or swing ring. On time frames, 1M, 5M. It provides rapid signals for short-term moves, while on H4 or daily, it finds long-term trend. The principle remains constant, the market breaks in waves, and the channel maps. Those waves usually. Beyond technical analysis, the psychological element remain deep. Both have screwed with sharp, spice. The indicator structure view prevents emotional reaction. By weaving, confidence in the entry, leaders meaning motion and clarity symbol. Treat them all terms success. Trader must the interpretation of this indicator. They gain not only signal accuracy but also time awareness. Room of channel combined with the med time of big swings. Each station, it reminds the trader that price needs time to develop structure. 2. Early trust synchronization with the market natural low. To summarize the golden principles of the method. Trade in the direction of channel slope. Confirm entry with zigzag swings and signal colors. Use the line to determine the string. Alignment of time range precision. A block cylinder commitment always. In essence, the price channel is not just an indicator of framework for market structure. Discipline and time. The trend is bullish or bearish. The logic is the same. Favor confluence, confirm with structure, and execute with patience. Gold's physical and rhythmic. It's like any fine tool insert. The price chart. Visualize that road, taking a certain or map. By mastering this approach, you don't just follow price, understand it. And that's what's ever is observation mastering. Welcome everyone to this in-depth and analysis of gold versus the US dollar. In today's session, we are going to explore to interpret the behavior of gold through the lens of a price channel indicator, combined with the second data, swing high and swing low features, and the recurring high and sell signals that help identify momentum reversal and trend continuation has across all time frames. The price channel indicator on gold is highly dynamic framework that is a market of data. Because gold has to be one of the most technically reactive assets, the indicator serves as both guide and a confident tool. Its ability to prevent resistance in a flow manner allows traders who want to solve with the dominant direction market while managing the natural fluctuations of volatility. In the channel slope upward, categorize the trend bullish. Price action in this environment tends to respect the lower boundary of the channel as dynamic support. Every such direction near the cylinder presents a potential opportunity, particularly when the sky indicate blocks or near the boundary. Moment, green by signal appears, the confluence between the upward sloping channel, the swing low structure, and the signal confirmation reinforces strong bias. In air conditions, light reverses. The upper line acts as dynamic resistance, and it shifts near, especially when accompanied by a vessel signal and a zigzag swing high become a point of potential every 4 short positions. The beauty of the system is that it acts volatility and keeps the trader usually aware of market flow without owing loss. Gold's table is sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates a large impulsive that can be chaotic to the untrained eye. However, the price channel indicator absorbs this chaos and refinds as structure movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine this plays out on the VMA time frame. In this setup, gold often oscillates between the upper and lower zone of channel multiple times within session. When the price is trending upward and remains within the top half shell, momentum having what dips below midpoint that remains of lower band. We inherit it as a grouping and ongoing strand. Each string these. Picture the key. Trader who rushes out and finds the spot and reference to the next. Zigzag low and green signal here. Mon of the channel represents the equilibrium or either slight to balance. When gold trades above it, full energy dominates. Below it, red energy prevails. Talking about us. The 8 rounds long and real about before end signal even appears. For example, this reference from long followed by a bullish golden candle is a confirmation of transition. The zigzag indicator is the structural pattern of the strategy. Each plot swing reflects meaningful shift in market direction. A series of high highs and high low signals continuation will lower high and lower lows indicate reversal. When the overlay zigzag wants onto the price channel, we can context where the swings are developing inside the batteries, making them or changing. One of the most consistent probability scenarios occurs when gold price is low at the lower boundary cross channel. This is not random at a point of intersection between pressure, support, and momentum. When green boss signal appears here, it's a visual alert that smart money may be stepping back in. Similarly, when it's with high force at the top of the channel and the system spreads out still, the lines best off upward momentum. Trading gold effectively with method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily make above the upper boundary, rather cheating some moves. Professional traders wait for a pullback into the channel. This is called the re-entry zone. Once price tests the upper band as new support in terms with a zigzag low bullish handle, net wave usually always often stronger and less. Across higher time frames, say the H1, H4, and like the same logic applied but broader application. Low of the IAB macro bot, way at channel low, pullback on PM or one opportunity with a large spread. Result, multi-rate line and fundamental that equals results. Gold liquidity and liquidity that multiple links set up to curtail. By following them up, the price channel, traders hit for trap and notice quality signals. Zigzag indicator orders. The air swing end of it represents meaningful change, rather than random candle fluctuation. The L swing flexibility and precision makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it's essential to see. Ultimate confidence in the line. Watch channel direction matches trade bias. Do zigzag for firm swing point infection. Free the signal indicator to stay a matching line or sellable. For the candle pair supports the entry, involving, bar, or resistance. High price interacts with no structural level, support slash resistant or line. When through or more design, probably significantly increases. Risk management is a battle of all trade. Even with perfect operations, market anomalies occur. A dip trader sets to last below the last swing and outtrend or the last swing high. A downtrend. This approach only there's habit also ensures emotional control during excited market spikes. Remember, system built by winning every trade by protecting every decision. The chance to also highlight moment shifts early. When this look is slowing and price starts hovering on long mid, it often prelude acceleration. During that periods, trading frequency should decrease and focus toward defining breakout potential. So, channel resistance direction also, then spread away begins. Unstable behavior in news as is real. Force and far rolls or CDI loop. Often tricks very like. Visualize for these box deviate from equilibrium. The quick outside the boundary followed by return inside the channel indicates a fall out. Excellent opportunity for reversal when confirmed zigzag and signal end. On larger scales, gold rips smack technicals those derived from previous swing highs and lows. This is a automatically lost snake base, helping traders visualize the story of right evolution. Ways of coincide with the channel boundaries, back and magnets. Cursor equals equals and written for both editions, can both faces that are essential. All or higher, each or higher. Traders get each. Remember from my guy and signal line. Inversely, never have. Each rally for like the opportunity to sell a lower high. This is also aptitude to converse with trading. On lower time frames, 1M, 5M. Provide rational for short moves, while on H4 delta, finds long-term trend. Direction. The principal range constant, the market breathing waves, and L maps. Low wave visually. Continental axis, the cycle level and mean. Gold on traders with. Sharp, sudden spikes. In here structured to prevent emotional overreaction. I wing. For domination instead of impulse triggers, traders maintain clear clarity symbol. Truths no longer exist. What traders after interpretation of this indicator, they gain not only signal accuracy but also time awareness. The panel have been measured to make big access. To his patience. Ross the trader that proceeds top to develop stronger. Active 2. Early disrupt sync position with marked natural flow. To summarize the golden principle of this method. Trade in direction of the tail so. Confirm entries with S colors. Use the midline gentle member strength. Along multiple timeframes for revision. Please let this mention always. In essence, price channel is not just an indicator of the framework or market structure, discipline, and time. Whether the trade is bullish or bearish, logic remains the same. With congruence, confirm structure, and execute with patience. Gold behavior is still just any fundamental strength. The price channel. Visualize that room, turning us from the readable map. By masters. For example, strong mouse from midline followed by a bullish and quick handle to reconfirmation of trend reduction. This indicator acts as the structural backbone of the strategy. Each pulse reflects a meaningful shift in market direction. A series of higher high and higher low signals continuation, while lower high and lower lows indicate reversal. When overlay the zigzag up to the price channel, we gain context better. The swings developing inside boundaries, bring them, or rejecting them. One of those instant high probability scenarios occurs when gold price zigzag swing low exactly at the or bundle of rising channel. This is not random, it's a point of intersection between trigger, support, and momentum. When the green box signal appears here, a visual look at smart money may be tipping back in. Similarly, when swing high force at the top of the descending channel, the system red L signal. The L suggests such of upward momentum. Trade collective loop, this method requires understanding how price acts to the channel is. During strong impulse value, price may temporarily break above the upper boundary, rather than needing much moves. Professional traders wait for pullback into the channel. This is called red zone. 1 plus. Roots the other end whose board inverse to the lower channel. The next way usually flows often stronger and left. Because higher timeframes such as the 1, 4, and 8, the same object with broader implications. The slope of price becomes macro high. When the daily channel slow outward, even pull back on the V or H starts become buying option with a larger trend. This is called multi-time element and one of the most effective consistent results. Goals, liquidity, and volatility mean that multiple swings set up dealing. If following the room mode, the price channel, traders can filter out noise and focus on quality signals. The zigzag indicator issues. The edge swing identify represents meaningful change, either looking the fluctuation. This balance with facility and rigidity is what makes the combination so powerful. Now let explore the concept of originators. Before taking a position, it's LC. Multiple confirmations aligning. One channel brush after the trade bias. 2 zigzag into confirming swing in the direction. 3 the signal indicator slice match buyers in loop. 4 the candle pattern supports the entry, engulfing, bar, or chicken. 5 price direct with its own structural level, support slash resistance midline. 4 more of these line, probably significantly increases. Risk added into the map when all trading. E with perfect confirmation, market anomalies occur. 8 is blood traders set stop auto the last window trend or the last swing high. And it's in trend. This approach not only serves capital but also for emotional control during unexpected market socks. Remember, consistency by winning every trade by protecting every decision. The channel system also highlights momentum shift early. When the slope begins to flatten and price starts hovering around midline without bid, it often includes consolidation. During such periods, trade frequency should increase and focus should toward identifying big cap 10 ball. 1. Channel assumes a directional loop. The next trade wave begins. Understanding gold behavior during use is crucial. 4 in this non-farm purals or CDI releases. Off trigger temporary spikes. The right channel should half of these spikes to from equilibrium. A quick side under followed by a turn inside the channel indicates a false peak down. Excellent opportunity for a every swing hit from buy and signal element. On large scales, gold spec macro signal zones derived from previous swing highs and lows. The zigzag indicator automatically plots these turn points, helping traders visualize the storm. A price limit. When these false going by the channel boundaries, they act as magnets. Area where liquidity will exist in reversals freely form. In bullish conditions, one can observe gold creating certain patterns within the channel league. Pull back form a high low, E really forming higher high. Trader can get in each. Retrace from both the zigzag and Boston come down. Conversely, in bearish channel, E ray that fell speak above midline beyond the opportunity to sell the lower high. This system also adapts to kill swing trading. On lower time price, 1M, 5M, provide rapid signals for short-term moves, while on E4 or A, it defines long-term trend. Direction. The principle remains constant, the arc breeds in base, and the channel apps. Boost wave visual. The technical analysis, the psychological element remains key. Gold often have trades with sharp, subspice. The indicator structure you prevent initial overreaction. By wing. For confirmation instead of impulse injuries, trades maintain composure and clarity essential. Trace long success. And traders battery interpretation of the indicator, that gain not only similarity but also time witness. The channel combined with the measured timing of zigzag wings. E is patience. It reminds the trader that price needs time to develop trigger. Hacking 2. Early disrupt synchronization from market natural flow. 2 sell risk gold principle method. Treat the direction of the channel's loop. Convert entry with exact swings and signal colors. Use a long channel moment strength. Long multiple timeframes for precision. Apply discipline risk management always. In essence, price channels suggest indicator the framework for market structure. Discipline and timing. Whether the trend is bullish or bearish, the logic remains the same. Wait for conlumes, confirm its structure, leave it peers. For example, a strong bounce from midline followed by a bullish golden candle of rate in a trend down. The zigzag indicator acts as structural backbone of strategy. Each plotted were less meaningful. If market rigid, a series of higher highs and higher low signals can use, while lower highs end. Lower look gate reversal. When lower ladies zigzag once onto price channel, we gain context together. Swings developing inside boundaries, pick them, or rejecting them. One of the most stability scenarios occur when gold print zigzags from low exactly to over a rising channel. This is not random to one gain second to secure, and momentum. When the green signal appears here, a visual look smart may be steady back in. Similarly, when the swing high forms at the top of a distinct channel as spreads or wrestle cell. The alignment suggests exhaustion onward momentum. Trading will effectively with this method rather than how price reacts to challenges. During strong impossibilities, price A ever applicable upper boundary. Rather than chasing moves. Professional traders with pull back into the channel. This is called the entry zone. One place. Test and news spread and inward with side lower channel. The usually also last. Cross higher frame position for day. They log with lane. Slow price and scenario guy. Militia support. Even Vex live or watch competing opportunities in larger upper end. This is called multi-frame alignment and on both effect techniques result. Goals liquidity and volatility and multiple swing occur daily. By following remote. The cross channel trades single rounds and both simple signals. The zigzag indicator endorse. The every swing identifier is a meaningful change rather than red candle fiction. This will be ability as is not made no off. Unless or the unreachless. If taking us it's to see. To completion. One that can is very lost. 2 zigzag rent swing in the direction. 3 selling indicators stay mesh or soluble. For the candle pattern or entry, engulfing, bar, or rejection. 5 price directs no struggle rule, supports last restore midline. When through or the line, probably significant increases. Risk management is bone all trading. Even with perfect combinations, market anomalies occur. A is greater stop also less swing low enough and more less swing high. The down red. This burden only reserves capital all endure emotional control being unexpected. Market spice. Remember, since each will now every trade by upticking every sin. The channel system also relates momentum shifts early. And so begins to line, and by starts. Hovering around midline without commitment, it's often prelude to consolidation. During such periods, trade frequency agrees, and books shift forward to define big gap potential. Still, channel reserves look, this trend may begins. Understanding gold behavior during news events is crucial. For instance, non-farm payroll or CPA releases. Off trigger temporary books. Price shall visualizes halfway the spikes T8 from equilibrium. A big outside boundary followed by a return inside the channel indicates false breakout in. Excellent opportunity or reversal entries for bosses and alignment. On large scales, good sex protagonals since there were previous swing highs and lows. The zag indicate on plot the turn bias. Alligators visualize the story. Price evolution. When these less go side channel boundaries, get as minutes. Areas where liquidity rules exist and reversal frequently form. In blood conditions, one can observe gold reading scarce the pattern within the channel. Pull back from a higher low, each form a higher high. Traders can get an E. Retrace confirmed by big zag and diagonal combination. Conversely, in Birchall, each eye that fails to break above midline gives an opportunity to the lower high. This is also an opportunity to get more from trading. On lower time frames, 1M, 5M, it provides rapid signals for short-term moves, while on H4 daily, it defines long-term trend. Direction. The principle remains haunted, the market breathing base, and channel apps. OA visual, the optical analysis, subcontrol element remains C. Gold opts traders with. Sin place. The indicator structure view prevents emotional overreaction. Moving. For confirmation into impulse entries, trace named closure and is essential. Trace and launch success. When traders pass the implication of this indicator, they gain not only accuracy but also time awareness. Rhythm of channel combined with measured timing of zag swings. Teaches patience. It reminds the trader that price needs time to develop structure. Adding to early disrupt synchronization with the market's natural flow. Sora the gold solo set. Create the direction of channels. Confirmations with zigzag swings and signals. Use the line don't disrupt. Align multiple tough frames for within. Positive risk management always. Hence, the right channel is not just an indicator for market structure. Discipline, timing, Whether the trend is bearish, logic remains the same. With confluence, confirm with and execute patience. Gold behavior is cyclical and like and financial instrument. The right channel. Visualize the chain uncertainty to read them. By acting this approach, you get flow understand it. And that's what's the observation from mastery. One of this in-depth and analysis on gold is stellar. Thought. In today's session, we are going to explore how to interpret the behavior of gold chain market direction. A theory of higher highs and higher lows continuation, lower highs and or low indicate reversal. Overly these samples to price channel, game contester. Swing are inside boundaries, bring them or shifting them. One of the most hidden possibilities areas occurs when gold and statistics swing low sleep. Or about rising channel. This is not random point of insight between structure, support, and momentum. The green signal appears here. Signal alert bar may be stepping back in. Similar, and with high warms the top of the channel in the system breaks all signal. That aligns just still above momentum. Trading bold effectively with the standard bar indicating price breaks the channel just during. Strong impulse arouse, price be temporarily break rather than she's in the move. Professional trade we work back to channel. This all the entry zone. Plus, it's the other confirms the egg little, egg webly, full of materials, about 5 domains at each one blade, the same like plus but with 1 indications. Super price channel becomes macro bot. What they'll chance low subboard, eating trade. Pullbacks of team will chart beyond up to display a large trade. This all, multi-for line and one of the most technique for consistent goals. Gold liquidity and volatility mean that multiple ways at the third day. Following their low, price channel, trader careful grab goals and focus on policy goals. The zigzag here assures. That every different resist meaningful change, rare and fluctuation. This balance between flexible and precision based combination is powerful. Label comes to coffee inward. 14 of simple busy, all conventional and no shimmer to their eyes. 2 extended terms from depression. Result is zagging slow. For kill patterns or the entry, engulfing, bar, or restriction. 5 in when a structural level, support life systems or midline. And real more and probably significant decreases. This imagines that the bubble bring. Vivid earth regions, art analysis occur. Ace can trace its solid will swing on or last high. In thumbred, so downward battle boss just focus shoulder us. Art is boss. Better, instances build up away every by protecting resistance. The channel system also align and sterling. When the slope begins to flatten and press starts. Hovering on the midline with the mid, soft area consolidation. During that period, trade frequency decrease and both shift to on great potential. Under. And resume the diagonal slope, the trend wave begins. Understanding gold behavior to move at crucial. For instance, not from payrolls, scout releases. Official error spice. The rise analysis is how RD speak equilibrium. Quit outside the battery followed by inside channel indicates the alt button. Excellent opportunity for early entry confirmed by the second equal limit. On larger scales, gold and stress matter technical observe between swing highs and lows. This is how indicator automatic velocity turning points, having trader visualize this a prior evolution. And these level coincide with the channel boundaries. They act as magnets. Traders are quickly system versus sequentially from low hidden. One canter gold gains here patterns to the channel lead. Pull back forming high low, each down from a high high. Trader cancel at each. Retracement and bird zigzag and bicycle combination. Conversely, the bearish channel. Each rally that fell to break above the mid comes in up to the lower high. Sim also tip usually usually bears switching. A low timeframes, will FM. It red equals sugar moves, while H4A, it falls trend. Direction. The pinball mean comes it, marked routes and waves, and a channel map. Those waves visually. Beyond technical millis, cycle Joel and Remacy. Gold often separated with sharp, sunspots. The is super duper and original overreaction. By waiting. For dollar and intent entries, trade remitting booter and clarity sale. Great longer success. When traders enter interpretation of indicator, they gain not legal accuracy but also time warns. Rid of the channel mod with the mere timing of big segments. He is pages. Runs the trade that price needs time to develop structure. Active to. Early cross same precision with arc and natural flow. To summarize the old principles of method. Train the direction of channel slope. Confirm entry with zigzag wings signal color. Use the judgment craft. Align multiple time frames for precision. Apply the risk management always. Hence, the price channel is not an indicator as a frame for market structure. Slim, and time. Whether as ultra bearish, logic means the same. Weak work confluence, improve structure, and execute facious. Pulse hair select and rhythmic, yet canine and movement. Price channel. Visualize the rhythm, turn it speed or readable map. By mastering the approach, you don't best follow price to understand it, and then separate observation from matter. Welcome to the extended analysis on gold versus the US dollar. Paused. HA7, we are going to explore how trade behavior will go through the lane of the price channel indicator. The model is at foundation, swing high, and zone structures, and recurring lines also have identify. Momentum reversals and trend continuation patterns across all time frames. Price channel data will go individual thing that evolves as market development data. Gold tends to be one of the most statically rate assets. The indicator serves as both a guide and a company. It simply represents support and in a flowing matter less trade to align themselves with the dominant. Russian of market managing the control fluctuation of the ball slip. When the halo support, we have lost trend at bullish. Precision and intense respect. Lower boundary panel as dynamic board. And rejection even still represents potential. Opportunity particularly was zigzag indicator lost single area at boundary. The holding. Queen box abuse, the confluence between the other slope channel, single structure, and the signal. Combining towards long bias. In bird conditions, the logic versus. The upper channel acts as number resistance and rejection, especially when accompanied by mid cell and a zigzag high because of potential entry for sure business. The beauty of this space that it has volatility to get visually aware of. Market flow without one bias. Holds particularly tended to globe fundamental as data, simple bank pulse distance, and risk time shifts. This rates are impulse booth and periodic data. However, the price channel indicators are discussed every loss at movement. Use the average point at direction. Through the indicators is actually level. 4 candle patterns for standard, hit bar, or chicken. Operate in fact with known structural level. Source sizes from 1. With fear or balloon, probability significantly increases. Risk adjust backbone of kidding. With quick correlations, market anomalies occur. These simple traces to puzzle of that low and uptrend or last high. It's trend. The reverse not over heaven but also through social control for next. Target stocks. Remember, instances will not bumming every true but every decision. The chance of multi high momentum shifts early. When the slope begins to flatten and starts. Moving around midline without commitment is often a prelude to consolidation. During such periods, trend frequency should decrease and both should differ to identify breakout potential. Until the channel reduces or slow, next trend wave begins. Understanding gold's behavior to new and crucial. For instance, non-farm payrolls or CPI releases often trigger temporary spikes. The price channel visualize how far these spikes deviate from equilibrium. A quick cast at the battery followed by a third side channel indicate fault down. Excellent opportunity for reverse entries when invert by zigzag and signal linked. On larger scales, gold is matter techniques and drug from previous highs to lows. The zigzag indicator automatically body turning point, helping traders visualize the sort of price evolution. These little coins with the channel batters act as magnets. Area where related pools system reversals frequently form. Bullish conditions, will catch both creating serious pattern with channel each. Pull back from higher low, each rally form a higher high. Traders can scale in at each. The trade and invert by the zigzag and bicycle combination. Conversely, in a bearish channel, each rally that fell peak of the line becomes an opportunity to sell lower high. This system also adapts suitably to standing swing trading. On low time frames, above them. But grab is signal for short-term moves, only or daily, it develops long-term trend. Direction. The principle remains constant, the market be the wave, and the damped. Those waves visualize. The technical analysis, the psychological element remains. Pull off and temp with sharp, sun spice. The indicator structure to prevent emotional overreaction. I For confirmation instead of errors, trader may think exposure and horizontal. Trace in long-term success. What your massive inverted indicator, again not only signal accuracy but also time awareness. Though the help of the measured timing of zigzag swings, teaches patience. Remind the trade at price time to develop structure. Acting new. Early synchronization of market's natural flow. To summarize golden principles of the method. Trade the direction of the channel slope. Confirm entries of zigzag swing and signal colors. Use of blind judge momentum trend. Align multiple top games for precision. Discipline risk management always. Essence. Price channel is not just an indicator, it's a framework for market structure. Discipline and timing. Whether trend is bullish or bearish, the logic remains the same. Wait for confidence, twist and execute with pace. Gold behavior is a risk, just like any financial instrument. The price channel. Visualize the three lab. Mastering this approach. You don't follow us to understand it. And what separates the from the well, everyone does and analysis gold versus the dollar. Us. In today's end, or gold for the behavior of the rule of the price center. Combined with examination and low suckers and recurrent buying signals that help identify. Momentum result trend to inner tolerance. Rush indicator gold is able to net do work at all as venue. Cohen be one of the most technically reactive assets. The indicator specific confirmation. Its ability to represent important resistance in a manner less trivial with dominant. Direction of market by matching natural fluctuations volatility. When the channel goes upward, bigger translate. Price actions in indirect. Liberal channel time upward. Every touch and rejection is so present tenable. By opportunity particular when zigzag indicate clauses will load or need the same battery. The moment A. Queen oscillator appears, the congruence between the words situational, the single low structure, and the signal. Confirmation reinforces the front long bias. Inversion conditions, the logic reverses. The optional lane access diameter resistance, niche rejected is especially when by res L signal and zigzag swing because of potential entry for positions. The beauty of the system is that it has to obtain to the trader visually of market flow without emotional bias. Holds particularly sensitive to low fundamentals such as plain data, central bank policy decisions, and risk damage shifts. This rate also move that can appear chaotic without trained eye. However, price and indicator absorb the scale and rebounds as staggered movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this slice out of 10-minute time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times within session. When the price is trending upward and remains with the top half of the channel, momentum is healthy. When dips below the midpoint but remains above the lower band, we interpret it as correction within an ongoing bull trend. Patience during these corrections is key. Traders who rush to sell and find themselves caught against the trends the next zigzag and green signal here. The line of the channel represents the equilibrium of price where buying and selling forces are balanced. When gold trades above, the bullish energy dominates. Below it, bearish energy prevails. Why price? Behavior runs midline can often reveal the up direction before any signal appears. For example, a strong bound from the midline followed by a bullish engulfing candle is pre-confirmation of trend resumption. Zigzag indicator acts as a structural backbone of the strategy. Each thought is more fixed and meaningful. Shift market direction. A series of higher and higher low signals continuation, while lower highs and lower lows indicate reversal. When we overlay these zigzag on the price channel, we gain context whether the swings are developing inside the boundaries, breaking them, or checking them. One of the most insistent high probability scenarios occurs when gold and zigzag going low exactly at the buy or sell label. For the candle pattern supports the entry, engulfing, pin bar, or rejection. 5 price tracks with own structural level, support/resistance or midline. When 3 or more of these align, probability significantly increases. Risk management is the backbone of all trading. Even with perfect confirmations, market anomalies occur. A disciplined trader sets a stop loss below the last swing low in an uptrend or above the last swing high in a downtrend. This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built not by winning every trade but by protecting every decision. The channel system also highlights momentum shifts early. When the slope begins to flatten, and price starts hovering around the midline without commitment, it's often a prelude to consolidation. During such periods, trade frequency should decrease, and focus should shift toward identifying breakout potential. Once the channel resumes a directional slope, the next trend wave begins. Understanding gold's behavior during news events is crucial. For instance, non-farm payrolls, or CPI releases, often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. A quick wick outside the boundary followed by a return inside the channel indicates a false breakout and excellent opportunity within the channel. Each pullback forming a higher low, each rally forming a higher high. Traders can scale in at each